He was saying that is definitely on the table. I had the chance to speak with a New York State senator who said the same thing. They haven't made any decisions yet, but we've already started to see other municipalities make those decisions. There were reports in Pennsylvania that they were laying off over 1,000 employees. And in Cincinnati, for example, they announced that they were furloughing employees temporarily. So you're starting to see these pockets around the country of these municipalities that say, if I can't raise money by issuing debt, I have to make cuts somewhere. And one place to make that is going to be, unfortunately, layoffs. So I think as we get deeper into this crisis, if the health response is not good enough to contain it, you should expect to see more layoffs across the country.
Brian, the debt is it's going up to solve the situation. Federal standpoint, state standpoint, municipalities, aren't their costs of funding poised to skyrocket?
Yeah, that's exactly it. And the problem, though, is that actually interest rates are at record lows, right? So you have a lot of these municipalities that are saying, well, actually, ahead of the real full brunt of the coronavirus, the Fed cut to zero. And
some crazy pullback on USD CAD.
To actually get our funding costs
but
lower because we could
luckily me,
problem,
I was in the trade long enough, or early enough, I should say, to survive the pullback.
At the upper range now, which is about
some people got in the trade a little late, so those people may have lost some money.
You can issue a bond at let's say 25 basis points, but if no one's going to be out there buying it, there's no point to issue it in the first place. So that was the case for the Jersey City mayor. He said, we explored the option to try to refinance to actually lower our costs here, but because there's no appetite, it's completely pointless. So in the end game, funding is still more expensive than it was before the Fed cut interest rates.
All right, Brian Chung, good to see you. Alexis, I know you're keeping an eye on gas prices. I've been trolling around Instagram the past couple of days. Gas prices have dipped well under $1 in some parts of the country.
Yeah, I mean, I'm usually in Manhattan. I'm now out. I'm in Pennsylvania now, and I haven't even seen a gas station in days.
Oh, I forgot to set my chat up.
But I am reading that gas prices are low across the country now at a 4-year low, and in some places, I mean, the average is around $2 a gallon. We're expecting it to go to about $1.50 in the coming days, and there are even parts of the country right now where gas prices are under $1 a gallon.
Yeah, I can do that, man. That's what That's what I do.
Great news for consumers who are strapped. Of course, the irony is,
how you been, bro?
Really go out and about and use our cars, but a lot of the analysts that you and I have been talking to on the show say that when
I'm setting up my system right now. I just started my stream.
To remain low, oil to remain
so normally, what I like to do is on one of my monitors, I have the video playing, and then on my other computer, I have my chat system up so I can see it. How you been, though, bro? Haven't heard from you in a while, man. Damn. You ain't came in my stream and talked trash in a minute.
Car push has been on the past couple of years because of high gas prices. Last thing they need is dollar gas or even 99-cent gas. That much is for sure. But do stick around. We'll have much more on Yahoo Finance Live in just a second.
I'm just setting up my chat and all that on my other computer so I can see it while I'm. There we go. You trying to learn how to do this, Ron? Trying to see what your boy be doing? Good morning, everybody. Let me make sure my mic's turned on. Yep, everything's good. All right. All right. Let's see. Am I still in this trade? I'm not in this trade no more. Let me reload this.
Welcome back to Yahoo Finance Live. You're seeing markets trying to stage somewhat of a rally. Always good to see after the march that we have had in these crazy markets.
I'm waiting on this one to pull back. So basically what I'm doing is I'm doing two things. For one, I'm investing into stocks.
Very interesting business model.
And then I'm also trading.
You're streaming Broadway shows, which is very important right now. With Broadway shut down,
I'm trading Forex. I do trade stocks sometimes, but I like to invest into that. But the trading part I like to do
we're seeing a lot
is
of
for
activity
Forex.
Around in any of the Broadway websites. So whether they're selling tickets or
I was in a couple trades earlier this morning, but I've already cashed out a couple of them.
What's going on? There's so much uncertainty right now in New York City.
But I'm in a couple more right now. I just got into. It's looking really good. This one right here, USD CAD, just had a real big pullback. See, no, I think if I remember correctly, around 10 o'clock, well, which is now maybe, they're having some big news event going on. They're talking about something about, I don't remember exactly, but I know Trump was supposed to have some kind of speech about something about the economy. I don't remember what it was, but I do know that could have been the reason why this pulled back. Because I was up here and then it just pulled back down here. But I got a really good entry into this trade. You see these? Let me zoom in a little bit. Actually, you know what? I'll zoom in about right here. Again, close to time frame. All right, so this dot right here is my entry point where I got into the trade. So basically, what happens is every time. So let's say you gave me $10, and I bet, let's say, so this number at the end right here, the 7. Let's say every time it goes up, you get, let's say, I'll go with like 10 cents. It goes up 10 cents. Every time it goes down, it goes down 10 cents. And so like right here, and then this red block is like within that $10 you gave me. I don't want to lose no more than, let's say, $3, right? So if it hit this red line right here at the end of this line, then I lose $3. And if it hits the top of this line, I'll gain, let's say, $20 or so. So as you can see, when I entered the trade here, obviously I started off in the negative because I knew it was going to go up based off the higher time frame. And then as I patiently waited, it slowly started to go up to about here. Obviously I'm using, let's say, this 0.03 is 30 cents per. It's called PIP, which is that number I was referring to earlier. The only reason why I'm using that right now is because the way this stuff is set up right now with the coronavirus and the economy, the market is really volatile. So as you can see, normally candles move up or down about this much per move, and then as you can see, within the past 15 minutes, they made this from here all the way down here and within 15 minutes. That's the volatility thing that people refer to. So let's say you hopped into a trade and you had, like, some people probably hopped in the trade about here and they had their stop loss maybe here and they got stopped out because of that and they lost money. But of course, it's still going in the direction that they want to go. But sometimes that happens, man. I think they're playing with the market to take our money. But luckily I got into the trade early enough to that way that this pullback right here didn't bother me much. So I'm thankful for that. So I'm just being patient. Some people just take their money and run. I mean, I've done that a couple times because I wanted to work on building my account up. So my goal right now is the reason I'm using smaller numbers is because my goal is to win more trades before I start to bet more money to, make more money. Right now, I want to start by winning more trades. I win a couple of them earlier today. I've already took my money out. Like this one, I've already won. It came all the way up here, hit my take profit. So I took all the money and obviously kept going. But, it's not like I knew it was going to keep going. So you got to take it out while you're ahead and then pull back down. But I think it might go back. It might go back up. I didn't get back in this trade, though.
Hey, Bonnie, have you seen?
But it could go back up. Actually, it could go back up. I might have missed it early, really. But it's all good, though. I'm still in 3 trades right now. And then this one right here, I'm taking what they call a sell order on this one. A sell order. So basically, trading is like gambling. So when you take a sell, that means you think the market's going to go down. When you take a buy, you think the market's going to go up. So the green is facing down, which means I think the market's going to go down. And as you can see, like I told you earlier, when I zoom in, I got into this trade right here, and I started off in a negative. That's normal. And then it started to pull down, which was in my favor. It's doing a little pullback. That's not that bad. And then it could come back down. I don't know. We'll see. Hopefully, right?
1%. The Nasdaq actually today is outperforming. That's because
energy. Obviously, the market can't. The market never moves in one direction. You know what I mean? It's got to be some, some down, some up, some down, some up. But as you can see, if you look at the higher time frame,
Amazon also in the green. We had been taking a look at some of the cruise liners today, seeing a bit of a rebound. Carnival suspended its dividend, suspended its buyback program, saying that it's going to get hit by more lawsuits because of that Grand Princess cruise ship that had been quarantined outside of California.
See, I was in Carnival, and I didn't even know they were. I mean, I didn't think about it, but she just said something to me that they're going to get hit by more lawsuits and they suspend their dividends. I was in this, and it went up, and I took my money out because I don't know. I wasn't paying attention, but I thought they were going to get money from the stimulus package, but they didn't. And so I took my money out, and I got lucky, and it pulled back down.
Just a horrific press release from them on their earnings outlook. But let's leave it there for right now. Again, you're seeing markets in rally mode, but much more ahead on Yahoo Finance Live. Stay tuned.
But suspending dividends, that's big. Not, suspending dividends, that's big, at least for me. And I know a lot of people think like I think anyway. Like, I'm only in the Carnival for the dividends. And if you're going to tell me we ain't going to get no dividends, then, I ain't going to mess with y'all. I'm going to wait till this thing come down some more. I'm going to let them get sued a little bit. Let me see what this looks like. Let me pull up the daily chart.
What's up, Tim Sykes, Millionaire Mentor?
So I'm going to wait till this pull down to about $10, $9.
To get started
and then I'm going to hop in.
That's ridiculous. You don't need that much to really.
This is Boeing. I want to get into Boeing, but I got to wait. Oh, that's a bullish candle right there.
Exactly
I mean, it's all good. It's all good.
In the stock market, and several of my students have now made several $1 million. My top student started with $1,500.
Yeah, that's another bullish candle, so it's going to pull back up. I love it. And if you guys want to see in real time how I look to make money, see how the numbers moving in real time.
I teach beginners. I love this, okay? I never had
so
a mentor.
Let me see. What am I betting? 0.03.
Successful,
so every number is like 10 cents. So right now this is 30 cents, 40 cents. Then if I go to 4, that'd be 40 cents. If I go to 5, that'd be 50 cents per movement in the market. So as you can see, it's going up. So it's going to go up by 30 cents. Well, this one will go up by 30 cents. As you can see right here. So right now I'm working on building my account. So, I ain't trying to be greedy right now. Like I said, I'm working on winning trades, not losing trades. Carnival Cruise Line.
In the stock market using my strategies. How can you be next? I'm always looking for more dedicated students. Well, first of all, like I said, click the link just below. Read this free book. Get your education started. It doesn't matter if you know anything. It doesn't matter if you're a man or a woman, or if you're in America or Asia or Europe. You can be anywhere in the world.
Hey, I'm going to hold back on the Carnival. Boeing I still want, but I got to wait for a pullback.
Welcome to Yahoo Finance. We're keeping an eye on markets for you. And right now, the S&P has fallen slightly back into negative territory. The Dow is still positive, up over 30 points. The Nasdaq is up 53 points. The latest on coronavirus for you. Global cases now 803,000, with the U.S. nearly at 165,000 cases, 38,000 of them here in the United States.
Yes,
in the United States,
I don't know.
More than 3,175 people who we have lost. Some of the headlines crossing it this hour. Simon Properties, headquartered in Indianapolis, one of the largest retailers. They own all the landlord, the malls in the country, will furlough 30% of their workforce. Consumer confidence, that number came out at 10 a.m. It fell to 120 in the most recent reading. That's down from the previous reading of 132. Chicago PMI, it has been below 50 since last summer. It's at 47.8. One bizarre thing here, S&P CoreLogic case-shiller home prices nationally, they rose 3.9% on an annual basis. But remember, this is pre-coronavirus crisis information and data. That is sure to be hit once we get those numbers corresponding to March and then eventually into April. Finally, we have got coming up for you this hour, Mark Cuban is going to join us. We've also got Letitia James, the New York State Attorney General. She did an interview.
Oh, man.
We've got
it's acting up again.
But right now, we want to get
it's all good.
It's
all good.
Our Jared Blickery for the latest on what's happening with markets.
Let's
Jared?
Okay, that's what I'm talking about. Keep coming down,
right
baby.
now. We're going to dial up the Wi-Fi.
I'm trying to get paid
We're
right
start
now.
with a heat map here, something a little bit different. It is quarter end.
I'm trying to get paid right now.
Since 2008.
That's what I'm saying, man. Just imagine.
This is what we're seeing today.
See, a lot of these cats out here, y'all don't make $20 an hour. A lot of people don't make $20 an hour.
Outperforming.
Not saying that's a bad thing, but if you get in the Forex, man, you can hop in the trades and make more than that.
Stocks are in right now.
Like, remember, before I started my stream today, I got out. I took some profit out some trades.
Followed by Marriott,
and now I'm back in some more trades.
We have Citrix Systems.
Just got in these trades, man.
Then followed by Tesla, a lot of its gains.
And now I'm in profit. Right now, the news is causing the market to rumble. That's usually what happens. So around certain times around the day, I think around like 10:30, and then I think another one. I think it's like normally like 7:30, like 10, 11, 12, and maybe 1. I think news affects the market because, of course, not just USA news, but you got news in different countries too. Because, like I said, I'm trading Forex, not just stocks, but also stocks are affected by other countries too. For example, China. I mean, everybody knows there's a lot of stuff is made in China, so that kind of stuff's going to affect the market too.
Mix of defensives plus value plus cyclical, kind of strange over the last few days. So does this rally have legs? We'll just have to see. But we're going to send it back to you, Adam.
All right, thank you, Jared. I want to read the latest.
If y'all got any questions, man, just drop some comments down below. Make sure y'all press that like button, though. It wouldn't be fair if y'all ask questions without pressing the like button.
Being at zero, this is the time to do our decades-long awaited infrastructure bill. It should be, all caps, very big and bold, $2 trillion, and be focused solely on jobs and rebuilding this once great infrastructure of our country. Exclamation point, phase 4. Mark Cuban needs no introduction, but just in case you forget, he is a billionaire. He is an entrepreneur. He is the owner of the Mavericks, the NBA team, and he is with us right now on Yahoo Finance. Mr. Cuban, thank you. What do you think about what the president's calling for?
Well, he's right, but the question is, how do we do it and what do we do? I don't think we can just go do it the old school way of just rebuilding roads and bridges. But we need to look to say, can we do a complete reset? What do we need to do going forward? We've seen what happens.
Oh, there it is. It hit my stop loss.
But you can't just.
It's all good, though. I took profit from it.
To be competitive. I think we need to invest in robotics.
Damn, man.
We are not
the news always play with you, bro.
So when we talk about infrastructure,
the news always got something to say. Like, they don't want us to win.
And incorporate robotics and building software.
Let me check that off my list.
And
then it pulls back up. See, they be playing, man.
The critical PPE and other products that we need to have manufactured here. That's part one. Part two, we're moving.
I ain't trying to get back in this trade.
Leave that alone. And we have to be cognizant of keeping emissions low for our future. And so when we talk about rebuilding infrastructure, I think we need
see what I did on. Let me guess. So I have something called stop loss. Remember I was telling you if I lose $3, if I hit this line, what I did was I moved this all the way to where I came in the trade at. So that means if it come and hit this, I'll make a couple bucks. Like instead of losing $3, I'll probably make like $1 or $2 or so. Even though it's a little bit, it's better than losing fully.
Rather than crossing the street, well, they'll be concerned about autonomous vehicles. Put them so they can walk over the top like they do in Vegas. But all these things together really creates infrastructure 4.0, so that we're looking towards the future rather than trying to recreate the past.
Mark, it's Julia LaRoche here, and thank you again for joining us. Basically, this infrastructure 4.0 that you're talking about, it's a modernization of infrastructure, the next generation. My question for you is, what happens if we don't take that route? What happens if we just do the old school infrastructure play?
Then we're going to be back in getting the same results and having the same problems we've always had. Look, it's great to rebuild roads. Nobody wants to drive through potholes. We want to create those jobs. But at some point in the future, we're going to ask ourselves, why didn't we consider the fact that we're going towards autonomous driving? You know, it's just obvious. This isn't something where we're projecting Jetsons-like, you know, events, and we don't really know what's going to happen. We know autonomous vehicles are going to be part of our future. We're already starting to see it. We know that we need to be able to do cross-country loads using self-driving trucks. You see Elon Musk pushing in that direction. So we have to pay attention to reality. We can't, you know, recreate the past. We need to create a foundation for the future.
And Mark, I want to turn to small business.
I might even just, if it hit this, I might even just pull my stop loss up to positive. The way this set up, it might even keep, this might come down until about right here, because this is about right here, because this is where you see the red and the blue fighting around that. So I might just even.
There are issues for every company of every size, but
we'll
small
see.
Business always takes the brunt of it because they live, you know, month to month. I mean, I remember my first company just being excited. I was in business 1 month, 2 months, 3 months. And when you have a cataclysmic event like we're going through right now, it's just very, very difficult to stay in business.
I need to do something here so I can know.
People really need to be cognizant of. One, the fact that the new stimulus bill passed, and for small businesses, it includes a payroll protection program. And that's just now getting rolled out to banks, and all the details are being given by the
I'll
SBA
get to it later.
banks. And what that does, it says for any small business with 500 or fewer employees, you can apply through your bank, not the SBA.gov site, but through your bank. And if you commit to, for under 500 employees, apply through your bank, and you can borrow enough to pay your payroll for up to 3 months for all employees who make $100,000 or less. And plus your utilities, plus your rent, and plus some incremental expenses. And if you commit to retain all your employees.
See, remember I was telling y'all, this is news.
You don't have to pay it back.
Normally when you see craziness like that, that's what they call news.
So if you're an
entrepreneur,
if you're a small business,
like I was telling y'all earlier, candle size, these little blocks are called candles, by the way.
That's number one.
So normally they're around this size. You know, this is the 15-minute candle, so every one of these is 15 minutes. So normally 15-minute candles are around this size, which, you know, is normal. And when something happens, this craziness goes down.
If you sell products like that we can put in our pantries, that we want to
craziness
at home, your business is actually doing well.
See, this one right here did the same thing.
And you're looking to replace it.
Craziness, man.
You know, those types of companies, or if you're a service provider, you know,
stop playing, hit this line, and give me my money.
Work, you do videos, whatever it may be, social media. Look for those type of companies, because there are some companies that are doing well, and you want to try to go to them and see if you can work with them.
So, Mark, it's Julie Hyman here. It's good to talk to you and good to have you here. Thanks. So whether you're talking about this stimulus bill that astonishingly, perhaps in this environment, got through Congress, it kind of had to, whether you're looking at that or you're looking at the potential for an infrastructure bill, I'm curious what kind of faith you have in federal government right now to sort of fix these problems and address these problems. And
I kind of want to get, let me see.
Not just right now, but going forward and taking.
I might get back in.
So right now, I think everybody's back's against the wall. And I think that's when
I might get back in. Let me see.
So obviously they passed this bill. I do trust them to pass the next bill, even though
I might get back in. Let me see.
But sometimes you don't have a choice. You know, perfection's the enemy of progress. And I think we don't need a perfect bill. We just need something that stimulates the economy and helps keep people working or gets them back to work. So, you know, in terms of moving forward, once these bills are passed, just look at the stimulus bill and the $1,200 checks. The Treasury Department is saying, 3 weeks, that's just not going to work. People are scared. People have lost their jobs. Millions, if not tens of millions of people have already lost their jobs, are applying for unemployment benefits. They need that $1,200 checks to give them some semblance of control over their lives, to know that they can put food on the table for their family. And so, you can already see some cracks in the armor in terms of execution. And I think we as American people have got to push them. I know I've been really active in trying to work with small, medium-sized banks. We mentioned off air that we're working with Edmonds Bank, and you can follow my tweets on MCuban. and they've actually put together a really good program, but just for their depositors, that allow their depositors to get overdraft protection that'll be refunded, that'll be paid back to the bank when the $1,200 checks come through. Hopefully other banks will follow their lead and do the exact same things, because we can't depend on government to execute quickly enough for all this stimulus to have impact.
Mark, actually what you wrote in that tweet was, quote, "This is what every small bank should be doing. Thanks to Citizens Admin." You actually direct messaged with the woman in charge there for offering a program to the depositors that gives them early access to the federal stimulus checks. This sets up the next question, because as we were introducing you, we had the news from Simon Properties, largest landlord malls in the country, furloughing 30% of their staff. What advice do you have for companies? Because there's this push to get everyone back to work, but you have warned companies to, quote, think beyond the short-term revenue gains of bringing employees back to work.
You know, I know the Simons, they're great people, and I know it breaks Herb and David. I know it breaks their heart to do this, that they'd only do it because they have no choice. But you've got to be cognizant of the reality these days that what you do as a company today is how you will be branded for the next decade, if not more. How you treat your employees will be defined, how your company is considered.
See how that I caught it at, let me see. So right here,
a long time.
as you can see right here,
the Simons are a little different.
It's every time it hit this, well, not every time, but majority of the time when it hit this area, it popped back up. You see all those right here, it tapped down there, tapped down there, tapped down there, tapped down there. So I was able to squeeze in, and I'm already in profit. Already in profit. Already in profit. I might put my stop loss a little below here just to be on the safe side. I don't know yet. I know this is news. That's one thing I do know. I know this is news.
You have to communicate.
So we're gonna see, man. We're gonna see.
People who have said, you know what, so many people might.
It's not a bad risk.
And all we got was an email saying, you know, you're being furloughed or laid off or fired. You can't do that. That is the biggest mistake you can make. You can't fire people by email in this period. You've got to communicate. Even if you have 1,000 employees, you have to work through HR and touch each one of them personally. And if you're concerned that you might lose your job and you work for a small and medium-sized company.
So the way I have it set up is I just got in this trade. So it's basically saying I'm gonna give up $8.10 or make $64 out this trade. So we'll see.
It's not unique just to employees, and it's not unique.
That's
just
a good
to
risk that's to take. I'm cool with it.
Communication has to be involved, because it may well be that the best idea comes from an employee who says, you know what about this idea? I think we can handle it, because the people on the front lines, the people who deal with your customers, the people who deal with all the employees in your organization, they probably are going to have a better handle on how everybody feels than the CEO. So communications is key. Transparency is key. You can't BS people. You know, oh, business is going to be fine, and then all of a sudden you're laying people off. No, be brutally honest, and also carry that over to your customers. You know, hey, Mr. or Ms. Customer, here's where we stand. How can we figure this out together? If we do those three things, then we have a chance to really mitigate as much of this as we can. If we don't, if we just, you know, look at the bottom line and say, I have to cut this number of people, or, you know, I don't want to deal with giving people the bad news, then that's where things really start to cascade. And it's not just any individual company. It's not just any individual community. It cascades throughout the country, then throughout the world. Just small business has such an impact on this country. If you're the CEO,
you know what?
I'm gonna set. You're just a line employee.
I'm gonna leave that there for now.
Communicate, share your ideas, because this is where we need the greatest ideas, and you never know where they're going to come from.
And Mark, I think a lot of folks really, really admire what you did. You know, stepping up.
I hate when that happens, man. I mean, good thing
we're taken care of.
Good thing I took my profit.
As you're mentioning, communication is really important. Leadership's really important. I got to ask you this, because you're starting to see this theme of stakeholder capitalism come to a litmus test, if you will. A lot of the folks who signed that Business Roundtable letter back in the fall are really being put to the test. So how do you think we should think about capitalism going forward? What do you think the future of
so right here is when they had this is like a good support level for it.
Right?
Because I noticed every time it hits here, it bounces back up,
you know, the one
which is
thing
good.
about
And the next support level
that's different than every other
is somewhat maybe around here.
is that
kind of like
we're a
push
country of
past it, but
entrepreneurs. We
possibly
look to
right,
start
yeah.
businesses. When we talk
But
about
if
the
it hits
American
this,
dream,
I'm not
when we
gonna.
talk
I'm just
about
gonna
rags
leave
to
it.
riches stories, it starts
Take it
with an
out. It's
entrepreneur
fine.
coming up
I'll
with an
take the
idea
loss.
and then executing on that idea. We're going to get to the other side of this. I'm positive of that. And we're going to look back in 5 years, and there's going to be 5, 10, 15, 20, however many companies that were started out of all this that turned into just world-changing companies. That's where capitalism really shines. You know, when things are going really, really good, like we saw leading up to, a month ago, then, the gap between the top and the bottom expands. When we go through something like that, the top shrinks. The bottom only has so far to go, unfortunately, but that's the reality. And when people lose their jobs and they go to unemployment, they shrink, but there's only so far to go. The top just gets compressed significantly, and that's what we're seeing now. So income inequality hasn't been solved, but it's been, the delta has been reduced. Now with capitalism, we can start to learn from our mistakes and say, we need to have our employees participate more so that when we build back up and when we grow, then everybody can participate. I'm a big believer that every company, and I've done this with my startups, every company I've started, every employee should have stock and ownership in their company. And when I've sold my companies, every single employee has benefited. And I think when we go forward, capitalism will lift us up from where we are, but we have to learn from our mistakes and really encourage that every entrepreneur, every one of those great companies that's getting started right now, I don't care if you're 16 years old or 60 years old, and you're starting a company. When you start that company and you hire people, give equity to your employees, because anybody working hour to hour and getting paid and not having certainty where how many hours they're going to get, they're never going to climb up the ladder. They're never going to be in a position where they're not living paycheck to paycheck. The only way you solve that is by giving them appreciable assets. Hopefully home ownership plays a role, but also equity in the companies that you start. So I think every entrepreneur going forward has got to show the good side of capitalism and let everybody participate. Let every single employee, no matter what their job is, get equity in the company so that if you just have astronomical success, all those employees benefit as well. When we sold broadcast.com way back when, out of 330 employees, 300 became millionaires, and those 30 weren't only because they had started later in the cycle. Everybody should participate. So capitalism, I truly believe, is going to lift us up and it's going to make us strong again, but we have to be smarter as capitalists and make sure that everybody participates this time around. Whether it's infrastructure or new companies, this is a chance for a reset, and we have to be smart.
Mark, it's Julie again. I appreciate your optimism about capitalism, but doesn't this crisis also show us the value of the safety net and the fact that that needs to be strengthened as well? Look at what's happening with our public health system in this country right now. It is severely strained. We're not necessarily seeing leadership, certainly didn't see leadership going into this on the strength of that system. So what role does that play alongside capitalism as we come out of this?
Look, obviously you need a safety net. That's why the stimulus package was passed, and we were somewhat agile as a government. And in terms of healthcare, whether you have I know if you want to get into the healthcare system, I know it intimately. I've actually just had a whole program that just got evaluated by the Rand Corporation on how we can change to a hybrid of single payer and free market and really solve a lot of these problems. But that's a topic for another day. But the bigger question is, do we need safety nets? Yes. The question is, how do you deal with it, and how is it paid for? And how do hospitals participate? Because each of the stakeholders along the way, whether it's providers, whether it's insurance companies, they all have roles in the problems that have been created. So yes, we need safety nets. The question is, how do we enable them? And that's a long, long answer that I'm happy to talk about any other time.
Well, we're not going to go and let you get away anytime soon. Mark Cuban, stick around. We have much more with you. We have a great deal more coming up on Yahoo Finance. Also want to let everybody know that our Sabile Marcellus actually got an exclusive interview with Ivanka Trump, senior advisor to President Trump. That interview is coming to you in the next hour and a half right here on Yahoo Finance. As we go to commercial break, want to remind you that at this moment, the S&P 500 is up barely, about 3 points. Dow is trading higher, as is the NASDAQ. We have more on Yahoo Finance with Mark Cuban right after this.
Julie, I'll talk healthcare all day long. I truly believe you need a high
Welcome back to Yahoo Finance. We're continuing our discussion with Mark Cuban as the S&P 500, the Dow, and the NASDAQ in positive territory right now. I want to turn a little bit to sports because how team owners respond to the men and women who work for them is the same as how business owners respond to their men and women. And just want to, I believe the NFL draft is still scheduled
I'm in profit.
at around the same
I
time
love to see that.
when the country, at least on the East Coast, will be reaching the peak of the coronavirus pandemic.
I think this was up pretty high too. Let me see. What was I was at
absolutely, because we need diversions. I mean, we're all stuck at home.
35. Well, that's fine.
To watch.
It's fine. It happens.
Shark Tank's Friday nights on ABC ratings.
I'm getting better at this anyway.
We're seeing multi-year highs because people are looking for things that they can watch as a family. You know, the NFL draft would be a great diversion. And I get, look, there's a lot of serious things going on. But we need entertainment. We need sports. We need something to root for, something to get excited about as communities. We need to rally behind our team.
Yeah, baby. Let's go. Keep going up, man. I got rent to pay. Damn, I got rent to pay. I just realized that. Today's the 31st.
Having the NFL draft was good. Having the NBA draft, having the NBA play
games,
sport play games. You know, I think we need that.
Mark, Julia, again, I want to step away from sports real quick, and I want to go back to see if there's anything right now, because you're someone who thinks about evolution, evolving, opportunities. Are you finding opportunities to actually invest and put money to work right now?
Not anything that stood out to me and said, oh, why didn't I think of that? But I'm having a lot of conversations with people, some little things, right? So one thing that I'm working on, and we're partnering with the American Airlines Center, is people, you know, once we're allowed out of the house.
What was that? Exxon.
People are going to be concerned going into public places. So one company is doing a little barcode thing where, you know, for instance, on a park bench in a public place, if you're 75 years old and you want to know that it's been sanitized, you know, you'll be able to look at it, see that there's a sticker that says the date when the last time it was sanitized, and have some confidence that, you know, that park bench is clean. And then applying that.
Damn, I missed that.
Escalator at an arena or stadium or a seat there as well. So that's one thing.
I'll put that on my watch list too, though.
Literally, I'm looking at getting that says, you know, we're
trying to
talking
break past this right here.
Antibodies can be consistent in someone's blood, and whether or not you'll be infectious or not. And I'm concerned that people are going to start trying to identify like something out of the future. You know, where, okay, you have the antibodies and you have the antibodies, so you can go here, but you haven't had COVID, so you can't come in. And I'm concerned that people are going to start getting patents and really starting to restrict movement. So I applied for a patent that says, you know, any type of identification based off your biological status, then we'll have the patent for that, and I'll immediately put it in the public domain so nobody can start making money off it. Maybe it gets denied. Maybe it's a dumb idea. I don't know. But I supported the person who brought it to me, and we kind of worked on it.
Look at that. Come on, baby. Let's go.
Approval, put it in the public domain, because I don't want the bad ideas to overtake potentially good ideas. And then beyond that, there's someone
look at him.
Got an amazing vision for the future.
See, sometimes I get in the trade.
And
see, I'm new in the trade right now, so you know,
investors, and you know, we'll start.
I'm just keeping an eye on it. And once you get deep in the trade, like this, then you feel good.
To go back to
look at that pullback. When you survive pullbacks like that, you're
what
good.
do you think changes there as we go forward?
But you know, it's got to be. Remember, I said the market can't move in the. It's never going to move in a straight line. It's always got to be some kind of pullback. You know what I mean? So with that being said, that's why I like to trade on the longer time frame, because it makes it easier to see. So as you can see, the trend line does show that it's going down, but it's not going to just go down. It's going to go. Well, I guess if I look at it from
as he should have been.
Yeah, you know, I'll
this
give you an
angle.
Example. Back in 1991,
you can see that it made an M formation, came down, and then once it came down, then it went up to try to go back up, then it made what they call a lower high, and then down to a lower low, and then trying to go back up to a lower high again, and then that's a sign for a downtrend. So it's three movements, boom, 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 and then obviously I'm catching that leg down. So it's not going to just come straight down; it's going to pull back up, and I think when it pulls back up again. Let me pull up the higher time frame again.
An adaptation that we took then. We'll do whatever it takes to keep our players and our fans and our customers and our, you know, our employees all safe. It'll be safety first, and everything will be derivative from there. So whatever it is,
I think when it pulls back up like that again, I might hop back in the trade with another side where I can make more money. I don't know. We'll see.
Mark, I am curious.
Or nah, you know what? I might just keep this and be patient and just ride it all the way down.
That we get through this crisis. Describe to me
what's up, Anderson?
World, the owners and the players are going to respond to us, the fans who buy the ticket.
Your boy, you come on, man. Your boy got to make this money, bro.
Like as we come back to large gatherings,
it'll be a love fest. I mean, as I said earlier, safety is going to be first. I'm not going to let my players, my employees, our fans go anywhere where we're not 100% confident that they're safe.
Not much, man. Just sitting home, getting paid. You know how I do. I only work 1 week in a month, bro. 1 week in a month, man. The other 28 days, I'm chilling, getting paid, bro. You know how I do.
Everybody was susceptible. And I think that's
holding on to these trades, man.
Than anything else we've ever gone through. And again, I'll say it, sports is going to bring us back together, and all, the NBA in particular, safety first, but we're really going to try to be
oh no, I had 2 tabs up. That's what it was.
Feeling back together.
Close out one.
I mean, just imagine. It's a shame the Olympics are postponed. Could you imagine the feelings of everybody?
You know how we do it, man.
Went on a great run. I mean, everybody would be standing up and cheering in their homes, out of their homes, in their backyard, wherever it would be. But we'd all be cheering together. And so while the NBA, the NFL, whatever it may be,
gotta get paid, bro. Hey, how everything though? Everything good for you though?
When we come back and play, and whether there's fans in the arena or not, it won't even matter. Whether we're in front of our TV or streaming on our phones like this. We just need that communal energy to get us excited and give us something to
this might reverse. I don't know. Let me pull up a high time
frame and see. Mark, it's Julia again. I actually sourced some
this one might reverse.
And a pretty prominent billionaire wants to know if a presidential run may still be in the cards for you, and if this experience, helping push for change, leading the way, has kind of renewed your interest in politics, and if you see any pros and cons between getting things done in business versus getting things done in the public sphere.
Everything's changed. And so I'm not going to answer the question because I don't have an answer, but I will say this is, American Reset 1.0. We get the chance to rewrite all the rules and do it in a way that's nonpartisan, that puts the people first, puts everybody on equal footing, and says, you know what, let's just go forward and do this together, we the people. Again, it's not a good answer, but I think
I might just gotta take my bread and run on this one.
Anybody to stand up. I think we're tired of traditional.
Nah. I just wait it out.
Political parties, and there's no better time for somebody to step up and really be a leader. And like I said many times, you don't have to be the leader to be a leader.
Nah, and I ain't gonna let them get me with the okie doke.
There's a void of leadership, and the door's wide open, whether it's me or anybody else. So sorry to talk around the question, but I think it's an opportunity for the whole country.
Oh, you know what? That's just that's the news. I forgot. So yeah, we good. Let's get this money. I forgot about that. That's the news. Try to scare people out the market. You don't get me. I'm trying to get paid out here in the street.
Shark Tank Friday nights on ABC. Turn on. It's the best family show on all of television.
USD CAD. Was I in this trade? Oh yeah, this one crazy right here. I took my money. This one right here. Hit my stop loss. It's fine. A little bit of money. It's all good.
Right here.
Still looking at this one though. I'm waiting on this one to pull down. So if it come down, I'll probably get an entry on this one. But I'm not trading the Boeing stock though. I'm actually going to buy it. I'm not going to trade it. I'm just going to buy it. Buy the stock itself and hold it. Carnival. I bought Carnival at $9. I bought the Carnival at $9, and I bought it again right here. That's why I moved this up here to its highest point, because that's the money I need to be paying attention to. The $9 money I need to worry about, because I know that I ain't gonna go nowhere. This ain't gonna go nowhere. And then I sold it, I think like somewhere around here, because I didn't realize that I thought Carnival was gonna get some money from the stimulus package, and I realized they weren't. So I was like, let me take my money out, and then all of a sudden it went down here. I'm not in, so I ain't worried about it. I'm just looking for another entry because I know it's gonna go back down some more, because I know they're gonna have some lawsuits. But I'm just waiting patiently. But also news just said that they stopped their dividends too. So lawsuit plus that, nah, I'm gonna wait. I know it's gonna come down. When it come down to like, let me see, I think it was like at $7. Cause see, it went down to 7 just because people had the coronavirus, and that's the easy part. Now people got the coronavirus and lawsuits and suspended dividends. I'm gonna wait till all that's over with, and I'm gonna hop in. Go ahead and get these guys money off the table real quick. I'm gonna look at it though. Boeing, they got part of the stimulus money. I kind of want to get in. I was just trying to see what's going on. I had got in Boeing too, actually, right here, and then I took some money out. I think I took out last week. So this right here is this week. So I took out last week. So I think I took out like right here in this candle because this was Friday, like before close Friday. So I took out somewhere around here.
Welcome back.
So of course I made profits,
we
but
are watching markets rally right now. But as you know, New York State leads the front, you might say, in the war on coronavirus. And one of the people
I'm waiting till it pull down some more.
Who is leading the charge to protect people in New York State from price gouging and other law breaking is the Attorney General, Letitia James, and she is joining us now on Yahoo Finance with so much to discuss. For instance, the number of reports of price gouging and how your office is cracking down on that. Can you bring us up to speed?
So first, let me thank you for allowing me to be on the show. And let me just report to your audience that as of this morning, 68,363 total cases in New York State. Over
63,000. Damn.
Deaths, and in New York City, 38,000 cases and 914 deaths related to coronavirus. So we are the epicenter, and I thank you so much. And it's because of the anxiety and fear that we are seeing on the streets of New York State that you've got some lowlights, some scammers, some criminals who are
Walmart. You know, I might
let
me look at Walmart. I'm gonna look at Walmart. And McDonald's not on here no more. I'm gonna take a look at Walmart. What else I'm gonna look at? Pepsi. Yep, I think I meant to look at Pepsi too. Walmart and Pepsi. That's what I'm gonna look at.
Essential products that we desperately need. And so it's really critically important that anyone in New York State that has any complaint related to price gouging, that they reach out to our office. In addition to that, we've been seeing medical scams. We've been seeing individuals sell products which they allege can cure the coronavirus. We've seen individuals like Wayne Allen Root advertise products on his Newsmax TV, and Alex Jones.
Damn, I missed out on this.
Which basically says that can cure coronavirus. We've seen Jim Baker sell.
Damn, I missed out on that.
Through his TV show.
I missed out on that. I might still get some anyway though.
On her website, again, she claims that she's got products that can kill the virus. We've seen the Silver Edge Company market and sell a device that they too says beats coronavirus. We've seen countless number of individuals and
what's up, Reed? How you doing?
Scams related to the stimulus package that was recently passed.
I'm out here trying to get paid, man. I'm trying to be like you.
Signed by the president. We are having individuals target the military in upstate New York, go door to door, ask for their information, indicating that they've got their stimulus checks. We've seen phishing scams all online, and we have reached out to a number of tech companies and online platforms, working with them to remove their posts.
I wonder why the Walmart stock went down. Everybody buying toilet tissue from Walmart. Should have been up, if anything. Even I went to Walmart a lot of times in the past 2 weeks.
And employers basically trying to get some sort of clarification on executive orders.
No, this ain't even worth getting into.
Who is essential and who is non-essential in the state of New York.
AG James, this is Alexis Keenan here. I want to talk to you a little bit more about the price gouging. I'm hearing that your office, started initially hearing about claims related to hand sanitizer, toilet paper, and those types of essential items. But
well, I'm still learning different techniques of trading. But I've been learning to trade with price action, following the trend lines and stuff like that on longer time frames. First, I was doing scalping because that's what I first learned, and then I realized that I don't know, longer time frames are easier for me. But not only that, I was learning now, which is like the worst time. Well, the worst time to learn because the market's so volatile, so it's kind of hard to learn it during this time. But I managed to pull it off because that's what I do.
go
And
to
look,
court
your
to
boy
seek any
ain't
temporary
playing
restraining
right
orders, but
now.
we are prepared to do that in the event that the business does not
Your
cooperate with our
boy
office.
ain't playing
Individuals
right
can
now. You know
contact
what I'm
our
talking
office
about?
by emailing us at
I was in this one right here, but they got me.
ag.ny.gov/coronavirus, or they can just go
I was
onto
in
our
this one
regular
right here.
website and tag us.
Attorney General
Why does
Julie
this look
Hyman
like
here.
this?
Thank you very much for joining us. I want to ask
Yeah, I
about
was in
the
this one,
Amazon
and I was up here
situation
in
on
profit,
Staten
and then
Island, where
say
a
something
number of
crazy like they
workers were
always do.
striking there, and
But it's
now
all good though.
apparently
I didn't lose
one
that much. I had a
of
good
the
stop loss on it
leaders of
anyway.
that effort has been let go from the company. Now, Amazon said in a statement that he was not complying with the company's regulations and safety protocols
Yeah, I missed
around
this one
coronavirus.
too.
He has pushed back against that, saying it's not so. What is your office doing at this point to look into that matter?
So let me just say, prior to the action that was taken by employees at Amazon on Staten Island, there was a young woman who was working at Amazon who tested positive, and she was not allowed sick leave. In fact, she had to take off unpaid sick leave in order to get tested, and she has tested positive. And it's as a result of her diagnosis.
I should have been in Johnson & Johnson stuff. I mean, why shouldn't I rep myself?
Protest the lack of protective measures for workers. One of the gentlemen who was involved.
Actually, matter of fact, I did hear that they were doing
He's an
pretty good
employee
anyway.
at their warehouse. And basically what they were trying to do is just alert individuals and inform individuals with regards to the fact, and management in particular, in regards to the lack of PPE, personal protective equipment, and protocols.
See, what I'm trying to do is I'm trying to catch some stocks that had that's worth getting into, like
tested positive. And it's really
like if I'm looking at this one right here and it's at 132 and this is at 154, it's not worth my time. I mean, it's a good jump, but the way this price is set up is a lot more other ones I can get into. Like, for example, the one I was looking at was Carnival, only because they were at well, before the drop 50, but I think before that it was even at 70, and it dropped to 9. Well, it actually dropped to 7. Your boy got in at 9 and rode the wave up, and then I sold my money because I found out that they weren't getting the stimulus package. Then it came down. So I want to see what's going to happen.
We're going to have more for you on Yahoo Finance. That includes a discussion with the San Francisco.
You check GSK. I don't even know what that is. Let me look.
Brian Chung had a discussion with her. He's going to.
I'm about to look right now because you be knowing everything. So
also
let me
want to
look.
leave you very quickly with some breaking news, which has just come out. According to CNN, their anchor Chris Cuomo has been diagnosed with COVID-19 coronavirus. We have
Oh, you
more
know,
on
I
Yahoo
should have
Finance.
gotten that because it's what they. It's health, right? So yeah, they're using that for the coronavirus stuff. Let me see what these people was at. So they 48 and they at 38. Man, I went, man, but I really like the Carnival one. That's the one I really like, man. Because when them balls was at 9, and I had paid a good bit of money in there too, and I took out about right here though. Cause you know what I mean? Like when I know they wasn't getting the thing, and I had saw some more people died on the ship and all that. Well, the people died on the ship, that wasn't the part I was really worried about, because you know, dropping from the price that that happened from people dying on the ship. But it was more of them not getting the stimulus package. And then something else happened. I don't know. Oh, lawsuits. When they talked about the lawsuits, I was like, it's time for me to dip. It's time for me to dip. You know, like in a normal situation, I wouldn't have cared because I would have just been like, that's the market's supposed to go up and down, up and down, up and down, up and down. But now I'm trying to steal these people's money, so I gotta do what I gotta do. What's up, Ron? I mean, what's up, Rich?
Stock trader and entrepreneur. With veteran trader and penny stock investor Tim Sykes, and they are both joining us right now.
There are thousands of stocks all over the place with good news, bad news. No one knows what to watch. I do. I'm gonna
this thing has come down, man. Let's go. We got money to make.
You for free. All you have to do
there
is
we
click
go.
the
Keep
link
moving.
just below this video. Sign up. Get involved. If you like it,
no, this one right here, playing with your boy.
Hopefully you sign up for my premium services too. I want
Wait,
to
did I
teach
get
more
back
people.
in this one?
I want more millionaire students. Click the link just below this video. I want you to get involved in the stock market. It doesn't matter
this
if
the
you know
one right
anything
here.
at all. I'm going to prepare you with
It's all
the best
good.
stocks every single week. Watch and learn. Sign up on the link just below this video.
Are you talking about trading options and stuff like that? I mean, let me see. I short some, not stocks. I did actually, but it was stuff like S&P and Dow Jones. I haven't messed with any other trading wise. The only thing I really messed with that wasn't Forex was S&P index and Dow Jones. Well, in cryptocurrency. But normally when it comes down to big money stuff, stocks like that, I do more of like investing like money and just letting it sit. Is that something you think I need to look into too? Because you be knowing everything, man. Yeah, it's more high risk. Oh snap! This is already hard enough. Don't know if you got to that yet. Nah. I was going to look into it, and then I realized that I thought this was kind of like really good enough, to be honest. Because like I don't know, but I know what you're talking about though.
Welcome back to Yahoo Finance. The Dow is up 132 points. S&P 500 up 12 points. Nasdaq up.
But when I do get in the S&P and the Dow, though, I just catch the wave going up or down.
And getting educated. This is nothing new. Back in
I don't stay in there that long. I just go in, catch the little candle going up, and then I take my money out. I don't stand in there and look around.
But that number, as you can
Because the way this Corona has been set up, man, you don't know what to do. So you get in and get out. Don't stand there and look.
He joins us now.
And then, of course, you got the crude oil, too. I hopped in on crude oil a couple times. Ooh, $20.
Or do you think this is a trend to go forward?
I think there's already been a trend going forward, but I think this forced experimentation where literally 1.5 billion students around the world, this is 9 out of every 10 students in the world, according to UNESCO, cannot go to school. So we're seeing a huge acceleration of something that's already been happening, which is a movement more towards online education. And I think when things get to a new normal, certainly people go back to school, but it'll never be the same.
I believe we have Akiko Fujita. We're going to try and get her redialed in. But let me ask you, when you talk about the increase that we're seeing, the majority of courses are free, but there are also courses, if you're going to get a certificate, that you pay for. How does that work, or is that being waived in this crisis environment?
Well, there's for consumers, any of the 4,000 courses on Coursera you can take for free. You can watch all the lecture videos, and these are from some of the top universities and some of the leading companies like Google, IBM, Amazon, and others. But if you want to get the certificate, then you pay a small fee for that. It's about $49. Now, we have courses, we have specializations, we even have, from our university partners, full master's degrees and bachelor's degrees. So there are thousands of students actually earning their degrees. These are identical to on-campus degrees, but you can do them online, and we're seeing pretty much spikes in demand across the board.
In fact, one of the big courses you're seeing is Science Matters. Oh, there's Akiko. Akiko, jump in here.
Hey, Jeff, can you hear me okay?
I can hear you great, Akiko.
Great. Good to talk to you again. One of the things that struck me is prior to this outbreak, you mentioned that a lot of these universities—
Let's get this money, man. Let's go.
Some less than that on
we'll talk more on it. It's good you learn how to trade stocks.
The course of this outbreak, first helping universities in China, now Europe.
I had an automation that I had too, but I turned it off because for some reason, you know, me being a computer guy, I like to think too deep into things sometimes. And my deep thought was I didn't think my trading robot would be smart enough to realize that we're in a crisis because usually robots are designed to do something normal. You know what I mean? Like a normal day. But I don't think it was, I didn't think it was smart enough to do something abnormal like now. I stopped it. I don't know if he was paying attention, but like it was I think maybe 2-3 weeks ago, something like that. It was a time when we were fighting over oil. I mean, I know we're doing it now, but I'm talking about when we initially was fighting over the oil, and that caused the market to shake up a bit. I didn't, you know, the robot ain't smart enough to pick up on stuff like that. You know what I mean? It's just too much going on. That's why I didn't turn it on. But I'm gonna check. I need to check out your bot though. You gotta send it to me or something, whatever you got going on. I gotta see what you talking about, man. I'm trying to eat too. You know what I mean? Like, I'm trying to eat too. You can't be the only one eating.
You think there's going to be this huge shift, just like online learning, to remote working, and that even in the first few weeks, you've seen a huge shift in Coursera, in your internal operations. How permanent do you think this change is, and what does this say about the future of our workspace?
Yeah, I think that many companies, just like schools, have not been used to teaching online, and they've been sometimes a little bit resistant to move in that direction despite the trends. They've been forced to teach online. I think similarly, many companies have been resistant to allowing workers to work from home, but now they're being forced to do that because 3 out of every 4 Americans are under stay-at-home policies. What we're learning is that working remotely is very different today than even 5 years ago. With laptops, webcams, video conferencing like with Zoom, and then Google Docs, these collaborative cloud-based docs where people can work together online. It allows for a level of collaboration we haven't seen. And I think when the dust settles and when we return to a new normal, not every job, but many, many jobs can be done effectively from home. And so I think that we're going to have, just like we have blended classrooms in the schools, I think we're going to have blended workplaces where many jobs happen in the office, many jobs happen remotely, and companies more and more will go towards a global workforce because more and more jobs can be done from remote locations.
All right, Jeff Maggioncalda is the CEO from Coursera. Thank you very much for being here. As we go to break right now, the markets are enjoying a bit of a rally. We've still got much more for you on Yahoo Finance, including Ivanka Trump. to
No,
Yahoo Finance.
Disney.
We're watching the markets
No,
rally a little bit
Apple.
right now. We're
What
going to
do
keep
you
an eye on that for you. But we want to bring in Tobias Adrian. He is the head of banking at the IMF. And this morning, sir, you wrote that, quote, pressure on the banking system is growing and higher defaults on debt are imminent. You have recommendations for everybody, among which is to encourage loan modification. Are banks worldwide really going to go in and give loan modification to their borrowers who are now in a crisis situation? What would that look like?
Yeah, absolutely. So the good thing is that banks are well capitalized. Regulators around the world learned from the 2008 crisis that the banking system has to have a lot of capital and a lot of liquidity. And so the banks are in very good shape today. This crisis is expected to be a temporary crisis.
Bro, I'm open up for a buy. I'm good in these trades right now.
For example, take your gym around the corner.
I don't know if I should just take my money and
might
dip,
not go to the gym
mind my own business.
For 3 months or 6 months or 9 months, but they're expected to come back after some time. And at that point, the gym will be able to make payments to the banks. And so a loan modification basically says that the bank expects a temporary
nah, that's the news. The news always does do this. So I'm just gonna patiently let this money keep rolling. Why does it turn? What was this right here?
Banks should be able to withstand that without any problem.
Hey, Tobias, it's Brian Chung here. So I want to ask about capital. It seems like that was the main issue in 2008 when banks simply didn't have enough capital
I think
needed
it might
to
have
get
been
those
right here,
bailouts. I'm
maybe.
wondering, from your perspective, there's been talk about bank capital largely being better around the world than it was in 2008, but
So
that
this right
still
here
banks
caused
can do
some
things
kind
like
of reaction.
suspend share repurchases,
Let me figure
which
out
in
what kind of
US they
reaction
already
this
done.
caused.
Then you're hearing some calls from like the Bank of International Settlements, which is saying maybe we should have a global freeze on dividends as well. I noticed that wasn't part of the recommendations that you had, but curious to get your thoughts on a proposal like that.
I'm very supportive of that proposal. In fact, as you mentioned, in the US, banks have already said that they are going to stop.
Oh, you know what? That's the lowest part of the day. That's why I look like that.
And that allows them to accumulate
I
more
ain't even
capital
gonna mess
so
with
that
it.
they
Let me
can
see.
better
I'm gonna let that sit.
withstand any adverse
Yeah, I'm gonna let that
shocks.
sit.
So that's a very good thing
It could
from
be
a banking
this right
stability
here.
point of view. As you point out,
Then
the
we
banks
got,
have
let's see,
more capital and higher
every time we
quality
get right
capital,
here,
so they have
struggle.
a
And
lot
right
of
here, I see that. Oh,
high
yep, it's gonna
quality
struggle
tier
right
one
here
equity
too.
capital.
I'm gonna let that sit.
And in
Yeah, I ain't even
shocks
gonna
like
bother it.
the current shock, they
Yep, see
are
right there.
expected to run down some of that capital buffer because on
Yep,
the
right
asset side
there,
of the
struggle
balance
to
sheet,
get past that
there will be
line.
some
I'm gonna let it
non-performing
do its
loans.
thing. I'm
But
gonna let it
banks
do
are
its thing because
well,
it looked like it passed
well
through it
set to
just
withstand
fine. It just
that
did a
kind
little
of shock.
pullback because that's what the market
Tobias,
do.
there's kind of
You
a
can't just go
balancing
straight
act here
down.
where
So
regulators
I'm
have
good.
to
I'm
decide
good. I'm
how
gonna
much
let
do you
this. I'm gonna
change
let this
maybe
do
even
its
the
thing.
regulatory structure to allow banks to tap into their liquidity or capital buffers to lend to support the economy in a really trying time as this, but not lose them to the point where the bank becomes weak itself.
It's
To the
probably
point where
the
it could
same
actually
thing.
become systemic if it ends
I'm
up
good.
failing.
I'm good.
Where's the
Sit
line
back.
there? You said don't loosen
Why go to work when I can
rules
sit
or
home and catch these
recommendations, but
pips?
you have the
Let's
Fed.
go.
We've seen some calls to
Cross
maybe
my
loosen the liquidity
legs.
coverage ratio, a lot of these kind of
Watch the
inside
money
baseball
add up.
regulations. Where do you find that balance to, hey, you should
Probably
be lending,
hop
but
in a
also
couple
make
more
sure that you're safe?
trades. Probably take a break, play some
So
video
the
games. We'll
rules are
see.
designed to deal with this shock. So when the
What's
Fed
up,
says
Maniac? How you
use the
been, bro?
capital, use the liquidity
You
that
been
is
doing
in
all
the
right,
banks,
bro?
that is within the set of rules. So the rules say you have a stock of capital that you should accumulate in good times, but then in bad times you can use some of that capital. So you don't want an undercapitalized banking system. So you don't want to use up all of your capital, but you do want to use up some of that capital. So some of that is referred to as the capital conservation buffer. And that's exactly the kind of buffer that you are expected to run down in times of crisis like we have today. Similarly, on liquidity, the liquidity coverage is expected to run down in times of crisis such as today. So that's well within the rules as they are written.
All right, we appreciate your being here, Tobias Adrian, the IMF's head of banking. We've got more for you on Yahoo Finance right after this.
Oh, I'm gonna let this one sit for a while. Actually, this one gonna take a couple days. This one's probably gonna take a couple days to get here. It's fine though. It's fine. Ain't nothing better than guaranteed money. I'm gonna let that sit. I ain't even gonna bother it. I might move my stop loss though.
Welcome back to Yahoo Finance. We're going to go to London and our Oscar Williams Groot because one of the big oil players, Royal Dutch Shell, has news about the price of oil. Oscar?
That's right, Adam. And Shell this morning basically warning about what the oil price slump is going to mean for its business. Of course, the price of oil has plummeted since the start of the year, and Shell said they would take between a 400 million and 800 million write down in just the first quarter as a result of this price slump. They said that for every $10 per barrel that the price of Brent declines, they typically lose about $6 billion of cash flow over the year. Gives
This
you
is
an
crazy,
idea
bro.
of
Look, this
the
is oil right
slump
here.
that we could see if this continues. However, the stock is actually up today. That's because although they warned on this impairment, they said that they had signed a new $12 billion facility with banks to lend against, in addition to a $10 billion facility they have and a 20 billion cash pile they're sitting on. Crucially, they didn't mention canning the dividend, as a lot of other companies had. We've had over £5 billion worth of dividends.
The last time oil been this
since the start
low
of the year. Shell
was
stock is actually
in
up at the moment.
2001, boy.
All right, Oscar Williams.
Let me
Groot,
see.
thank
This
you
might
very
pull
much. We've
back.
got
Let
more
me see.
Yahoo Finance, including Ivanka
It can't go
Trump,
that low. There's no
later
way.
in this.
See, back in 2001, ain't nobody had money though. But we got money now. Well, I guess not that kind of money. I guess. See right here, it kind of struggled to break past that, and then all of a sudden, it just broke past it, and that was it. I don't know. I kind of want to place a trade right here. I might do like a real small trade. Let me see. Something like real small. Yeah, I might place a trade on that. I think I might place a trade on this one and then just forget about it. I'm looking right now. Because that's, man, the last time the price was this low, 2001. And that's, ain't no way it's going to go back past that. It shouldn't. You heard who get the COVID vaccine? Oh, the dude just popped up. I wasn't paying attention to him though. He was talking about something about doing it. He just popped up, but I wasn't paying attention. I'm trying to make money. But yeah, he did pop up on my news channel. But I didn't pay attention to it though. This can't go that low. There's no way.
You're watching Yahoo Finance Live. I'm Julie Hyman. Quick check of the headlines for you. Right now, we are seeing a small rally on Wall Street to end the quarter that has been the worst for the major averages going back to the financial crisis. Right now, the S&P 500 is up just about 0.1%. So a very quiet session, perhaps welcome news for traders out there. In terms of coronavirus and some of the headlines that we're watching, there are 809,000 total confirmed cases globally. We just learned from the governor of New York that confirmed cases in the state now topping 75,000, including the brother of the governor, that is Chris Cuomo, the CNN anchor, also confirming he has it, although it sounds like he is not terribly ill at this point. So that's one of the other headlines in the business
This
world.
is a clean downtrend, but it's also a spot in the trend where it didn't tap. Last time it tapped the spot was 10 years ago.
That we have been hearing about. To walk me through that and much more over the next hour, I'm going to be joined by Adam Shapiro, Melody Hum, and Dan Roberts, all of Yahoo Finance. But first, we're going to get another update on the virus from our Anjali Kamlani, who has been following it closely. And Anjali, I know you've been looking at some new headlines and new rules and regulations coming from Medicare.
Yeah, Julie, thanks. As you mentioned, with this growing number, it's been really hard for a lot of the elderly patients around the country to really get to appointments. We've heard so much about doctors seeing a reduction in volume as more people are adhering to the stay-at-home, or including for seniors, just being the most vulnerable, staying home and away from being outside for any reason. And so that has forced Medicare to really
Keep an eye on that company. What's the name of the company?
so that they can continue to monitor patients, especially those that need a daily checkup or care in some way. And so one of the things
You say keep an eye on that company. What company are you talk about? Are you talking about the oil?
Paperwork, instead of requiring hospitals to have paperwork, they can actually just go with audio authorization. And in addition, phone calls can now be considered telehealth, which is a significant expansion. So rather than trying to get someone to get on with a video and getting through that system, it can be a phone call, as well as they're allowing in-home testing. So rather than requiring someone who's feeling ill and is a senior to get into a hospital space or to get into an environment where they could in fact be exposed to the virus, they're allowing lab technicians to go inside the homes of these individuals to conduct the swab, and they will still get reimbursed for that through Medicare. So that's really interesting, and a lot at one time that was announced yesterday by CMS Administrator Seema Verma.
All right, Anjali, thank you very much. Appreciate that. Also, for more on the government response to coronavirus,
I gotta keep an eye on this. I'm gonna catch on this crude oil.
Ivanka Trump, the senior advisor to the president, and of course his daughter as well, and she talked about what the administration and government is doing.
The core of what the president has been advancing since the beginning of this administration is support for these businesses that are truly the backbone of this country. So when you think about business in America, a lot of people tend to think towards the big businesses, but the small businesses employ close to 50% of the American workforce, and obviously are the most vulnerable from a cash flow situation and in these turbulent times. So we were very, very focused, not only throughout the course of the past 3 years on cutting regulations that disproportionately impact them, on creating more flexibility and ability to access capital, on helping upskill and reskill the workforce that they benefit on thinking about how we can expand benefits to them without hurting their bottom line in terms of paid family leave. Obviously, it's such a relevant issue right now. So we've been fighting for small business for a long time, but in this particular bill, in addition to all of the other relief-oriented elements that may help a small business owner individually or their family, there's over $350 billion in the form of loans, but they're really more grants than loans. What we're seeking to do is helping bridge people. We were an incredibly healthy economy, so we want to just bridge people until the world reopens. And we believe that when the world reopens, it's all going to come back. Because fundamentally, you talk to small business owners, they had never had a better year. You talk to workers, wages were up, unemployment was at historic lows. So we want to get people through this horrible health crisis that was no fault of their own.
And that was Ivanka Trump, of course, senior advisor to President Trump. Sabeel Marcellus, who conducted that exclusive interview, is joining us now. Sabeel, it's good to see you remotely. Talk to me about what else Ivanka Trump had to say. And I know, she has been in the past a champion of the, for example, Family Medical and Leave Act, which perhaps some people are also tapping into right now. What were some of the other points of your conversation?
That's right, Julie. So I spoke to Ivanka Trump from her office at the White House, and she was basically talking about her role when it comes to this $2 trillion fiscal stimulus package. And what she was saying for small businesses is that if they retain their workers, then they are able to get those grants those loans pretty much as a grant. So they don't want small businesses to have to worry about making payroll while also having to pay the rent, utilities, and other bills. When it comes to sick pay, she was talking about how important that is, especially now that we're dealing with the coronavirus pandemic. So she was saying that this legislation allows these small businesses to offer sick leave and they get tax breaks for it. But if they're not able to put that money up front, then they can apply for a waiver. And she said that as soon as this Friday, small businesses can go to banks and start getting these loans. They want to speed this up as much as possible and get relief into the hands of those who need it as quickly as possible.
All right, Sabeel, thank you so much for bringing us that interview. We'll see how quickly all of that happens. Hopefully can be very rapid. We want to talk more about what's been happening in the markets here as we see kind of not much action today, which is a switch from what we have seen in recent days. And also as we come to the close of the first quarter, which was the worst for major markets going back to the financial crisis. We're joined now by Russ Kosterich. He is a portfolio manager of the BlackRock Global Allocation Fund. He's joining us on the phone from Princeton, New Jersey. Russ, if you can unmute yourself now, we'll have a chat about what's been going on here, because you say in your note to us this morning that perhaps we are starting to see a bottoming process in the stock and credit markets. And I'm curious what it is that is drawing you to that conclusion at this point. Russ, if you're muted, you can unmute yourself now, or you can press *6. That might be a good way to do it, as we are all grappling with this new technology here.
Hey, Julie, can you hear me now?
I can, please.
Oh, fantastic. Sorry about that.
That's all right.
It's interviews in the age of social distancing.
Exactly.
So I think there are a couple things going on. I think one of the words you said is really key, which is the process. This is a process. As your listeners know, there's never a point where there's a green flag and the market bottoms, and I think that's particularly true this time, given the just unprecedented nature of this catalyst. The health concern, the questions about how the economy starts again, means that it is going to take a period of weeks and maybe months for the market to bottom. But some things have started to happen which I think are constructive, the most important of which were all of the actions taken last week, both on the monetary side by the Federal Reserve and the world's other central banks, as well as the fiscal side, which is this massive bill, roughly 9% of gross domestic product, much larger than we saw even in 2008. These are helping. They're helping, one, to hopefully create a bridge for small and mid-sized businesses and larger ones as well. They're also helping the financial plumbing to go back to normal. So markets such as the money markets, currency markets, treasury markets, where you saw massive dislocations over the past couple of weeks, they're starting to calm down a bit. They're not back to normal, but at least this process of having the volatility
already in profit. That's how you know you're good. I ain't even finished typing the thing up yet.
For the equity market bottoming, hopefully in the coming weeks and months.
But that bottom, Russ, could be quite a while. I mean, we're watching demand destruction, which is still accelerating to the downside, isn't it?
I think that's exactly true. And this is why, again, I keep coming back to the word process, because it's unlikely we're going to have that, one single day of capitulation.
See, this was a pull down, and then I know it's about to try to come back up.
and filling process for a
I
couple
think
reasons.
I
First
don't
of
know.
all,
We'll see.
if you look at
Let me
history,
check the
one
trend
thing
out.
we do see, and I think this
It's a
time
downtrend, but this
will
look like a
actually be no
reversal
different. This
anyway,
is where
so it's
history is
worth a
likely to
shot.
repeat itself.
Either I'm gonna let this run for a couple of
before the
days,
market bottoms. And what I mean
or
by that is if you go back to 08
we'll see.
and other
Or I'm
periods
gonna
of
lose what,
dislocation,
$8?
you'd see the surge in volatility.
We're gonna see.
That surge in volatility didn't ultimately mean the low for
Already in
stocks. That
profit.
actually came
I might not
sometime
even.
weeks
Let me
or months
see.
later. Now we've probably seen the peak in
I might not
volatility,
even
but exactly as
take
you
my profit
suggest,
right
until
there. I
we
just
get a
got it right
better
there, so I
feel
keep an eye
for
on it
how
anyway.
bad that second quarter contraction is going to be
But let
and
me
what type
check
of rebound
to make
follows it,
sure.
we are probably going to see more probing of the downside before the market can have a sustained rally.
I might let this one just
So,
run.
Russ, as somebody who looks at a variety of assets around the globe, how are you allocating right now? I mean, we've heard a lot of advice to sort of be
I think once this
rebalancing
one
right
hit a
now.
certain
Is
point,
that
I'm
what
gonna
you guys
I'm
are doing,
gonna
or are
move my
you
stop
being
loss to break
more
even
aggressive and
and just let it
strategic in
run
terms of where you're
until I
allocating?
feel like it's about to make a
Well, I think
reversal.
we're being strategic. I don't think I'd say we're being particularly aggressive right now because of all the things we just spoke about. So we're pretty close to benchmark. We have a long-term benchmark of a 60-40 portfolio. And of that 60-40, about 60% is in the U.S. and 40% is outside the U.S. So right now we're close to our benchmark when it comes to equities. We've actually been
It looks like it's struggling to get past this because, as you can see, it tapped it twice and then came back down. And then, let's see, even here it tapped and tried to came back down. Let me see if it tapped any other more times.
The dollar, gold, the yen, that is going to help dampen that volatility. And then in terms of where we're really focusing on, I'd say we are still overweight the U.S. And the reason for that is obviously there's
It's
going
been
to
a
be a
long
lot of
time since
challenges
we've been
to the
down here.
economy.
So I'm gonna let
But
that
the
run.
big theme right now in our equity book is quality. And what I mean by that are companies with fortress-like balance sheets that can get
Oh man, let me see what you got. I'm pulling this up on my laptop, by the way, just in case it's important information or something. You know, I want to
Russ, you brought
make
up your
it
hedges,
on my
and the
stream.
dollar is one of those hedges. How does the news today from the Federal Reserve, these extended dollar swap, the facility they're setting up with central banks worldwide, how does that, if in any way, impact what you're doing as a hedge?
Well, it's important. I think it goes back to one of the things I mentioned in the beginning.
I'm looking at it
about
right
the
now,
Fed
actually, as we speak.
getting the financial system to start to
Hold
work.
on, let me make sure I got it.
Somewhere approaching
I'm looking at it
normal.
right
And the
now
reason what the Fed
while
is
I
doing today
make
it's one part of the
this
process,
money.
but they're helping deal with what is effectively an acute shortage of dollars outside the U.S. And this has been a multi-year, maybe multi-decade phenomenon. As more companies borrow in dollars, particularly in emerging markets, their central banks need to be able to back them, and they need dollars themselves. Some of those were able to get dollars through swap lines that were set up by the Fed. This is an additional program, and what it's going to help do is relieve some of the really acute pressure we've seen on the dollar since the financial crisis
Dang, that's a
began.
long document,
and this
boy.
is particularly critical for emerging markets. So I think this is another positive step, and again, helping us get on that path back to normal.
I like it. A little note of optimism today. Thank you, Russ. Russ Kosterich is the portfolio manager of the BlackRock Global Allocation Fund. Thank you so much for joining us. Appreciate it.
Thank you, Julie.
Well, coming up next, we will be talking more about the issue of stakeholder capitalism and what various companies are doing amidst the coronavirus outbreak. Keep it right here on Yahoo Finance.
So I see the patent. So what is it about? I mean, you know, it's like at 8,000 pages, but it popped up in my news, but I didn't know he was trying to say. You know what I mean? Because it popped up on a thing, and I wasn't sure what he was trying to say. Because like I was a bit confused. I didn't know if he was patenting the word coronavirus, but then again, I didn't think he could do that because I think the word coronavirus is already out. It's just different strands. But you know, I ain't that smart, so I wouldn't know. I think I know is computers and how to make money.
You're watching Yahoo Finance Live. I'm Julie Hyman. As we see stocks stage a modest rally, very modest rally to end the first quarter, and we're getting in a lot more dire predictions of what second quarter GDP could look like. Amidst all this, we've been talking more and more about the companies that are addressing coronavirus in various ways, including, in some cases, by paying their employees even when they are not working. Many other companies, of course, are furloughing employees right now. We're joined by Martin Whitaker. He's the CEO of Just Capital, joining us from his home in Connecticut. Martin, it's good to see you. And essentially what Just Capital does is look at issues of stakeholder capitalism. So as you look at coronavirus, one might have thought going into this that it would be a time where people would sort of throw that out the window, right? This is a time to hunker down, to focus on survival. Instead, we have seen many companies kind of step up and say, this is how we're going to take care of their employees. So how do you think this affects the whole debate of stakeholder capitalism?
I think it defines it. I mean, I think if you're not able to look after your workers, your customers, the communities where you operate, and your shareholders right now, I mean, that's what every company is trying to balance. So this brings it into incredibly sharp focus. And I suspect that going forward, all this talk of stakeholder capitalism and purpose is going to be defined by what companies do over the next several months.
Martin, it's Julia LaRoche, and you all have certainly been tracking and following this very closely. And not just the issues that we're seeing at hand as it relates to the fallout and the economic impacts from the coronavirus, but also just the metrics, the day-to-day metrics. My question for you is, do you worry that some of those might actually fall by the wayside here, given what's happening?
Absolutely. I mean, you know, we have been tracking.
Oh, I see what you're saying. Hey, I saw that you replied to your own message. For some reason, I don't usually see the messages that people reply to unless I look on my Facebook itself. So I actually pulled it up on my phone and I saw your message. I see what you're saying now. It's supposed to spike up in price.
Have expanded or instituted
I got what you're saying.
sick leave policies, and I could go on. So the point is, you know, this is what
Let me look.
right now, quite rightly, but how much of this
I see what you're saying because I did sort of do talk about it, but you know, I was paying attention to what you're talking about.
Key one. How much of this, especially if a company is taking government money, for example, as part of the bailout, what are they going to be doing on an ongoing basis? It's one thing to behave like this in a crisis, but if you really believe, you know, if you're a business roundtable CEO and you signed the BRT statement of purpose and said, you know, our purpose as an organization is to look after not just our shareholders, but also our workers and our customers and our communities and our suppliers, and you've made changes now in this crisis, are you really going to roll those back? You know, and are you doing this because you really think this is going to make you more resilient as a company? You know, more resilient and help you get through this storm more effectively?
Okay,
or is this just some sort of short-term expediency? I don't think so. I think what we're going to find is companies that are better positioned around stakeholder issues are going to ride out this storm more effectively. They're going to be the ones that drive the economy forward when we need it to in a couple of months. And overall, going to be much more resilient, which is, you know, I just think that's really the defining sort of ideology, if you will, of stakeholder capitalism.
Martin, Dan Roberts here. Thanks for joining us. When we talk about stakeholder, involvement, we're really talking about reputation, right? And this is a time when companies are trying to do the best they can and
and look as though, not to be cynical about it, but at least look as though they are putting their employees first and putting customers first. So you do have companies taking certain measures in some cases that look very positive and look like they're really helping employees. Other companies have maybe done some missteps. We've reported on some of the companies that haven't looked so good during this. We just had Mark Cuban on in the previous hour talking about a number of tweets that are out there from people saying, I just learned I was laid off or furloughed via an email, a kind of cold email. And Cuban was saying, you can't do that right now because, the way companies act right now is going to be remembered for years to come. What examples have you guys seen, since you track this stuff so closely, of companies either doing it right or maybe examples of companies
Damn,
doing
that
it wrong
sucks,
and
man.
making
Like,
mistakes
just
that
imagine
hurt
getting an
their
email
reputation?
saying, "Yeah,
So
you
what
see the
you just
news. We
said
got coronavirus. We don't
is
need you no
exactly the
more."
right question, right? So if you're just doing this to look good, or if you're just doing this for some sort of branding, then you're going to run into a problem right now, because people who work for you, who are sick, who are worried about losing their jobs, who are the most vulnerable employees anyway, this is not a game to them. This is their life. This is their livelihoods. So, and the country needs real performance right now. So I think that's what I said earlier. I think this is an acid test right now for those companies that really do walk the talk. So I'm thinking of companies like Target.
See, good thing I
Target
put these
was willing
lines
to
here because
give
it helps
like
me
$2 an hour
realize
for
why I
300,000 plus
struggle to get
frontline
past a
people.
certain mark. I think I
Except for
put
paid
this.
leave to workers
Oh
who are
man, I hate when
pregnant,
I do
65
that. Let
years
me
old
make sure
or
I lock
older,
that.
for up to 30 days. It's waived its absenteeism policy.
I put
So
this.
these
I
are
think I did
real
this on the
things
way.
that, to us at Just Capital, exemplify real stakeholder performance.
Yeah,
And I
going
think those
up.
are
I
the
think I did
things that are
that
going
going
to
up or something like
help
that.
these
I don't remember what I
companies
did.
actually do better now and in the recovery. Other examples have come from the Gap, Starbucks. We've seen even firms like Dollar General, right? So Dollar General, you wouldn't think of that as a just company, but they put 35 million bucks available for bonuses for all their all-store distribution center workers. They're the ones that move first to reserve first hour of store opening for senior customers. So this is not just for like wealthy companies who have a lot of money, who are traditionally seen as sort of brand leaders.
Yeah, I
On
just see your message,
sustainability
Reed.
or social
I'm looking at it right
responsibility.
now.
This is where the rubber hits the
GILD.
road
What's
for real
GILD?
employers, real companies who have a tangible role to play in helping people's
Oh,
lives, which is
oh,
what
oh,
stakeholder
oh. I think you're
capitalism,
referring to the
is,
list
was,
of
and always will be about.
the doctor
So, Martin,
companies that I was
take us
looking at.
then
Yeah, I see
beyond
what you're saying now.
coronavirus, right? And I should mention, by the way, as we talk about these various furloughs, we just got the news that J.C. Penney is going to, it says, temporarily furlough the majority of its
JC
hourly
Penney.
associates. We
I
saw
don't even know
Macy's
when the last
make that
time
move
I've
as well.
been to JC Penney.
Coming out
Bitcoin.
of
Let me
this,
check
the
on
sort of
Bitcoin.
classic
See,
stakeholder
Bitcoin used to be my baby
capitalism
back in the
issues,
day.
things like family
I
and
got into
medical
Bitcoin back in
leave, things like
2007, but
looking at
when
the
this
broader
thing
community and
crashed,
things like
I was
climate
like, it's
change.
time to go.
How do you think companies think about that as they come out of this, or is
Let
it
me check,
more
man.
sort of specifically employee focused because of what they've been through?
Yeah, so I think
Man, I used to love me some
that
Bitcoin. Shoot, where this thing set up right
first of
now.
all, I don't think this is. I saw your interview with Ivanka Trump. I don't think this is a sort of a, the air raid siren is over and we all come out from our bunkers and now it's business as usual. I don't think that's going to happen. I think this is going to be a phased recovery where we have millions of people who are now seeking reemployment, where we have companies. Well, we as a society are going to be responding on a rolling basis to different sort of viral hotspots where the recovery is going to affect different industries differently. Airlines, retail are going to be different from technology and social media, for example. So I think this is going to be a very sort of uncertain and unequal recovery. And so that is going to be all the more important for companies who want to be resilient, who are going to want to be seen to be successful in managing this crisis and successful in the way they're handling the recovery for them. Those are going to be the companies that have the best relationships with their workforce, that retain talent the best, that have the greatest customer loyalty, that have
I might hop in
the
this. I
communities
might
where
buy
they
some of this.
operate, and that have created strong supply chains that have, withstood, and they've stepped up. Maybe they've done the right thing. Maybe they've
Let me make sure I say that right, though.
forbearance for some of their suppliers.
What's the other one?
Is
this one is
trouble.
Chevron?
So I just think all of that together is going to make for a more successful company. So over time, to your question, over the the next several quarters to come, those companies are going to be out in front. And so that is, to me, is going to define
I might get some of this real quick.
This idea of a truly stakeholder-led business and completely reshape it. So I think this applies across the board to all the company stakeholders. Of course, companies have to look after their investors. They're going to have to be profitable, and that will happen. But they're also now got this muscle memory for what makes us better, what makes us stronger. And I think that is going to be what sort of, I guess the story that really comes out of this for corporate America.
Well, Martin, we'll be checking back in with you as you hold these folks' feet to the fire. And as we get past this, hopefully quickly, Martin Whitaker is CEO of Just Capital. Thank you, sir.
Thank you.
Well, in terms of other folks who are weighing in on this, our editor-in-chief, Andy Serwer, had the chance to sit down with the former National Security Advisor, Susan Rice, and spoke to her about government response, including that of New York Governor Andrew Cuomo.
Well, I think Governor Cuomo has been a fabulous leader in a time of crisis. He's been very clear about what he and his experts estimate to be the needs in New York State for hospital beds, for healthcare workers, for ventilators and protective gear. And he is trying to play beat the clock by building out with federal support the number of beds and the number of ventilated ICU units that are critical to be prepared for the surge, which he predicts could be, 140,000 hospitalized patients at one time and requiring 30 to 40,000 ventilators. So he's doing his utmost, and I think he would be the first to say that he appreciates what federal support he's received, but it's not yet enough. Thankfully, we are now seeing the Army Corps of Engineers mobilize to help build additional facilities. That's something that's going to happen not just in New York City and the nearby areas, but around the country. We have capacities that we are still not employing. The president has the authority under the Defense Production Act, not just to tell GM to build some additional ventilators, but in fact to organize the entirety of the supply chain for ventilators and protective equipment, and to say to all of the suppliers, you've got to do X by Y time. And then the federal government, very importantly, needs to be in charge of the distribution of those new ventilators and those coming out of the stockpile. Because right now, as you've heard every governor, Democratic and Republican, say multiple times, they're competing against each other and against the federal government for the vital life-saving equipment they need. There's no reason that should be the case.
And coincidentally, we're just seeing some headlines from Governor Cuomo's daily briefing saying it's almost impossible to buy a ventilator and that FEMA big-footed the states, in the words of Governor Cuomo. Andy Serwer, our editor-in-chief, is joining us now with more on that interview. So interesting there that she sort of has praise and criticism for the overall governmental response here.
Yeah, I mean, listen, this tension between the federal government and the states is fundamental to our country and to our society. It's always been there from the beginning, and it's going to be with us as long as the United States of America exists. However, at a time like this, you would hope that there would be maximum cooperation between Washington and the states. And, let's be honest, there's always going to be problems when you have, say, a Democrat in the White House dealing with a Republican governor. On the other hand, right now, those things should be swept aside. And unfortunately, there are still problems. And some of this, I think, has to do, Julian, we've talked about this before, that initially the coronavirus impacted blue states more than red states. And it's not a conspiracy. It's just because more people live there, California, New York, et cetera. But now it's spreading to the rest of the country. The president, I think, should see this as an opportunity not only to heal and help the country get better and healthier, but it's also an opportunity to show leadership as he heads into election season. And there are people who say he's not doing that.
It is interesting, though, Andy, because, and I'm curious if you talk to Ambassador Rice about this, there are people who are knowledgeable who are helping lead the response here, Anthony Fauci being one of them. Does that give her or us any hope that there will, there have been course corrections, right, along this way? Does that give us hope that we will see further course corrections?
Yeah, and
Yeah, don't forget to press that like button. Show me some love.
Tony Fauci has showed
Appreciate everybody.
to the
If you want to
president.
learn
He's
how to
changed
trade,
course. I mean,
trade
he's sort of famously
stocks
now gone from Easter to the end of
or
April and
Forex,
indicated that it probably will take
any of
longer
that
than
stuff.
that.
Just drop some comments down below.
So I don't think that President Trump's been blind to it. I mean, obviously, his interests are aligned with our interests in the sense that if we are able to beat this coronavirus effectively, then it puts him in good stead and puts our country in good stead. So it's not like we're at odds with the president, I don't think. He did try to downplay, obviously, the seriousness of this, but I think that he's, wised up to that. Susan Rice talked a lot about governors, and it's not just Democratic governors who are being effective. It is governors across the country. Maybe they have an advantage sort of being closer to the ground, but it's interesting. I mean, what is a state, Julie, right? It's sort of an artificial boundary. The virus does not recognize that. And I think that's very important to understand right now.
Andy Serwer, thank you very much. Appreciate it for bringing us that interview and your perspective. And coming up
Damn,
next,
man.
talk about
I remember when Wuhan, China.
Canadian response, even as we talk here about
Wait,
the
hold
federal
on.
response combined with state response. Let's talk about different countries. We're going to be joined by the former U.S. ambassador to Canada, Bruce Heyman. Keep it here.
Congress said it will tap stocks and bond markets. Oh, I ain't trying to. Man, it sucks to be in New York, man. Because, like, a lot of people don't even drive in New York. They catch the subway. And, like, I wouldn't even want to catch the subway because in my mind, I'll just be like, drams everywhere. You know what I mean? I could be on the subway by myself and I'll still be scared because I'm like, nah, somebody didn't cough on this chair or something. Like, I wouldn't know what to say. I mean, it sucks being everywhere, but that's even worse. At least I know I can get in my car and drive to my mama's house, not having to catch the shuttle. This is crazy, man. Never thought I'd wake up to a time like this. Like these times like that, these are things that I used to read about in the history books back in the day. You know what I mean? Like the Black Plague that happened 8,000 years ago. I mean, maybe not 8,000 years ago, but you get the point. You know what I mean? Like, people don't think about that. Like, that stuff you read about in the history books back in the 1500th century. You know what I mean? Back when they used to ride horses and stuff like that. They had these plagues going around, and people don't think about that. Now look, it's 2020, and boom, and this ain't even as bad as the other plagues they had.
Live. I'm Julie Hyman. We were just talking about the response of the states.
Oh, cooties, everything, man. I ain't left my house in 2 weeks.
Let's talk a little bit more about different countries and specifically.
I ain't left the house in so long that I think it was about 2 days ago when I was streaming. My buddy, sorry, I didn't get a haircut because I didn't even want to get a haircut. That's how bad it is. And we got the easy side. Like, ain't even much going on over here. I mean, a lot of people got it, but it ain't like Washington got it or New York or whatever.
It doesn't look like it's going to happen.
And like my buddy was watching me stream and he saw I didn't have a haircut. He was like, "Damn, bro, you look like Will Smith from Pursuit of Happiness." And I just started dying. I mean, I'm cool looking like that. As long as I know I ain't coughing, I ain't got that Rona, I'm good. I look like that all day.
Going into this decision to work with the president on.
I mean, I ain't even worried about it, to be honest. I just don't want to give it to nobody else. That's what I'm really worried about. I just don't want to give it to my parents. That's the only thing I'm worried about. I don't even get sick like that, to be honest. Like, I've never had the flu. I've never had chicken pox. So I don't really get sick like that. I mean, yeah, I get a cold. I mean, you know what I mean? I sneeze. But like stuff that people normally get, like chicken pox, flu, and whatever they get, I never get that stuff.
I think the reality is that although in good times we have about 400
but
people traveling across.
what I'll say is I never had the symptoms of it. I might just be strong enough to not feel it. I don't know. But I just don't want to like carry it and give it to my parents. That's what I worry about the most.
Restaurants are closed. So
let me see what you sent me. Let me read this novel. I posted that this is a good time to write your story about this time.
And so the functioning of the border needs to continue to function. My fear is after this is over,
to live through it on the bright side.
The borders there and do things to thicken that border in a post.
Get that homemade haircut popping. Let's put the clippers on it.
When you think about, I actually was just scrolling your Twitter feed.
Hey, nah, I'm just gonna keep it. I'm gonna keep this hair in my head.
One of the findings being,
you know what I mean? I ain't trying to. It's a homemade haircut. Nah, I'm good. I'll just trim it if I need to, but I gotta do it when I get to that point.
Having been someone who liaised between.
Hey, you ever seen like the man's worst hairiest man or whatever, the world's most hairiest man? I used to watch Ripley's Believe It or Not back in the day. Like if I start looking like that, then yeah, I might have to put a bowl on my head or something like that. You know what I mean? But until I get to that, I think I can manage.
Take the lead on policy.
It's not like we got to go to like drill or nothing like that anyway.
Has been through the professional side as opposed to the political side. Second, the coordination with the premiers, which is just like our governors, has been near in sync and absolute with each other. And so that coordination's working.
Would you look at that? Like, ooh, look at that green. Just look at the green. Look at the green. Come on, man. I don't go to church every Sunday, but come on. My mama baby is blessed. My mama baby is blessed. Hey, we ain't got to go back until summer? Oh, snap, bro. You talking about, like, when you say summer, what you talking about? You talking about, what? July? I mean, I ain't got to work out. My PT test will be last week. So you mean to tell me I can go back to eating donuts and not working out and getting fat for another, well, I guess 2 months now, the day the 31st. But I guess, that's still 2 months. So when you say summer, you talking about June summer? Because remember now, I think like June people don't got it, but we did or something like that. I think people didn't have drill, but we did or something like that. Like I don't know if they're gonna let us. I mean, I don't know. You know everything, man.
After this is all passed, what will trade between the two?
Let me look at this green real quick.
Oh,
you know what? I spelled it wrong. JBHT.
Here's my concern. These types of events promote nationalism. What we're already seeing this language. The White House is considering a Buy America provision for drugs and medical devices. It sounds good domestically. Why not buy America? Why not do all of that? But this nationalism makes us more isolated in the world.
See, this right here going to struggle to pass this line. I expect that. I ain't worried about it. When it passes line, I think I'm going to move my take profit up, though. I'm going to shift my stop loss all the way down to about right here. And if it keep going, then I'm good. If not, then, I made some bread off it.
We are interlocked in so many ways, and it's a balanced trading relationship. My fear is
this right here. I might hit red. It's fine. I'll take the loss. It's all good.
Makes us more.
It's all good. No big deal. I win more than I lose. Yeah, March, April, May was rescheduled, so maybe June or July. Boy, we good, bro.
Great to see you, and stay well. Ambassador Bruce Heyman, former U.S. Ambassador to Canada, joining us from Chicago. Appreciate it.
Pleasure. Thank you.
We straight. That's all I mean.
We'll talk more about the process to try to develop a vaccine for coronavirus. We'll be joined by the Chief Scientific Officer of Johnson & Johnson. Stay tuned.
Johnson & Johnson. Come on, give me that green, bro. What's this look like right here? It's gonna have to pass this, but it's fine. It's fine. Let's get this money. That's how I pay my rent right here. That's how I pay my rent right here. Oh, I'll be alright. I'll take the L. It's no big deal. No big deal. Let me see on a bigger time frame. No big deal. I didn't even see this right here. Maybe I should have looked at that first before I hopped in this trade. I put that there and I ain't even looked at it. I should have known. This is the part where every time it hits it, it goes back down. It's all good. Yeah, see, I marked it too. It's my fault for not paying attention. It's all good though. I use good risk management anyway, so I win more than I lose.
Still on?
You're watching Yahoo Finance Live. I'm Julie Hyman.
I really wish I got in right here.
Johnson & Johnson had come to a deal with the federal government to increase its manufacturing capacity to develop a vaccine for coronavirus. We're joined now by Dr. Paul Stoffels. He is the Chief Scientific Officer at Johnson & Johnson. We appreciate you joining us, sir. I'm sure you are very busy. I have seen some skepticism
Them boys
expressed in the
say
medical community about
September. I mean, I know it takes time, but damn, boy, you know how long September is?
through the
Like
process here. And
September is that's basically a whole. That's like a whole enlistment for some people.
Johnny, let me explain what we are doing. We are building on a platform which we have used already 4 times, 4 different vaccines for HIV, for RSV, Ebola,
Look at
Zika.
GG. See what
And
you're talking
4
about.
times we developed from the virus to getting it into animals, getting into humans, and also scale it up. So the process we have here is quite well described, and we know exactly what we need to do step by step. And that's why we can plan, we can prepare, and we can make sure we can keep on timelines. So in the past 10 weeks, we have gone from the virus to 10 different, more than 10 different vaccine constructs, test them in animals, and have concluded that we have a very, we have a very active vaccine, as we have shown in animal models with neutralizing antibodies.
What do you mean a whole enlistment? Because I was reading one of the I think it was like Johnson said that they're gonna start studying the coronavirus in September, and I was like, damn, if they're gonna, because you know they only canceled it because they assumed that everything's gonna be good by the summer. But if it gets worse, then they're gonna cancel the drill again. You know what I mean? Because it's only going to get worse if they don't cure it. It's only going to get worse. And then I was like, if I saw the thing say they're going to start studying something in September, and I was like, damn, if it take that long, that's basically somebody whole enlistment. I mean, you know, not 6 years, but you get the point.
In the Netherlands and in the facility you're building here.
Yeah, that will be very difficult because all of these vaccines use different technologies. We use a vector technology and a cell line to produce. And so with At26, we know producing on a cell line works out. Our technology is very difficult to take other vaccines in, and it will take like 12, 18, up to 24 months to tune around this type of technology to possibilities for others. So that's very challenging. Time to result here is quite unique because even
I don't.
now,
I
if
hate
we start,
when
we
people
scale
when they
up
do
from
this.
50
I don't
liter
really
to
like it.
1,000
I don't like
liter.
messing
We
with
have
it too
1,000
much.
people involved worldwide to make sure that the development and the manufacturing goes. It's not like you can turn around a manufacturing plant like that and overnight and say we do something else. And that's why we have stayed the course. We put a train on the rails and we go high speed to result. Mm-hmm.
Dr. Stoffels, I want to ask you about clinical trials as well. I believe you have talked about potentially September, as soon as September. But there have been some challenges already to
Why
getting
when I
those
get in, this
clinical trials
happen? See how they do your brother?
to go
They don't want a brother to
actually
win.
happen. So, is that the correct timeline?
It's all good.
Well, yes, we have
It's
worked
all
with the
good.
regulators.
I'm gonna
The
let it ride
discussions
anyway,
have
though.
been happening with the European regulators, with the
In
US
my
regulators,
reverse, who knows?
to align on timeline, the preclinical timelines, and what we need to do to kick off the phase ones. And we think we have it all under control, and that we can go to first the beginning in September.
Gotcha. They can utilize telework and just give people credit for calling in every day. Hey, I mean, I know I can do that. Well, I guess you can too. But I'm calm. All I gotta do, if your computer broke, I'm gonna say, hey, turn it off and turn it back on. That work? Yeah, all right, cool.
And we'll have to
Go ahead and run me my check.
very fast. Now, the benefit for vaccines is that you recruit healthy people, like you and me, and we need to find the volunteers who want to participate in that, and that's an easier way to recruit. So in vaccine studies, you can recruit 100 to 1,000 a day as long as you organize it, and that's where we think we can go fast in this clinical trial
I'm good.
settings.
And what does success look like? Because we know the flu vaccine is not 100% effective. So what's the percentage of efficacy which will determine if this works?
Well, that's a very good question. We don't know, but there are two things we try to do: is to learn whether it prevents infection, and to learn whether it prevents severe disease. I think the two things are important. Preventing severe disease will be an outcome, or preventing infection. I won't put predictive rates. That is together with the healthcare authorities. We have to say what is the protection.
Man, I should have known. I wasn't paying attention.
But
It's all
hopefully
good.
very good, and we have good experience.
I need to
so
get out
I
this
hope we
area
can get to
first.
quite
This
significant
area
level,
right here
but
is
that
what I
needs
should have
to
waited
be shown
for
in the
to
clinical
hop in
trials.
this trade.
Dr.
I don't even know why I
Chief
got in.
Scientific Officer at Johnson & Johnson. Sir, thank you very
It's all
much.
good,
Appreciate
though.
your time. Now let's move on from trying to prevent coronavirus from taking hold in our bodies to protecting our bodies, and particularly that of healthcare workers. We are joined now by Ed Kennelly. He is the CEO of Bauer Hockey, which normally makes
See how they play me here?
clothing,
It's the trade I was in. I got in here,
right now
rode it
is
all the way up
converting
here,
some
and
of its
then some
manufacturing
craziness went
capacity
down.
to making
And then it
masks
come.
for
See,
frontline
them boys
workers.
play too much.
Sir, thank you for joining us. And we've heard from a
They
lot
play
of
too
companies
much,
that are
man.
doing this. How exactly do you go about doing it? Because yes, you probably make masks for goalies, for example, but it's quite a different matter to make a different kind of mask. So how do you shift your manufacturing to address something like this? And sir, if you're on the phone, you might be muted and need to hit *6 in order for us to hear you.
Good afternoon. Thanks for the question, and thanks for the invite onto your show. The conversion to this type of manufacturing wasn't all that difficult. We have a couple of facilities in North America, one in Liverpool, New York, and the other outside of Montreal, Quebec, that has some what I call small-scale specialized manufacturing. That we build lacrosse helmets in New York and ice skates in Quebec. We were able to very quickly, in a matter of 36 hours, build a prototype mask. We sourced some raw materials locally from New York State as well as the province of Quebec, and built prototypes, built some jigs so that we could build these more easily. And then focused last week really on building multiple workstations in both locations. So very entrepreneurial approach by our team in both locations. And we're used to doing some specialized manufacturing, and this was quite a different type of product, but the process in which we approached the challenge was quite similar to what we do in some other things.
Ed, Dan Roberts here. Thanks for joining us. If we can zoom out and just talk about the sports world right now, obviously, as everyone makes either sports merchandise, sports equipment, it's hard because not only do you have the professional side paused with the NHL, but there isn't youth hockey or anything like that. Obviously, most important is that you're helping to make these masks and this equipment. But when you look at kind of the calendar, and obviously no one really knows anything right now, but is Bauer hopeful that the NHL will get to resume its season? What are you hearing from Commissioner Gary Bettman? And then B, how much have you watched kind of the other sports leagues right now and taken cues from them or from your kind of peer companies that make other equipment for other sports? Because everyone in the sports world is going through the same thing right now. We had the chairman of Fanatics on yesterday, and they make the official jerseys. And obviously, business has ground to a halt for them in terms of all the sales they do at stores and in stadiums. So just give us a sense of your outlook right now for NHL and for that business.
Yeah, great question. So just I'll take a step back a little bit about our company. Bauer Hockey is part of a holding company called Peak Achievement Athletics. The other brands that are in our portfolio that we manage are Easton Baseball and Cascade Lacrosse and Maverick Lacrosse. So from a broad consumer sports perspective, we've been looking at different sports and the effects of the league shutdowns and youth sports shutdowns across the board. Look, I think right now, the things that we're focused on is making sure that we're leveraging the strength of our balance sheet, which we feel highly confident in. Secondly, we're working with our partner retailers. As you guys know, the retail business has effectively shut down. And there is some e-commerce, but honestly, it's not material at this point, and that's really fallen off too because of the follow-on impact of the youth leagues coming to a screeching halt. The other thing that we're doing across the portfolio of brands is starting to think about when we come out on the other side of this thing, what's the call to action to get consumers back on the fields, in the rinks, and back in the stores to help stimulate the economy from a sporting goods perspective, and working on strategies right now to try to do that. We're very realistic. If we achieve some of the unemployment numbers that our economists are throwing around, there's going to be what I expect to be a relatively slow ramp back up for purchases through the lens of the impact on disposable income and consumption that we expect to see out there. So,
all right. Hey, good luck. Be safe. Take care. Hey, thanks for stopping by, though, man. I know I got to get some information from you.
To make sure that we're not building too much inventory, which has.
I appreciate all the knowledge and everything you share.
Ed Kennelly is the CEO of Bauer Hockey. Thank you so much for joining us.
Thank you, guys.
Well, coming up next, we talked a lot before this crisis about the private equity and venture capital markets and the boom that we were seeing there. What effect has the coronavirus outbreak had on the
Hey, I got you. I don't always go live, though, with this, though. Sometimes either this or just playing video games or whatever I do. I be wilding sometimes. Like after I do this, I'll probably go live. I'll probably start my live, but probably play some video games with my boys. I know they're about to send me the invite in the next 10, 20 minutes. Hey, y'all, make sure y'all press the like button, follow the page, Ski to Season TV. That's what we do. We have fun. We make money, play video games, make money, vacation, all that. Why work a 9 to 5 when you can sit home and catch these pips? With the press of one button.
You're watching Yahoo Finance Live. I'm Julie Hyman. The major averages, by the way, have now turned negative with the S&P 500 off 0.2%. Now, going into this coronavirus crisis, we talked a lot about private equity and venture capital and the boom we were seeing. Would the WeWork failure to IPO cause a reckoning? Didn't seem to be. Melody Hahn's been tracking all of that out on the West Coast, which is the epicenter of the VC world. So have we seen a sort of reckoning that didn't come with WeWork, maybe coming with coronavirus?
Yeah, Julie. So, of course, 2019 did cap off a record decade for VC. Aggregate yearly deal value actually grew by 5 times since 2009. And the momentum was still there going into 2020, despite a lot of what you pointed out, the reckoning that was happening with these valuations and lack of profitability. But I actually have been speaking to several VCs here
Wow,
in
it's
the
still
Valley as
hanging
well
in
as
there.
in LA, who say this is actually a huge buying opportunity and a way to invest cheaply. What I mean to say is that entrepreneurs on the other
Still
side
hanging
of the
in
deal
there.
are more likely and more willing, perhaps, to be taking
If
less than favorable
if it goes
term
back
sheets
up, I
so
should
they
be
give away
fine because
more
this
equity
came
when they
down too
lose a lot of
fast,
their
and the
rights and their
market
voting
shouldn't
rights
go in
in
a straight
order to
line.
get that capital
So
infusion right
I'm
now to keep
hoping
their companies
that I
afloat
get some
and to
kind of
keep people on
retracement
payroll, as we've discussed many
coming
times
back
in this
up.
program. But I have to say the
And
pandemic
then
is
I
a good
feel like it's
driver
going to
for
be
many
some side by
startups that
side
had
movement in this
unhealthy
area,
balance sheets going
which
into
is
this
why I
crisis.
marked it in the
And
first
we
place.
have
I don't
seen
even know
major
why
Medium posts,
I
blog
took the
posts,
trade anyway.
specifically saying, hey, we're wrapping
But
here.
I think what I'm going to
We see
do
the founder is stepping
is once
down.
I
We see he
get
was taking a leave of
out
absence,
this area,
specifically with some digital media
I'm going to
companies.
snatch a
So
little bit of
I think
profit and
this
then
will be
just
the
leave.
proverbial separation
I
of the
might not
wheat
get
from the
much,
chaff, and
but
the winners will be more fierce and the losers
profit
will
is
be more
profit. I got to
fierce.
get out
That
this
middle
trades.
ground that we did see over the last
It's not in a
decade
good spot
will
right
likely
now.
disappear.
All right, we will count on you to keep
See,
tracking it. Melody
you can
Hahn,
take a look
thank
at
you
it right
very much.
now.
Appreciate it. And thank you all for watching over the past
And as
hour
you can
and to
see,
my Yahoo Finance
every time it
colleagues.
gets up to this
Keep it
point,
right here. We will be hearing from
or
the
even
Federal Reserve
here,
official
it comes back down. So I might even, let me see, I might even take my profit somewhere around here if I get lucky enough for it to go back up. If this goes up, then I should be fine because this is a bullish candle right here. Normally when you see a candle that came all the way down and stopped and closed like that, that's bullish. That's a sign of bullish. So it should come back up and form the W. And that'll be boom, 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 and then boom. It might not go all the way up to this line though, because like I said, every time I tap that, it comes back down. But it's all good though. I'm hopefully I can catch it about right here. At least get out this trade. Work out with something. As soon as I get to the green, I think I'm do like a little trailing stop. Hopefully if I get to the green. Because it's playing with your boy right now. If it passes though, then I should be fine. This is definitely a bullish candle right here. So if I can get this to pass this, then I'm good. Uh-oh. They heard me talking. Man, this is a good entry right here. I can just hop in right here and ride that thing all the way down. But I don't want to get greedy, man. I'm just going to wait it out. That's a good pullback too, man.
Mary's on, unmuted.
Hello and welcome to live coverage here on Yahoo Finance. I'm Zach Guzman.
Nah,
Right
don't
now
be
we
greedy,
have
man.
stocks
Just write it down.
still down just slightly right now. The S&P 500 off by about 1%. We'll be tracking that throughout our hour here on Yahoo Finance. We're also
Every
seeing the
time I get
Dow
greedy.
off by about 0.83%. Of course, right now, keep in mind, we are coming up to wrap up Q1 here. The Dow on track for its worst single quarter decline since the fourth quarter of 1987. That would be its last worst first quarter on record. Right now, we're seeing energy up by the highest margin, up about 2.5% right now. It's up more than the market over the last 5 days, despite the fact that oil prices are lingering back near those 2002 lows at around $20 a barrel. Early morning headlines, though, that we had out earlier from Goldman Sachs were noting that the economic downturn could be worse than originally projected right now. That firm looking at about 15% unemployment in the U.S. as things get worse here. We'll be tracking unemployment claims numbers, of course. What's to follow that 3.2 million number we got last week coming out later on Thursday. But first, we want to kick off our show with more news out from the Fed. Another day, another Fed lending facility to report. The Federal Reserve announcing this morning it would launch a temporary lending facility that will allow foreign central banks with accounts at the Fed to convert their holdings of treasuries into dollars as they continue to help address all of the market jitters that have hit here as coronavirus cases continue to spread across the country and across the globe. And I want to bring on Yahoo Finance Fed reporter Brian Chung right now for more on that. Brian, if you're counting at home, this is number 7 in terms of lending facilities we're now up to.
Hi, Zach. Yeah, this is the 7th facility that the Federal Reserve has launched. The details of it came out earlier this morning. The Federal Reserve announced that it would be establishing what they call a repurchase agreement facility. This is with foreign and international monetary authorities that have accounts through the New York Federal Reserve. They call it the FEMO repo facility. And what this basically does is it allows those other countries to actually swap temporarily any sort of U.S. Treasury holdings that they have for cash. And they hope that this will provide some relief to the U.S. dollar funding markets, which we know have been strained over the past few weeks amid all the concern with the coronavirus globally. A lot of companies and lots of other types of institutions have been trying to bear down in hard U.S. cash and haven't been able to go anywhere to find it. So the Federal Reserve's institution that it just put into place today hopes to provide some liquidity for that. As you mentioned, it's the 7th facility, the Federal Reserve continuing to try to combat the economic impact, not just domestically, but also internationally with the facility today. And the Federal Reserve obviously has come into view here with all the actions that it's undertaken since the beginning of March. And we have the privilege of having with us right now San Francisco Fed President Mary Daly on the phone to chat with us a little bit about it. President Daly, are you there?
I am. Thank you for having me.
Thanks for having us. So I wanted to chat with you a little bit about your district. So for those that aren't aware, the Federal Reserve has 12 different districts across the country carved out in different regions. So your region covers 9 states, the entire West Coast. So we've heard about the stories in San Francisco, LA, Seattle. So I'm just wondering, based on the contacts and the conversations that you've had, what has been the effect of the coronavirus in your district and the economic conditions in the 12th district?
Well, it's been what you've been hearing in the news nationally. It was a hard stop on economic activity. We were among the first states to be affected. You mentioned Seattle, San Francisco, LA, and the leadership in those areas basically went to shelter in place pretty quickly. And so we had this hard stop on economic activity that has now been compounded by the fact that this is broad-based, it's across the globe, and travel, international and domestic, has come to a halt. Tourism-dependent industries are now not working at all. Retail's not working at all unless you're a grocer or a pharmacist. And this has had a very big impact on our communities with, literally millions of people losing their jobs. This is very similar to what we're seeing in the United States. And I expect it to get a little bit worse as we do the right thing and shelter in place before it gets better.
President Daly, we've had a number of estimates, and it's hard to estimate right now, but questions about whether or not we are already in a recession or are headed into one, and to what degree and how deep that recession is going to be. First of all, is that your baseline forecast? And secondly, do you have any sort of projections on where unemployment or GDP might be for the U.S.?
So one thing that we all have to face is that the virus and its evolution will in turn determine both the magnitude of the downturn and its duration. And so predictions become very, very challenging to make. What we do know for sure is that if we're not already in a recession right now, we will be, and I expect that we already are. You can't have millions of people losing their jobs and tens and thousands of workers being furloughed for an indefinite period without tipping the economy into a downturn. The duration of that downturn will, of course, be affected by the evolution of the virus. And what we know from other studies of other pandemics is that if we do the right thing and shelter in place and curb the spread of the virus, the economy will be in the best position to bounce back. So that's where I'm putting all of my efforts is shelter in place, do the right thing, shore up, try to build a bridge for American families and households, and businesses across the coronavirus and put the economy in the best position to rebound once the virus is cleared.
So the federal government has really come into view with that big bill that was passed last week, signed by President Trump. It would appropriate $454 billion to the Fed and the Treasury for a number of lending facilities. And the Fed has already telegraphed its intention to open up what they call a Main Street lending facility. I'm wondering, based on the conversations that you've had, I mean, what might that facility look like? Or if it's still undergoing the works right now, what would you like it to look like?
So it is undergoing the works. The Board of Governors is working hard on this. In fact, the entire Federal Reserve staff is across the entire system is working furiously trying to put up the various facilities we've announced, see where else we may need to treat. But let me back up from a moment from any particular facility and just talk about the overarching principles. There is an alphabet soup of facilities, 7 if you're counting. And then what they're all meant to do, though, is to provide liquidity in credit markets, in financial markets that are strained. And so that we're trying to work on the plumbing. And what we're finding with each of these new facilities that we announced is that that's going to do another crack of the financial system that we need to fill and ensure that those markets have the liquidity they need to be able to do the basic lending and borrowing that is required. So that's why we're doing this. If you think about a Main Street facility, that's really meant to complement the fiscal stimulus or the Fiscal Emergency Act that was put into place, the $2 trillion act that said we're going to target directly small businesses with SBA lending. And then we already have facilities that are helping big corporations through capital markets. But there's this whole swath of institutions that don't access capital markets very easily and don't qualify for small business lending. And so if you think about that's a part of Main Street that still needs to be treated, that directly employs, really millions of workers in the United States.
Now, with regards to addressing that, what other tools does the Fed have in its toolkit right now to maybe do that? The Fed has described its actions as being aggressive, but does the Fed have the ability to be even more aggressive? Could you see the Fed asking for congressional authority to, per se, buy longer dated corporate bonds, buy longer dated muni bonds? Is that something you would like to see? How aggressive, I guess, can the Fed get from here?
I want to go back to something I said earlier. The virus will determine the timeline that we have, but it will also determine the amount of action we have to take. These are unprecedented times, and they call for unprecedented action. We've already taken unprecedented action, and I wouldn't want to say we would never do something or we'll definitely do something because we're dependent on the evolution of a virus, which we don't control other than to listen to our public health officials. So the main thing I want to convey to your listeners is the Federal Reserve is prepared to do whatever it takes within our powers to ensure that we're part of the solution of shoring up people over the virus, shoring up the American economy, and putting us in the best position to grow again once the virus recedes.
President Daly, it's Zach Guzman here. I just wanted to jump in with a question in regards to those powers that you guys afforded yourself. It's interesting because you go back to the last FOMC vote that you participated in December of 2018. That was the vote that actually raised the target range of the federal funds rate to 2.25% to 2.5%. Of course, the president has been very critical. Others have been critical about maybe potentially that being too fast, too quickly back then. But now looking back in hindsight, it had given you guys the ground to work with when we think about that first 50 basis point emergency cut that kind of kicked all of this off. And as you noted, the 7 lending facilities since then. But just that first room to move lower. In hindsight, looking back, I mean, do you think that was critical enough to give you guys enough space to work with to kind of get this kick-started here?
So I'm of the mind that you need as much policy room as you can by ensuring that inflation achieves its 2% target and we achieve full employment. And I think we accomplished that. We had the interest rate set at the right level to allow us to achieve our dual mandate goals, which are given to us by Congress, and put the economy on a solid footing. So I'd rather talk about we had the economy on solid footing rather than, did we have the right amount of space, policy space? Because ultimately the policy rate gets set to ensure that the economy achieves its dual mandate goal. The good news from my vantage point is, and what makes me optimistic, that if we shore American households up and help businesses get through the virus, we will be well positioned going forward. What gives me hope is we were on a solid footing, a very solid footing with a very strong economy, 11th year of an expansion. before the coronavirus. Then we get this massive shock, a pandemic that affects everyone simultaneously. It's better to have been on a good footing when that happens than on a weaker footing. That will give us the best opportunity once the virus recedes to continue to grow and to expand again and get American households and families back to work.
Another question, I guess, on that point is what more the government can do to make sure that there's the opportunity out there for people to get back into jobs. And one of them has maybe been infrastructure. And in fact, with the Fed having slashed rates to zero, you actually heard the president tweeting this morning saying that he thinks now is the time for stimulus, maybe in the form of infrastructure. He said that in a tweet this morning. I'm wondering, do you think that more spending should be done now? How does kind of monetary policy create the fiscal space to try to, I guess, maybe counteract the economic impact of the virus?
Well, you know, what monetary policy does, and it's a really good lesson in what the Fed's responsibilities are, which are both given to us by Congress. We were given these responsibilities by Congress. We are set to achieve the dual mandate goals by moving interest rates and other policies in order to stimulate the economy to get there. We're also tasked with being the lender of last resort, and that's consistent with all the facilities we've opened. So what the infrastructure and other discussions rely on is the fact that we have cut interest rates to near zero. And that's in an effort to support the economy during the coronavirus and then add stimulus to the economy once the virus has passed us. And if we choose to spend as a society on things like infrastructure, I've personally been a proponent of that in previous remarks well before the coronavirus, that building our physical infrastructure and our human capital infrastructure through education are the two best ways to ensure that we can grow faster going forward. I think that argument is as sound today as it was 6 months ago.
Yeah, and President Daly, I actually think you're one of the better Fed guests we could have today as we're talking about this too, because so much of your research had been focused on the labor market in terms of all the research that you worked on in years prior. Looking at it though, I mean, infrastructure spending, there's a lot of concerns about the delay in terms of having people who might be out of work right now, as we got those jobless claims numbers last week, who might be out of work right now and wonder how long that delay might be. How would you look at maybe an infrastructure spending bill versus other things that could be done on the fiscal side, in addition to all the levers you guys are pulling on the monetary side to make sure that we do get a recovery as quickly as possible here?
So with these questions, I personally find it helpful to break things into the three buckets of efforts we have to make as a society, and the Federal Reserve plays a role in that. So the three buckets are, the first order of business is the public health. We have to follow the guidance of our public health officials, spend resources on public health to ensure that we get the coronavirus under control, treat the really hundreds of thousands of people affected by the virus, and ensure that more people aren't affected. That's priority number one. Priority number two, in my judgment, is we have to think about shoring people up during this time when the very thing we've asked them to do, we've asked American people everywhere to shelter in place. So they're doing the right thing. And it's their public servants' commitment and responsibility to ensure that we shore them up as much as we can during this period so that doing the right thing doesn't wreck your livelihood. So that's priority number two. Then priority number three, and this is where the infrastructure spending and other things come in, and the Fed's commitment to keep interest rates accommodative until we achieve our dual mandate goals. That's about what do we do once the virus subsides, and how do we get Americans back to work? If people have been displaced, if jobs have been lost, how do we get those individuals back into the labor market so that they can take care of their families and participate in their communities?
President Daly, kind of wrapping up here, there's a lot of nervousness out there, and you actually addressed this in a video addressed a few days back. You have conversations with businesses, people in your district all the time. I'm just wondering if you could peel back the curtain and give us a little bit of insight into what you're telling them right now through this time. What are you reassuring them in terms of what the Fed is doing? And what do you have to say, I guess, to the American people that are wondering how we're going to get out of this economic rut?
So I tell my businesses, leaders, my community, my employees, and I'd like to tell the American people, we're doing exactly what you would want from us as public servants, in my judgment. The Federal Reserve alone can't solve these problems. The federal government and local governments alone can't solve these problems. It takes all of us. And the passage of all of us working towards the same goal, and the passage of the stimulus in Congress and the president's signature, the Federal Reserve taking these unprecedented actions, I actually see this as We are taking unprecedented actions in an unprecedented time. And the thing I want to leave the American people with is while these actions are unprecedented, we're not unpracticed at them. We know how to do them. It's just that the scale is so much more vast. And so that's why you see, every day something new coming out, some new method to treat these problems. It's just to treat the scale of the problem. We actually know how to do this, and I think we have demonstrated as a collective that we are actively doing it.
All right, there you go. San Francisco Fed President Mary Daly, thank you so much for joining us and taking the time to chat with us today.
Thank you. My pleasure.
All right, and our thanks to Brian Chung for lining that one up as well. We're going to take a quick break here. As we look at the markets, we're seeing the Dow still in the red, the S&P off more than 1%. When we return, though, more on the stimulus measures being taken right now to restore the economy and why the president's daughter, Ivanka Trump, thinks that it will be the fastest response with the Small Business Administration stepping up to backstop loans as quickly as this Friday. That exclusive interview right after the break. Who Finance live market coverage here. I'm Zach Guzman. Right now, we're seeing the Dow off by 1%. The S&P, the biggest loser on the day so far, off by 1.1%. Right now, energy holding up as the biggest gainer, up more than 1% right now, up about 1.3%, matching the move higher we're seeing right now in crude, still trading near those 2002 lows at $20 a barrel. Meantime, though, we're also addressing the question of how the government is going to be rolling out that $2 trillion stimulus bill that the president signed last week. A lot of people wondering how quickly that will be able to reach some businesses that are feeling the pain right now. And our own Sabine Marcellus caught up with the president's daughter, Ivanka Trump, senior advisor to President Trump, about how quickly that money will be able to make its way to business owners.
Speed is absolutely critical. I mean, they have to meet that overhead, right? So, and have to have the ability and the cash flow to do it. As we saw in 2008, it took, I think the average was 4 to 6 months to get the relief out the door. So we're getting really creative in teaming up with the private sector and deploying the money through using the technology levers we have. Secretary Mnuchin and his team have been working closely with the White House and the SBA to ensure that, the SBA, to the extent possible, is taken out so people can go directly to their banks, but it's backstopped by the SBA, so that's one less point of filter. And this is going to happen this Friday. So unprecedented speed that this ecosystem, this technology system will be up and running to ensure that not only from an individual perspective, these direct deposits happen in a timely fashion, because simply put, people can't afford to go without a paycheck, but that also small business owners are able to apply. And again, it's 7A lenders, go to your local bank directly. The SBA is there to backstop it, but that's the quickest way that this transaction will happen. And starting Friday, we'll be ready to roll.
And what was really interesting about this exclusive interview I had with Ivanka Trump is that she did it from her office at the White House. So this whole time she's been watching interviews being done via Skype, via Zoom, on TV, and it was her very first time doing it herself. And in terms of small businesses, so she was saying that the over $350 billion in loans can be turned into grants as long as they keep these people on their payroll.
So, Bill, I mean, when we talk about this, she was stressing how quickly it was going to come in terms of reaching businesses. The question now becomes what phase 4 will look like. We were already hearing a little bit about that this morning when the president was tweeting, but it does sound like overall there is a push here to kind of dip back into the well and make sure that there is enough being sent out to businesses and Americans who are feeling the pain as more and more potentially look at furloughs or job losses entirely.
Yes, absolutely. In fact, Ivanka Trump was saying that, yes, the federal government is stepping up, but there's a lot that we can do individually to also help small businesses. She said that she is personally making sure that she's getting more dry cleaning and more orders to her florist in advance, prepaying to support that business. And she encourages us all, if we're able to, if we have the financial means, to prepay for services 6 months, 12 months down the line, to do our part also to sustain the small business ecosystem. Because let's remember that it accounts for about 50% of Americans' employment.
And Sabine, I know you're going to be rolling out clips from this exclusive interview throughout the day. Much more to come here on Yahoo Finance. Outside of the Small Business Administration things, what more do our viewers have to look forward to?
Absolutely. Thanks, Zach. See ya.
Thank you very much. All right. Well, stay tuned for all of that coming up here throughout the rest of the coverage here as we wrap up Q1 in 2020 here on Yahoo Finance. But after the break, we're going to take right now, we'll be digging further into what the government is going to be doing regarding mortgage payments that a lot of Americans might be stressing out as they look into the face of the looming disaster here. When we talk about Americans losing their jobs, Federal Housing Finance Agency Director will be joining us after the break to discuss what help can be given to American homeowners through the crisis. More on that right after this. Welcome back to live coverage here on Yahoo Finance as we wrap up Q1 trading here. We're seeing the S&P, the Dow, and the NASDAQ all in the red. Right now, pretty much on pace with what we've seen so far. The S&P off by about 1.2%. Meantime, we're also addressing what a lot of Americans are worried about when it comes to paying rent. Potentially, you're a renter or a homeowner, mortgage payments on top of minds across the country as more and more Americans brace for what could be coming in terms of job losses. And right now, the Federal Housing Finance Agency says that Fannie and Freddie Mac will offer owners of multifamily properties forbearance relief on their mortgages on condition that they suspend all eviction of renters who are unable to pay because of the fallout we're seeing from the growing coronavirus crisis. We're also seeing states take their own measures. Of course, New York Governor Andrew Cuomo talking about very much the same things in terms of protecting residents from evictions. For more on this, I want to bring on a very special guest who knows all about this. That would be the Federal Housing Finance Agency Director, Mark Calabria, who joins us now on the Google Hangout. And Mark, when we look at this, I mean, a lot of people are wondering what can be done here. But of course, Fannie and Freddie generally backstop about half of the mortgages out there. So they're going to be important in all this. But it does sound like relief is coming. What kind of advice are you giving to both owners of these apartment buildings, houses, and then also the people potentially paying mortgage payments themselves? How should they be weathering this storm?
Thanks, Zach. And I do want to emphasize that while Fannie and Freddie have just under half the market, we've coordinated with HUD, FHA, we've been coordinating with lenders. And I would say the standards that we have set really are being used by over 90% of the market, even if we're only about half of it. So let's start with renters. Because Fannie and Freddie, we operate through the mortgage, we're offering forbearance to landlords if those landlords agree not to evict during the forbearance period. So if you're a renter and you're experiencing distress, you've lost your job, you've had a decline in income, you can't pay, you immediately reach out to your landlord. I think a lot of landlords will probably give people a break anyhow, but if your landlord needs to get a break themselves, we're passing that along. And again, we'll give the landlord forbearance for as long as the time where they can't make the rental payment. And again, that's where we focused on the rental side. Very similar with the homeowner, actually easier with the homeowner because we directly interact with the mortgage there. If you've lost your job, if you're suffering decline in income, or if your spouse has suffered decline in income because of this crisis, and you don't have to be sick yourself or anybody in your family could be sick. It really could just be your job has been lost. You're working at a restaurant, it's closed down. Reach out to your servicer. That's the lender you talk to every month where you send the check, and we'll put you in forbearance for as long as this time, and then we'll get you back on your feet when the economy comes back.
Mark, it's Kristen here. Is there at all a concern on your end that essentially lenders won't be able to keep this up as long as this crisis might continue on? I get that, we can provide this kind of relief perhaps for 1 month, maybe 2, but the longer this goes on, is there at all a concern on your end that lenders might not be able to keep this up?
That is a concern, and it's even a concern in the short run. So let me really emphasize 2 big reasons. One, triaging this. Lenders across the board, they're doing the responsible thing in that their employees are working from home like the rest of us. So the typical efficiency of servicers is now down 25-30%. They can't handle the call volume. The servicers I've talked to are telling me that 70-80% of the calls are people who aren't suffering a hardship today, but who want to know what their options are. And that's fine. We all want to be informed. But I would ask, if you're not facing a hardship right now, if you haven't lost your job, at least wait a week or so. We can get through the first payment at the beginning of the month, where we can help the people who need help. So there really is a triage situation here. The lenders I'm talking to, many of them also tell me they're about a week away from a digital solution where all this can be done online. So I would say and ask really, if you don't need help today, please don't call. Let those who do need help be focused on. That's the first thing. And again, if we don't get a lot of people taking advantage of this who don't need it, that will allow the lenders to continue the servicing for much longer. So we've talked to a lot of the big servicers, and you're right. If this goes on for 2 to 3 months, and so borrowers are missing 2 or 3 payments, then I believe that the numbers we're looking at, then the system should be okay. If we're looking at a 6 month or plus, then there's really going to be a lot of stress among lenders. There's going to be stress at Fannie and Freddie. So our hope is, of course, and I don't have a crystal ball, we'll all find out how long we're going to be in this. We've got this, I think, a sustainable path for 2 or 3 months. If it goes beyond that, we may need to have Congress or others step in to provide a little more support.
Yeah, and that's the question right now, because, when we talk about all the data, the underlying data here, a lot of people tying this back to the financial crisis each time we do get an update. But one of those things, of course, Americans wouldn't forget is that $190 billion bailout that happened back then to take over Fannie and Freddie. Of course, right now, as you're saying, they're kind of setting the example beyond just the mortgages that they back. So the industry following the example here. But when you do look at that, I mean, Amherst Holdings was doing the math that you're talking to there. In extreme scenarios, when you see more than 25% of households that rent in the U.S. not making those payments you're talking about because of the coronavirus, that would require, they say, about $12 billion a month in government support. And you pair that with the fact that you're seeing, at least when you looked at the numbers last year, more and more of these mortgages coming from Americans that have about 43% of their income going to mortgage payments. Those would be the ones that are a little bit more stretched here to be making their mortgage payments. When you pair those things together, it does sound like a large amount of money would be needed to be thrown at the problem, and an increasing amount of Americans caught in these more expensive relative to how much money they're making mortgage payments here. So what do you say about people who might be looking at this and, again, tying it back to 2008 and saying, uh-oh, this doesn't look good?
Well, I certainly share those concerns. We want to make sure that we're not having to rescue Fannie Freddie or the lenders. Let me first say, for those borrowers who may be worried about payment shock, I mean, most of the time, what we're going to try to do is, let's say you miss 3 payments, we tack on 3 payments to the end. You could, of course, always pay more if you want to catch up. But the real approach here is to make sure that borrowers aren't facing payment shock. A real open question is, if this goes on beyond 3 months, are we going to start to see declines in house prices? At least today, we're not facing a lot of borrowers that are underwater. Most of the borrowers, we're hoping that when the economy gets going, starts their job again. So if this is a temporary time, I think that this is manageable. So 2 margins to think about this is, A, what's the take up? Are we going to see 25%? Looking at Fannie and Freddie and look at our estimates, we think if this only goes on for 2 or 3 months, the take up's going to be closer to 5%. So that's one margin. The other margin is, how long does this go on? So I 100% agree. If we're in a 6-month situation, take up may well become 20, 30%. And that's at a point where you're certainly going to see tremendous amount of stress and potentially face rescues, bailouts in the mortgage market. But again, if we're in a 2-3 month situation where take up is closer to 5%, then it's absolutely manageable.
All right, there you go. FHFA Director Mark Calabria, thank you so much for joining us. Appreciate you taking the time.
Sure.
All right, well, we're going to take a quick break here, and coming up, more on the housing sector with a name you know very well. Shark Tank's Barbara Corcoran joins us for more on what homeowners should be thinking about through the crisis. More on that. She'll join us after the break.
if not.
Welcome back to Yahoo Finance live market coverage here. We're still seeing the Dow and the S&P off by about 1% in this last day of first quarter trading. To wrap it up, keep in mind, of course, we'll be watching where we close, though it does look like the Dow's on track for its worst single quarter decline since the fourth quarter of 1987, just to put things in perspective here. Meantime, while we're continuing to track the rising amount of coronavirus cases, a lot of homeowners right now are wondering what that means for housing prices, and a lot are actually struggling to even complete home purchases that may have already been underway before the economic downturn hit. As people stay at home, harder and harder to get some of these deals passed through. For more on that, I want to bring on Shark Tank's Barbara Corcoran, the Corcoran Group founder, and of course, the favorite shark for a lot of you out there. Barbara, it's good to chat with you again. Thank you so much for joining us. First, I just want to get your thoughts so far on what we've been seeing. A lot of people right now who work in real estate struggling to complete deals that were already in the pipeline. What have you been hearing?
The real estate market is a very lopsided market right now. And you alluded to earlier that a lot of people, some people are not able to close their deals. That is a problem. Probably 1 in, I'd say 10 deals, if there was an average, people are not able to close. They can't get the appraisal done. They can't get the financing in hand because of the administrative challenges that are happening right now. But it's been a very lopsided market in one regard, because I've been speaking to people around the country in the trade. People have been closed down. People are still selling. And the high-end market is suffering already. The middle end of the market is clicking on like there's nothing wrong with it. And the low end of the market has actually gotten stronger, surprisingly. I was speaking with a broker in Louisville this morning, and their average price is about $170,000. And they had a record month of 875 sales. Same is true of Dallas and Fort Worth. But when you look at New York City, the listings are down, way, way, way down. We had 700 new listings versus 1,700, and deals are just not being made in the city. We had actually 4 sales in a week. I've never heard of anything in a city like New York.
Yeah, I mean, that was kind of the headline that jumped out at me too. When you look at it, the Olshan report that tracks the luxury sales, that would be above $4 million sales. Only 2 contracts signed in a week. That was the worst that they've seen since August of 2009. Again, one of those other comparisons that we can look back to the financial crisis there. But you're right. I mean, I guess there are some swings when you look at luxury versus some of the lower end here, but they're all struggling with the same thing. When you think about how many checkpoints that need to get done, inspectors saying that they don't want to come out to houses, they don't want to put their workers in harm's way. So how do you really, I mean, the data isn't necessarily going to play out here because home prices, we got last clip, but that was for January. So you're not necessarily going to see any real number impact. But how bad do you think it could get in terms of the slowdown, what you could see housing prices dipping to later in the year?
You know, it depends more on what the unemployment rate is and how well they roll out the new package that has so many benefits for people. It depends on those 2 cards more than anything else that is actually happening in the real estate market. But let's say, for example, unemployment rate doesn't go through the roof, and I think there are as many people believe it's going to that don't. Let's say the incentive package comes out and saves a lot of people, but for how long? 2-3 months. But the best case scenario is with cheap mortgage rates, constrained inventory, which we definitely have because there's very little new units coming on the market. And with the help from the stimulus package and the spring market we never experienced converging with the upcoming fall market in the summer, if that all hits together, you have a possibility that the market will explode in terms of number of sales and rising prices. It could be a catch up and beyond a catch up. But what is the basis of all that is you must keep unemployment must keep unemployment low, and you must have this new package come out and actually get the cash into the hands of the people that need it. And that's the $1 million question, really.
Hey, Barbara, Kristen here. Good to chat with you again. I wanted to know, I know you were talking about the high end, the luxury market is struggling right now, while on the lower end, it's actually booming. If you are a realtor in a place like New York, is this a time where just to get through the next couple of weeks and months, you have to start pivoting on what you are going to be showing and what you're going to be selling? And if you are a buyer, if you still are getting paid, if you still have a job, is right now a really great time to get into the market?
Well, it's nice. The word pivoting is always sexy to hear, but what are you going to pivot to? You can't show the units. Sellers don't want you in. Even the new development units aren't showing, aren't having open houses. So the most you could pivot is you could do virtual tours. But do people really buy real estate, and how often, without actually walking into the unit? Very few people will take that kind of risk. Very few people are going to close deals. So what does the average real estate agent in an urban area like New York or LA or any of the big urban markets actually do? They hope that the stimulus package comes out that's going to recognize independent contractors, which the great majority of the people are independent contractors, and they're going to apply for help. That's exactly what they're going to do. It's very hard to reinvent yourself on a dime in a failing economic market. What are you going to do? Sell something else? These are great salespeople. Nobody's selling anything. So really, they're going to be in line with everybody else looking for some benefit from the federal government. That's what's going to happen.
Yeah, and the other thing too, I mean, we've got a couple stories looking into people selling houses digitally, maybe taking a tour digitally, looking at houses that way. But I mean, this is a big purchase. It's not like you just want to go out. People want to kick the tires on some of these houses. What do you think about the trend shift there, and whether or not that can even replace things like a home purchase?
It's going to help the rental market, and it's going to help the temporary luxury market, people running from the city wanting to rent a house in Maine or Northern Connecticut for 3 months. It's going to help that market because people will commit to a short-term lease and maybe even a 1-year lease with the super showing the apartment on virtual tour if they really need the apartment. But once you get outside the rental market, there's no way people are going to be buying units because of a phenomenal virtual tour. Unless, of course, those units could be offered at half price. Hey, maybe even I'll jump in there and say, what the heck, let me take a shot. But it's not the typical buyer by any means. But this will change the way real estate is marketed without a doubt. I think you're going to see all the brick and mortar stores that are paid for by large real estate brokers probably not exist 2 years from today, because people are learning to sell real estate at home without a doubt, just as they do in many other businesses. I think it's going to create a new market or no market for a commercial sector that previously really needed commercial space and storefront space. It's just going to add to the problem. No, it's going to change the market, but will it make people buy online? Just looking at a virtual tour, I just don't see that really happening.
All right. Well, there you go. We got much more to chat here. I love getting your thoughts on real estate, of course, but we got to dig deeper than that. We're going to take a real quick break here and have much more with Barbara Karkin on the other side of the break, digging into the way that other companies are responding to the coronavirus crisis. Stay tuned. More on that after the break. Welcome back to live coverage here on Yahoo Finance. I'm Zach Guzman, and I'm joined by the illustrious Shark Tank host, Barbara Corcoran, on the line, on the hangout with us. And Barbara, when we look at this right now, I think a lot of people, the market overall, got excited by the fact that we did get a record $2 trillion stimulus bill pushed through. The president signed that last week. And we just heard Ivanka Trump talking about those checks potentially making their way to small businesses here in the country by Friday, as soon as Friday. So when you look at that, obviously you invest in a lot of companies through Shark Tank. You deal with a lot of business owners, small business owners. What are you hearing about the struggles that they're dealing with right now in trying to figure out whether or not they should furlough workers, how hard it's going to be for them to make ends meet as they await this aid, and the uncertainty down the road?
Well, first off, I'm surprised to hear those checks are going to be arriving on Friday, because I have many small businesses that have been applying and having a hard time even applying for the help. So we'll see what Friday brings. But what every small business owner is right now is very scared, and they should be. They have reasons to be scared. When I spoke with the 70 some odd businesses I've invested in over the years on Shark Tank, I can tell you that the average entrepreneur in the last 2 weeks that I'm working with have fired between 25 and 30% of their employees. That's a lot of people. And so I'm expecting, unless something really happens that's dramatic, that turns this around, which we're all hoping for the stimulus bill to do that, that translates into a very high unemployment rate. Every one of my entrepreneurs are planning to apply for help. I'm wondering how long the help is going to go on. I could see it working for 2 to 3 months. After that, I'm worried again, already early. But what they are doing is the smart ones are shifting their models. They're getting more creative. They're making the teams tighter. They're communicating with the people, even though they're all working at home. They've made them a tight team by talking to them every day online. So the smart ones will come through. But the great majority of the investments I made, I don't expect them to make it, honestly, through this trough.
Wow. Yeah, no, I mean, that's surprising to hear, because those would be some of the better companies you would think, the ones that you invested in through the show and have the platform of that too. But earlier, your fellow shark, Mark Cuban, was weighing in on Yahoo Finance today, saying that capitalism is what has saved us here. And you wonder whether or not that would be the case with all the money right now getting redistributed to these companies that are struggling. We have seen, the question there on whether small businesses will get the same kind of aid that some of these larger businesses that have been able to lobby for will be getting as well. But we are seeing large companies in the U.S. step up through all this. When you look at GM working with Ventec Life Systems to create ventilators, you can look at Ford and Toyota doing the same to create PPE for nurses on the front lines, distilleries making hand sanitizer. There's a lot going on. But what have you made about the way companies have been able to step up in such a short amount of time to try and help out here, and the ingenuity of some of these companies out there to hop in?
Yeah. Well, these smaller companies are, in a way, almost deserve more credit, because they have less resources to rely on. They have less people to employ in whatever endeavor they want. With the very small businesses that I've been involved in, the ones that are going to make it, they have been very creative to weather the storm. I know my Cousin's Maine Lobster, which is a series of restaurants and lobster trucks, got all their trucks on the road. They've gotten all the orders online, and they're delivering into neighborhoods so they could deliver their rolls. Now, that might sound like a big deal, but their sales are off almost 70%, and now they're only off 40%. That's a sizable difference. You have companies like Pipcorn who are out there and making all their popcorn, but giving a full third of their revenue in popcorn to all the nurses around the New York, Connecticut area. So you have to applaud them. They're doing what they can. And you have Grace and Lace, who actually switched their production from ladies' clothing to face masks that they're giving away for free, and their supporters are paying for the postage to get them to the medical community that needs it. So, but it's interesting that the people who have in small business sometimes the least resources, but the most conviction, find a way to help out. And these are exactly the entrepreneurs I'm not the least bit worried about, because they have a great way of standing on their feet and making room for the next guy and really making a difference. So, I mean, to me, that's a happy note in all of this. But the ones that are less capable are really not thinking that way. They're thinking, who's going to pull me through? And all the stimulus package in the world isn't going to be the lottery. And no matter what help they get, they're just not going to be pulled through.
Yeah, no, but worthy of a shout out, no doubt, when we think about small businesses grappling with all this, with fewer resources, still trying to make things work, and you're there to help them out through it. Barbara Corcoran, the shark that we all love on ABC Shark Tank. Thank you so much for joining us. Appreciate it.
Make sure you watch us on Friday night, new time slot.
There you go. Wait, what time slot is it? Got to clear my schedule.
8 o'clock Eastern time.
There you go. Barbara Corcoran, love you. Thank you so much for joining us. Appreciate it. Stay safe.
Thanks for the promo.
All right. Well, next up, we're going to take a quick break here and chat with the CEO of MyPillow, the man that stole the show yesterday at the White House Task Force press conference. Why a lot of people are quick to call out why he was there and the actual reason he stepped to the podium. More on that right after this.
He's muted.
Welcome back to live coverage here on Yahoo Finance. Right now, we have the S&P and the Dow off by about 1%. Of course, still tracking on the Dow right now. If you've been following along today, you'll know that we are on pace to wrap up Q1 at not the greatest clip. In fact, potentially the worst clip since 1987. Right now, the Dow on track for its worst single quarter decline since back then. We'll see where we close today. All right. Well, we should have the CEO of MyPillow, Mike Lindell, standing by on the Hangout to talk to us after, of course, yesterday he joined the press conference at the White House in the lawn, standing side by side with the president yesterday, discussing plans to help pump out masks at his factory. And Mike, can we just check here? Are you able to hear me all right?
Yeah, I can hear you perfect. Can you hear me?
Awesome. Yes, I can. Thank you so much for joining us. First up, just want to talk to you about the reception, the response to you being there yesterday. It was strange to see so many people talking about why Mike Lindell, the CEO of MyPillow, was there. Of course, you addressed why you were there. You've been helping produce up to 10,000 masks. You say you want to get to 50,000 by Friday here. What was your reaction to seeing everyone step out and say, why is this guy at the press conference? Because you were helping out.
Well, you know what? They didn't say it about any other CEOs. Everybody was there. We were there originally for a roundtable, and the president decided to let us say something at the press conference. I was attacked because I spoke out for God. That's what it is. That's why it is. I turned to the president and I said, you know, Mr. President, can I say something off the cuff? And that's why I spoke out. We should that God gave us grace when he was elected, and because our country had turned away from God. And I said we should spend our time now reading our Bibles at home and spending time with our family and with this great president and all of us getting together and pitching in and making whatever we can do to help, even if it's just praying to come out of this with the best security and safety ever.
Yeah, and Mike, I mean, when we talk about this, it's crazy to think that people would want to critique a company out there that's working with, manufacturing sector here in the U.S. You obviously made a lot of efforts to keep some jobs here at MyPillow in the U.S. when you think about manufacturing here, and then also stepping up to work on getting equipment to those on the front lines. So why was it so important for you? What really was the impetus here in pushing out to make masks?
Important. It was a couple weeks ago. I'm going, we have to step up there. I heard there wasn't going to be enough masks for our hospitals and stuff. And I have loved ones, and my passion has always been to help people. And I reached out. The vice president had this coalition from Peter Navarro where you could reach out, and I had to learn what kind of masks I needed to make, what the materials were. We got ready in 3 days and changed one of our whole factories to making masks and making it safe for our workers. And then I reached out. What happened was all these other companies were calling me and wanted to get involved too. So I reached back out to Peter Navarro. I said, I have other companies that want to get involved, private sector, to help us get us back. We're trying to get everybody back safely to their jobs. But the first thing we do is make our brave people in the hospitals, the doctors and stuff, make them safe. And I just couldn't believe it when I heard the comments that came in today. Like Jim Acosta, he made a horrible comment about me, saying that what's the My Pillow guy doing there? Trying to sell stuff. If I was selling anything, it was Jesus Christ on people. Get back to God, get back to our Bibles. But I certainly wasn't there to sell My Pillows. I think everybody knows who My Pillow is. I was there to tell people we should help our country, and it helped all private sector. We should all pitch in to make us. You had so many great CEOs there of other companies doing things for. When this ends, we need to have all the manufacturing here in the United States instead of relying on China for 90-some% of all our medical things. I think it's shown our country that now, and I want to be part of that.
Yeah, and when we talk about that too, I mean, there are other ways too, as you're saying. There's other ways to advertise and get your message out there that might be a little bit more effective, as you've invested a lot in when you think about paid programming here. But Mike, last question. Obviously, a lot of people are talking about you being up there with the president. You've obviously donated money to his campaign before. Whether or not you would be pushed to run for governor in Minnesota, are there political aspirations there to kind of take a larger role in public here?
Well, let me tell you, when I went all in for Donald Trump, I had never met him. We had a private meeting in the summer of 2016 by his request. He said, Mike, you do every manufacturing here and stuff. And I left his office, and we had talked about all the great things he said he was going to help the country. I said, you know what? I'm going all in. I felt God led me to go in. If God wants me to run, if I feel in prayer God wants me to run for governor of Minnesota, I will not hesitate. I'll do what I'm called to do.
All right. Well, Mike, I just want to say thanks again. We got to end it here, but thank you so much for working on adding resources to protecting and nurses on the front line. So many people want to thank you for that. But Mike Lindell, the CEO of My Pillow, thanks again, and stay safe out there.
Thanks for having me on. God bless you.
Appreciate it, Mike. All right, that'll do it for us here in the 1 p.m. hour. Stay tuned to Yahoo Finance, more live coverage as we address the last 2 trading hours on the day. Stay with us.
Welcome back to Yahoo Finance Live. We have stocks swinging lower in what has been a pretty volatile trading day. As it stands right now, the Dow is on track for its worst quarter since the financial crisis. The quarter ends today at the end of the trading day. Now, the massive drop of this quarter is a blow for the market and not what many would have predicted here at the start of the year. As it stands today, we have the Dow off just around 138 points, led lower by Procter & Gamble, Home Depot, and Intel. Those three stocks are the worst performers so far today in the Dow. Sector-wise, we're seeing 9 of the 11 sectors move to the downside. Real estate continues to be the biggest laggard this afternoon. So here to talk more about today's market action and really what we've seen for the first quarter, I want to bring in Kim Katakis, Head of Investment Strategy at Martin Currie. And Kim, when we see what's been happening in the markets, there's debates over whether or not the market has turned a corner. This, of course, arose after last week's rally and what we saw in yesterday's trading day. How do you see it? Do you think we'll likely trend higher from here, or do you think we will go the other way and retest those recent lows that we saw not too long ago?
Look, thanks for having me on, Sean. I mean, what I'd say is, to start with, we may well have already touched the bottom, but I would be really hesitant at calling this as the time for recovery. Simple reason is there's an awful lot of moving parts. Investors are struggling to keep up. Essentially, if you cast your mind back a little bit at the beginning of this year, you quite rightly said in your intro, no one expected this quite so quickly. The beginning of the year, we're looking at a relatively optimistic outlook for the economy, US particularly strong. And what we're looking at now is a global recession. And that global recession may have been triggered by a pandemic, but I think it's probably fair to say that there were pockets of overvaluation anyway. So it shouldn't be a complete surprise. So short answer to your question is, this isn't it. I think you're going to get 3, maybe 4 more chances to get your money back in the market, I think, before the year end.
Kim, what about the timing of the recovery, of an economic recovery? When do you assume that recovery will start? Could it actually happen before the coronavirus outbreak ends, or do we have to see the coronavirus outbreak get under control here in the US, and then we could expect the economy to kick back in?
Yeah, I think that's a great question. I mean, the fact of the matter is, I think that we may see the economy recovering tentatively even before the coronavirus is gone. I don't think it'll be gone anytime soon. I think we should get used to the idea we're going to be living with this for a period of time still ahead. If we look back at the countries that went into this first and see how long it took them to come out, I mean, an example, the obvious place to start is China. Now, China, if you take from the point where the epidemic, as it was called then, was taking dimensions, and the Chinese authorities started to lock down cities and really hurt their own economy by doing so and keeping everybody locked at lockdown. It's an 8-week period, and we're now looking at a place where 80-90% of economic activity is back again. People are back to work. Everywhere, even Hubei province, which is where this outbreak started, has started to see some loosening up of travel, which obviously is really important for economic activity to pick up. Wuhan is still tentatively under lockdown, so that'll still take time. But to all intents and purposes, 65% of consumer activity is already 65% of what it was before this happened. And manufacturing, you're looking at 80 to 90% of companies are open. That's clearly not to say that they're working at 100% capacity. So if we turn that lesson around and say, okay, how's it going to work out in Europe and in the US? I would say we will not be able to do this in 8 weeks. There's absolutely no way. Why? Because we have been a lot slower, both in Europe and in the US, at getting a grip of the virus, so the pandemic. So I think it's prudent to assume that we're looking at another 6 months before things really start to pick up again economically.
Kim, we've been talking about the actions that the Fed has taken over the last several weeks. We just had San Francisco Fed President Mary Daly. She was on the show that last hour, and it was interesting just in terms of what she was saying, what the Fed has been left to do. So she's saying that they have taken unprecedented action so far. And she said that the Fed is prepared to do whatever it takes in our power to shore up the American economy and grow again once the virus subsides. And when we talk about what the Fed has already implemented so far, the measures that they have taken, the measures that they have left to take, what they still have left in their pocket, what do you think we'll likely see the Fed do over the next several weeks?
I mean, I think the Fed is going to continue doing what she said, which is basically the key words are that we hear over and over as investors, whether it's in the US or in Europe or anywhere else, whatever it takes, they're just going to do it. There's plenty of firepower there. They're going to continue using it because, frankly, that's the only option we have. We only have one game plan here. We don't have a second one. And what it means, I mean, to give it into perspective, when we think back to 10, 11 years ago, you know, with the global financial crisis, the amount of stimulus that was put to work globally was around about 1.7% of global GDP at the time. The numbers we've got so far, and that's not including, you know, future, you know, tiers of stimulus, I'd say we're looking at around about 2.6% of global GDP. So that's a substantial increase. Now, you've got to ask the question as an investor, that's fine. You know, it underpins immediate worries that people might have, particularly given that this particular packages seem to be all around the world, seem to be aimed at citizens rather than large financial institutions as it was last time round. So what we're seeing in Europe, and I don't know to what extent we're going to see the same in the US, is you've actually got guidance from the European Commission to the supervisory authority to the banks to say to them, don't pay your dividends, conserve cash, because we don't know how long this is going to go for. Now, to give you an idea how important that is going to be, and I'm drifting a little bit from your question, for which I apologize, but I think it's an important point. Europe pays roughly $275 billion a year in dividends. And at the time of the global financial crisis, that number, or you know, the equivalent number at the time, was reduced by around 30%. Today, we're looking at a 50% reduction. So that's how much liquidity essentially is going to stay with the companies, which is where it's needed. Hopefully, going to continue to employ people. And as you were rightly saying, you know, hopefully we get a grip of this pandemic sooner rather than later. But the short answer, again, is to your question is they'll do whatever it takes.
All right, Kim Katakis, Head of Investment Strategy at Martin Currie. Thanks so much for joining me today.
Thank you for having me.
Well, coming up here on Yahoo Finance, the number of coronavirus cases in the U.S. surpassing 160,000. We'll talk to the mayor of Seattle. That's where the first case, right in the Seattle area, that's where the first case rang up here in the U.S. and talk to her about the different measures that the city has taken in order to get the outbreak under control. There is a potential success story there. So we'll talk more about that after the break. Welcome back to Yahoo Finance. The number of cases, coronavirus cases in the U.S. continues to climb right here in this country, surpassing 160,000. Seattle has been on the front lines of the coronavirus outbreak. It was the location of the first known coronavirus case here in the U.S. and where the virus claimed 37 of its first 50 victims in the United States. So here to talk more about that, I want to bring in Seattle Mayor Jenny Durkan, and we're also joined by Yahoo Finance's Akiko Fujita. And Mayor Durkan, thank you so much for taking the time to talk to us this afternoon. I first want to start with what the current situation is like in Seattle, because I was just reading a recent report this morning from health officials in your area, and it was showing that the signs of the containment efforts that are underway in your city, that it's starting to pay off. You're starting to see some real results there.
We're fortunate in Seattle because we are a city that has a number of high-tech companies and resources that many cities didn't have access to. When we first had the first cases in our county on February 28th be announced, and then the first death on February 29th, we were able to act within days to work with our largest employers in the city of Seattle and King County to have people telecommute as quickly as possible. Then we went up the dial to do more restrictions on our economy. I will say I agree completely with your last speaker that the economic impacts of this cannot be overstated. We went from being probably one of the most booming and productive economies in America, with cranes everywhere building new buildings and high unemployment, to an economy that is virtually shut down now. But we did that knowing, we took the restrictions we did knowing that we would have those impacts, so that we could both flatten the curve to support our healthcare workers, but hopefully reduce the long-term economic harm, so we could come out of this in a way that was more resilient. We have a glimmer of hope. We were able to cut the transmission rate from 2.7 to 1.4, which means every time someone gets it, they give it to almost 3 people, is where we were on the curve. We've now lowered that. But what we've seen with this virus worldwide is those kinds of restrictions have to continue for a period of months in order to come out and start doing the types of things to reignite our economy. I would say that we're doing some assessment now on what are those parts of the economy we can fire up first without risking a resurgence of the virus.
Mayor, you talk about the economic impact here. Unemployment claims last week skyrocketing nationally. I saw that it was a 9-fold increase in Seattle. And there seems to be a debate here between the federal and local level in terms of how much stimulus is needed. We've got a $2 trillion stimulus on the table over in Washington, but everything we've heard from local officials is that's just not going to be enough. How much more help do you need from the federal level?
I think there's going to have to be phases of stimulus, and we need more right now. We've got to get money into the pockets and bank accounts of workers and small businesses so they can both weather the storm and continue to keep some parts of the economy alive. In Seattle, online sales and takeout restaurants are still open, but it doesn't do you any good if there's no money in the pockets of workers. And it was our service industry and our small businesses that got hit first. There are over 200,000 people employed by that in the city of Seattle. So the first round of federal stimulus will just be to keep the basic parts of the economy going. Then I think there has to be a very concerted plan coming out of this that is both what are those types of industries that don't require a lot of people gathering immediately that you can get up, and what are those industries that can have the right social distancing. I think we're going to need to finally get an infrastructure plan that will work for America and put people back to work coming out of this. In addition, we've got to make sure that we keep those online parts stable and robust, but we've got to get brick and mortar going again. So I think there's going to be phases to this, and no phase is possible without concerted action from the federal government and the national level.
So, Mayor Durkan, I want to follow up on that point that you just made about the infrastructure plan, because we have President Trump tweeting about that as his phase 4. It sounds like that you think it's a good idea to incorporate some of that into the phase 4 response to the coronavirus, because you think it will help the economy kind of get restarted here. Is that correct?
That's right. But I think for a period of time, because you've got it, the cities are going to come out of this at different points. We're very hopeful in Seattle that the measures we've taken will continue to pay off, but we're a month or two away also from being able to relax those. And so infrastructure projects are only possible if you can have the conditions to get workers to and from a job site and keep them safe at the job site. We're doing that in a number of places here in Washington State, but it's got to be very carefully calibrated. So with the federal government has got to have plans in place to surge this economy in different places, and not just sequentially, but parallel at times.
Mayor, you talked about the booming economy that was a place in Seattle before. You certainly have a lot of major companies that are concentrated there. Amazon, of course, Starbucks, Microsoft, Boeing just outside of Seattle. What we've heard repeatedly from lawmakers is that they want people to keep, or these businesses to keep people on the payroll so that when this dies down, when the curve is flattened, things can start up right away. I'm curious what conversations you have had directly with some of these companies about where they stand financially and what their contingency plans are when things start to open up.
I've had a number of conversations with a number of the companies here, and I would say that all of them are trying very hard to keep their employees employed. But depending on the nature of the company and the amount of income they're able to have over a period of time, that's getting hamstrung. And we've seen it first, obviously, in brick and mortar. We saw what happened to Macy's this week. And so when you have large retailers, as we have centered here, like Nordstrom, you worry about their vitality over the short and long haul. Other companies can shift their work, like Amazon, mostly to online. But we're also home to Expedia, which is a great company, but tourism and aviation has been, devastated. So each of these companies is a small microcosm of what's going on in the different sectors in the market. And that's why we have to be very smart about how we are going to rebuild and restart this economy in every city, but also sector by sector across the country.
And Mayor, finally, if I can ask about a specific company in your area, which is Boeing, a bit of a political question here, but there is certainly a lot of questions around the stimulus bill and how much goes to specific companies. Boeing certainly employs a lot of people in Seattle, but they've also struggled well before the coronavirus, partly because of their own doing. I'm curious how you view that debate as somebody who understands how much this company employs, but also is aware of the political ramifications of providing stimulus to a company like that.
So I think you have to look over the short and the long term. I think it is in the long-term interest of our country to have a very robust and vital Boeing. We need it not just for national security and military purposes, but we need it for commercial purposes. It's one of the largest exporter from America, and it also employs one of the largest and most experienced manufacturing workforces there are. The machinists are unrivaled in their ability to do what they do, and so you don't want to lose that capacity in your marketplace. As we transfer and transition in America from the innovation technology economy, we still have to have blue-collar jobs available as well. And so having companies like Boeing is not just, where are they as a company, but it is really what are we going to do to keep that sector and those kinds of jobs in America as we move forward, because we're not only dealing with the pandemic and its huge impacts, we are dealing with a global shift in the nature of the economy, unlike anything seen since the Industrial Revolution, moving to those tech jobs, and how do we keep a strong manufacturing base so that we have a diversified economy. So I think the questions are beyond political and really are both economic, and where do we see ourselves in 5, 10, and 20 years as a country, and the types of jobs and the type of output we're going to need to be successful.
All right, Mayor Durkin, thanks so much for taking the time to talk to us today, and also Akiko Fujita to you as well. Thank you.
Thank you so much. Take care.
Well, I want to talk about what we are seeing on the front lines as doctors and healthcare workers really work to fight what we have seen the outbreak here in the United States from the coronavirus. So, as it stands right now, like I said earlier, more than 160,000 cases have been confirmed right here in the US. And that staggering number comes as the country has yet to really fully ramp up the testing, meaning that there are many cases that are still going undetected at this point. So here to talk more about this, I want to bring in Dr. Jennifer Pina, a former White House medical unit physician for President Obama, as well as Vice Presidents Joe Biden and Mike Pence. And Dr. Pina, thanks so much again for taking the time to talk with us today. I want to start with testing and what we've seen on that front. From your perspective, has there been enough progress made in terms of testing at this point?
Thank you for having me. So we're certainly improving. There's definitely a push to make testing more available, as well as changing the paradigm of the testing that we were doing. As you might have read or seen, there's a FDA approval for a quick test that has been now starting, or will be starting to deploy here soon. And hopefully with that, it will give us more data, more numbers to be able to identify those areas across the country that are starting to have an escalation of cases. That's important because that also helps us identify which areas we need to be more aggressive with social distancing parameters in an effort to try to prevent continued spread.
Dr. Pina, the White House has talked about some of the models that they're using in order to make some of these policy decisions that we have heard them make really over the last several weeks. Do you have any idea, just from your time spent in the White House or from your contacts there, just in terms of what data they're looking at when they implement when I guess we heard President Trump extend the stay-at-home policy through the end of April?
Sure. So there's a variety of different models out there, not just from epidemiologists here in the United States, but also modeling that's coming from overseas in countries where the pandemic is starting to slow down, as well as in countries where they're still hitting those peaks. And so it's really a conglomerate of information that's coming into the White House. I think Dr. Anthony Fauci said it best. At this point, it's hard to necessarily specifically predict when we're going to hit that peak, but we should expect that we might still see a lot more cases and certainly a lot more deaths. And so I think the key to that and all of that modeling is preparing our healthcare systems to be able to handle the influx and the surge of many more patients. We're still very early in the pandemic on any of the models.
Yeah, Dr. Pina, when we talk about preparing our healthcare system for the influx and the number of cases that we could see, there's already been reports that hospitals are running out of room, or it's almost been confirmed, Billy. If you take a look at what's happening in New York City, we have tents going up in Central Park. We have the ship park in the New York Harbor yesterday. There was a story in the Wall Street Journal today that caught our attention. It was talking about how NYU Langone is telling their emergency room doctors that they need to, quote, think more critically about who gets ventilators. So they're basically choosing who will get a ventilator and who won't get a ventilator. Just from your perspective as a doctor, how do you prepare yourself to be faced with those types of questions or those types of decisions, I guess I should say?
Right. And it's a terrible situation. As healthcare providers in this country, nobody ever expects that we're going to have to make those types of decisions. The term ventilator triage has been commented about recently. And it's just something, it's an ethical dilemma that no medical provider ever wants to deal with. There is guidance out there in different hospitals and hospital systems that recommends committees that can help with this triage to take the burden off of the bedside clinician so that they can focus on the care at hand. Sometimes they get a bad rep in terms of being quote unquote death panels or panels of people that are determining who would best benefit from ventilator usage or the usage of very limited resources in the hospital. But the reality is, by improving this triage, and I hope that we don't have to get to that, but if we get to this point where we have to start triaging to that degree, these committees really would help determine who would benefit the most in terms of improving the chances of survival for people.
And Dr. Pina, we were just talking to the mayor of Seattle right before you here, and what we've seen in the city of Seattle and some of the data that we've gotten out of New York shows that some of the containment efforts might be working. Just in terms of, from your perspective, how encouraging is that to you in regards to what we could see in other parts of the country?
It is very encouraging, and I want to take a second to commend Major Durkin for those aggressive measures, because it is cities like Seattle, as well as some of the effects that we're seeing in places like San Francisco, in the Bay Area, places like Santa Clara, that took very aggressive measures early on in terms of social distancing, stay-at-home orders. We're not necessarily seeing the curve completely flattened, but we're definitely seeing a slowness, a slow progression of the disease. And that's what we're looking for. And so it does take time, right? Social distancing does not work overnight. We have to allow time to reduce the spread and the transmission of the disease. Remember, when we start social distancing, there are people who might have already contracted the disease and will develop symptoms within 14 days of starting that social distancing if they've just contracted the condition. But the key is, as she mentioned, continuing the social distancing regulations until we really start to see that curve flatten in other places across the country.
All right, Dr. Pina, thanks so much for joining us today.
Thank you.
Well, coming up next here on Yahoo Finance, Walmart is stepping up its efforts to protect its own employees from the coronavirus outbreak. We'll have more details on that right after the break. Back to Yahoo Finance, we have Walmart upping its safety measures for its 1.4 million associates. Now, the retail giant announcing that it will start taking employees' temperatures at all stores and distribution centers, amongst other initiatives that they are taking into account in regards to the coronavirus outbreak. So here to talk more about this, we have Julia LaRoche. And Julia, I know you were digging into this story. What can you tell us at this point?
Yeah, Shauna, and when you think about it, Walmart, as you just mentioned, they employ 1.4 million associates, as they call them. They are the largest private employer. And you got to say this, they're on the front lines because they're also the world's largest grocery retailer. And we still have many folks who are going to the stores. They've remained open. They have 4,700 locations. 90% of the U.S. population lives within 10 miles of one of these stores. And they've become essential for folks who are stocking up, whether it's their pantry items or their paper towels or sanitation or even visiting the pharmacy, those sorts of things. But questions have been raised. How do you keep your employees safe? Walmart has in recent weeks taken measures, including adding plexiglass, decals on the floor to help with social distancing. But the newer measures that are coming out today, you just referenced taking the temperature of employees. If you have 100 degrees or more, you have to go home, yet you will still be counted as present for work. You'll get paid. They have implemented catastrophe pay, but they will be taking temperatures using infrared thermometers for all employees, whether it's at a distribution center, a club, a store, and they have that 100-degree threshold. And they're also asking folks to take their temperature at home. They're asking them to monitor for symptoms and that you have to be fever-free for a set number of days to even be allowed to come back to work. But as I had mentioned, they'd already implemented the catastrophe pay to take care of their employees who might be worried about missing days, having absences, missing wages. That's not going to be the case because they really are stepping up. They're also providing, optional here though, gloves and masks. Now, not N95 masks, and the gloves and masks are optional. They have been closely following CDC guidelines, monitoring this. Some folks have asked, hey, why hasn't Walmart put masks or gloves on their employees? Well, you don't want to take away the supply from the healthcare workers. They are being very mindful of that. As I mentioned, not N95 masks here. Some other changes, Shauna, that you might see when you go into a Walmart. Dan Bartlett, one of their executives, said on the call they will be implementing one-way aisles to help promote social distancing. They don't want to have their workforce, trying to promote the social distancing per se. You need to have it measured and controlled and keep your employees safe as well. Shauna?
Julia, do you think the pressure has really been placed on these retailers to do more? Because just yesterday we were talking about how there were walkouts staged at a number of companies, including Instacart, including Amazon. So some of Walmart's competitors there in the grocery space.
Yeah, and actually this is something I asked Dan Bartlett on the call this morning, and I got to give this to Walmart because they've been out front of this all along. They had that $550 million in cash bonuses going out to associates, bringing in the bonuses earlier, giving those one-time special cash bonuses, coming out with the catastrophe pay well ahead of schedule for others, promoting some of these safety measures, reducing the hours so they can focus on cleaning. Also hiring. They are hiring 150,000 people. A lot of those are temporary, reaching out to industries that have just been wrecked by the coronavirus. And to date, they've brought in 50,000 people. And I did ask Walmart, as you mentioned about the walkouts, and a lot of it is that they are listening to their associates. They're listening to their employees, finding out what do they need, what do they want, what are the things that will help support them do their jobs, and they're actually following through on what their workforce wants. You'll see their CEOs, whether it's U.S. CEO John Furner or CEO Doug McMillon, on the front lines, visiting folks in stores. So I think it's important. This is a stakeholder capitalism theme. Your employees are part of your company. They are stakeholders. They matter. You have to listen to them.
Yeah, certainly. It's extremely important, especially in a time like this. Julia LaRoche, thanks so much. Well, coming up here on Yahoo Finance, we are sitting down with Ivanka Trump, talking to her about the Trump administration's response to the outbreak so far and what they're doing to help small businesses get the relief they need. It's a Yahoo Finance exclusive next. Welcome back to Yahoo Finance. We have President Trump signing that $2 trillion rescue package last week to help keep the economy going during the coronavirus outbreak. So there's questions now about how quickly some of these businesses, the part of the bill that's aimed to help small businesses, how quickly they will have access to those loans and exactly who will be able to qualify for these loans. Bill Marcellus joining us now. And Sibyl, I know you sat with Ivanka Trump earlier this morning, talked to her administration is doing. What did she have to say?
That's right, Shauna. I spoke to Ivanka Trump from her office at the White House via Skype, observing the social distancing guidelines of the Trump administration. And we talked about small businesses and how much aid is being given through that $2 trillion fiscal stimulus package. And here's what she had to say about transforming those loans into grants.
And one of the ways to do this is with these loans that at the end of it, if they actually use the loan proceeds for payroll expenses, for overhead in the form of rent payments, utilities, then it's granted to them. So it becomes a grant rather than a loan if they use it to maintain their workforce. So for us, it's about helping these small business owners get the relief they need. If they're faced with a choice, they simply cannot make payroll, so therefore they're not going to. We don't want that to be the outcome. So how do we get them quickly the money, recognizing this isn't their fault? They won't be having revenue for, until in some cases, every state's a little bit different in terms of what they're deciding to do in terms of mandatory shutdown, but making sure that they can keep their workforce employed and don't create vulnerabilities on the other end. We're also doing a series of collaborations with the private sector to have them step up to the plate and really think about how they can keep that small business ecosystem strong. And then individually, we all have a part to play in this, right? So I think it's really awesome to hear from so many people who are thinking about creative ways, those who have the means to do so, to support small business within their communities, whether it's prepaying for a service that they know they're going to avail themselves of sometime in the next 6 to 12 months. I did it on a personal level with my local dry cleaner and my local florist, just to sort of assist in a small way during this time. So it's really heartening to see that even people, buying local produce and being really cognizant of that when they go to the grocery store to support farms and local protein and then freezing it. So there's a lot we can do individually, but this bill, the president had a mandate, which was to think big and swing for the fences. And with these unprecedented times and with a forced closure of what was the healthiest economy ever, we thought big, and this is $2.2 trillion of relief that's going directly to workers, frontline responders, and small businesses.
And Shauna, when I was talking to Ivanka Trump, obviously as a parent, there are millions of parents across the country that are dealing with this social distancing, staying at home also with their kids with so many schools closed. So it's like trying to find creative ideas. What can you do while you're stuck in the walls of your house? So Ivanka was saying basically some of the ideas of what she's been doing is with her kids. She's actually learning to play the guitar when she's sitting with them. She's also taking some Coursera courses, learning about Greek mythology. So she also had some ideas for Americans who are trying to stay interested and keep their minds going while we're stuck at home, many of us.
Yes, Sibyl, and I know you will be rolling out the rest of this interview throughout the day on Yahoo Finance, and your entire interview will be up on yahoofinance.com. But you mentioned the fact that Ivanka Trump and her family are trying to stay busy, trying to do things, obviously, right now as most of the country, or I guess some of the places in the country remain shut down just in terms of what we're seeing on an economic level. You are looking into a bank rate study just in terms of what Americans are doing right now, their consumer behavior. And you found that, and the study found that the majority of Americans have actually cut their spending amid the coronavirus crisis. What do those numbers look like?
That's right. So 52% of Americans have cut back on spending out of concern for the economy or the stock market. And when you break it down by numbers, so you have 47% that cited concern for the economy, 15% for the stock market, another 10% who are worried about both. What we're also noticing, Shauna, is that higher income earners, so those making more than $80,000 a year, are cutting back more than low income earners who are making $30,000 or less. A big reason for that also is because high income earners have more investments in the stock market. And once they see all that red across the board with the Dow and the S&P 500 plunging and all that volatility, then they cut back on their own household spending. Also, millennials, some have been taking advantage of this volatility to actually put more money into stocks, and others actually chose to move their money out. So it's really like a case by case basis, see kind of how individuals are dealing with this. But overall, 2/3 of Americans did nothing to their portfolio. And recently we saw stocks plunge by 30%. I was speaking to Greg McBride. He's the chief financial analyst for Bankrate, and said that's a good sign that shows that investors do recognize that this is a temporary economic shock and that eventually the U.S. economy will bounce back.
All right, Sabeel, thanks so much. Let's talk about the plunge that we've seen in oil so far this quarter. So oil seeing a little bit of a bounce today, up just over 1.5%, but still on track for its worst quarter. Is obviously tumbling amid the global supply and demand shocks that we have been seeing playing out in the industry. We have Emily McCormick here joining us now. And Emily, I know you're looking into a Bank of America note out today. They were revising their forecasts lower once again, just in terms of what we will likely see going forward for the price of crude, at least in the short term. What's the thesis there? Because the one thing that stuck out to me was the fact that they were saying it will likely be a drag here on the economy, at least in the short term.
Absolutely. So that was the overall takeaway from this Bank of America note. And I do want to point out, since we just got crude oil settlement, we had U.S. West Texas Intermediate settling higher on the day, but lower on the quarter for its worst ever single quarter and single month decline. Bank of America is saying that these prices could potentially even go lower. And they're anticipating that lower oil prices will be a net drag on the U.S. economy, with the energy sector pulling down second and third quarter GDP growth on a quarter-over-quarter seasonally adjusted annual rate, down by about 0.8 and 1.5 percentage points. Now, usually you would see a bit of a blunting effect of lower oil prices because that would actually contribute to more consumer activity because of an increase in demand for gas at the pump or travel. But one of the things that we're seeing in this case with the coronavirus is that there is this demand shock as well. So that blunting effect that we usually get from the consumer to help offset some of the declines that we'd see on the producer side as a result of lower oil prices won't be at play. So net on net, this is going to be a drag on the economy for the current second and third quarters. So something to keep an eye on here, especially as we have April 1st coming up just tomorrow. And that's when OPEC and its allies are going to be able to ramp up production. Those production cuts that had been put in place originally will be lifted, and that will just further add pressure on the supply side as well.
All right, Emily McCormick, thanks so much. Well, it's been 10 years since the passage of the Affordable Care Act, and the law's backers say that it will prove to be a crucial safety net here during the coronavirus pandemic. We'll talk more about that and exactly what that means right after this break. Back. Well, it's been 10 years since the passage of the Affordable Care Act. And at a time like this, when millions of Americans are losing their jobs, many are also losing their benefits as well. So how does the Affordable Care Act play into all this and help out those Americans in need? Joining us now, we have Karen Schwartz, a senior fellow at Kaiser Family Foundation. And Karen, thanks for joining us here. Let's talk about the Affordable Care Act and the impact that it's having at a time like this. How big of a difference is it making right now?
Sure. Well, even leading into this coronavirus pandemic, there are about 20 million fewer uninsured because of the Affordable Care Act and the coverage expansions in that law. And now, as people are losing their jobs, they're going to have options to maintain coverage that weren't there before the Affordable Care Act.
But there are still millions and millions of Americans that are still uninsured. At a time like this, how concerning is that, or what can we best do in order to try and address this type of situation?
Yes, it is quite concerning. I mean, we know from many studies that people who are uninsured are more hesitant to go to the doctor or the hospital. They may be more nervous to get the treatment that they might need were they to become infected with the coronavirus. So there's several options that policymakers could take to try to expand coverage. You know, they could, at a federal level, increase support for the Medicaid program, increase subsidies for people to buy coverage on their own, or to maintain the employer coverage that they had through their jobs through the COBRA program. And in the past, we've seen some subsidies for that as well.
Karen, we saw 3.3 million people apply for jobless claims or apply for unemployment last week, in the jobless claims report. Can people who lose their jobs, can they sign up outside that standard enrollment window for the Affordable Care Act?
That's a great question. If you lose your job and lose your employer-sponsored coverage, you can go into the marketplaces, even though it's not the typical open enrollment period, and buy coverage, and you may qualify for subsidies. For a family of four with income of less than $9,000 a month, they would qualify for subsidies in the marketplaces. Those with lower incomes may qualify for Medicaid, where they wouldn't typically be paying premiums.
Karen, because right now, I mean, it's interesting that we're having this discussion just in terms of what we've seen surrounding the ACA, because its future is relatively uncertain. We had the Supreme Court, they're set to hear arguments later this year that challenge the individual mandate, also raising questions about the entire law's survival. What do you think the consequences are if we do, in fact, see a repeal or somehow have it scaled back, just in terms of the ACA and what it could mean in the future?
Sure. You know, if the Supreme Court rules that either some or all of the Affordable Care Act is repealed, you know, it would be a big change to the healthcare system right as it's sort of taxed to the limit facing the coronavirus. And so, you know, we know the Republicans and President Trump has said it's his intention to replace the Affordable Care Act with something. But, you know, it's very complicated to try and roll out a whole new program and to do it at a time when our healthcare system is already facing the coronavirus. You know, it would be hard for everyone to just absorb the hiccups as any changes were made.
Karen, do you have any insight just in terms of the demand that maybe we have seen for people wanting to sign up for the Affordable Care Act since they've been let go, or since this pandemic has unfolded here in the U.S.?
You know, I don't think we've seen exact numbers out, but I'm sure we're likely to see many, many more people signing up through the marketplaces, enrolling in Medicaid. You know, the marketplaces weren't an option during the last recession because that was before the Affordable Care Act, so this will be a big test. But I think, you know, it is such an important option for people to be aware of because, again, so many people will be qualifying for subsidies.
All right, Karen Schwartz, a senior fellow at the Kaiser Family Foundation. Thanks for joining us today.
Thanks for having me.
Well, coming up here on Yahoo Finance, the FBI is out with a warning about Zoom. You're not going to want to miss it, especially if you're using Zoom or some of the other sites that are very popular work from home apps. We'll have those details right after the break. Welcome back to Yahoo Finance. The FBI is out with a warning about Zoom. So as more and more people turn to Zoom to stay connected during the coronavirus outbreak, the FBI has received multiple
conference to private, or they use an easily guessed password, something along those lines. And people access the chat that they're in and then can scream profanities, or in some instances post anti-Semitic images, hate speech, things along those lines. So they're just jumping into these people's chats, doing this, and then leaving. And so the FBI is now warning people that if they are using Zoom, make sure they're using the latest version, make sure they're setting their chats to private, especially if they're educators, people in the workforce, things along those lines, and ensuring that they're following best practices for internet security in general. So this is something that is happening now just because of the massive spike in Zoom usage. We talked about that as kind of the virus is spread across the world. Zoom told us that they saw increases following the virus's trajectory. So originally through Asia, then in the Middle East, Africa, Europe, and finally into the US, where it's really propagating now. So it's incredibly popular at the moment among workers as well as regular citizens. So if you're using it, definitely set a proper password.
Yeah, Dan, I was looking at, there was an interesting chart here that we came across, and it was talking about how Facebook likes for Zoom shot up 15%. So it was a sign, obviously, there of substantial engagement and increased engagement over the last several weeks. And what's also interesting, too, is that Zoom has posted more job openings. So the fact that there is so much demand for their product, especially at a time like this, they're actually one of those companies that are looking to hire.
Yeah, and when I spoke to them about, I would say 2 weeks ago, they were discussing how they were seeing this huge increase. And I said, well, what do you do when your servers get overwhelmed, or can they get overwhelmed? At that point, they had said, look, we have enough capacity to deal with what we're seeing right now. But we are seeing things like, for instance, this was in the middle of March. So they said they had reached what they normally see as far as the entire month of March in just the first 11 days. So we're at the end of March now. Obviously, you can imagine that the traffic that they've seen has been exponentially larger. They are hiring more people, and they're likely adding more capacity. At the very least, they're able to dump off some onto the public cloud. That's either through Amazon or Microsoft, someone along those lines, and kind of deal with it at that end. But yeah, adding more people, adding more capacity, and dealing with this huge surge of people because, hey, we're locked up.
All right, Dan Halley, thanks so much. We'll keep right here on Yahoo Finance. We have stocks in the red today with the Dow off just over 100 points, but the Dow heading for its worst quarter since the financial crisis. We'll have more on that in the last hour of trading next.
Welcome to Yahoo Finance Live. I'm Jen Rogers. One more hour of trading is left in March, and in the entire first quarter, the Dow right now on track for its worst single quarter decline since the fourth quarter of 1987, which of course includes Black Monday when the index fell over 22%. This will likely be the Dow's worst first quarter on record. Checking out markets right now, it's kind of been an interesting day. We've just been choppy in here in a way that we haven't been recently, when we've been seeing everything just move in one direction, and more forcefully so. Sector-wise right now, we've got energy has been overall, so don't take too much solace in the fact that XLE is up 1.4%. We've got real estate, tech, and utilities down right now. I want to bring in my co-host Miles Udland to talk a little bit more about what we're seeing in the markets today. And Miles, yesterday we talked a little bit about how the market was seeming in terms of equities a little bit more constructive, a little bit of a breather here from some of the recent activity that we've had. And even though we're not seeing gains like we did yesterday to that extent, the market action seems more calm yet again. And you can see that in the VIX. Would you say that that's a fair characterization here?
Yeah, I think so. I mean, I think, we came out of last week with the big question of, was that it? Where do we go from here? Was that the bottom? Obviously, as we talked to death yesterday, we don't know, and we will only know in hindsight. But I think the most important thing right now for this market, if you want to grow more constructive on the market, is, as you mentioned, continue to see volatility get squeezed out of this market. Now, the VIX, it's not as low right now as it has been earlier in today's session, but the VIX is still off a couple of points. We're looking at the low mid 50s here for the VIX. And I think that that's really a sign maybe of this market calming down a bit. Now, once we get through the month-end, quarter-end rebalances, and we've seen some reports that some big funds won't be doing a rebalance, but presumably a number, if not most investors, are still out there rebalancing as they need to at the end. Maybe things reset in April, and if they reset, does that mean bad news for the market? Obviously, we're going to find out in the next couple of days, and then jobs report on Friday. So we've got all this stuff coming up, right? But ultimately, I think if you continue to see the VIX get hit, even though we are still very elevated, you can start to talk yourself into being more constructive on the market and just seeing smaller intraday ranges on the major averages as well. We're not moving 6, 7, 8% anymore. Right now, we're kind of moving 2.5%. I guess the range is for today's session, and that's certainly something that's going to be welcome to investors who got a little too accustomed to seeing moves that were historic in nature. A couple of weeks ago, it seemed like we saw one every day.
Yeah, I mean, and that said, I think we all, we still have some PTSD from those days for sure. And everybody's sort of bracing for possibly returning to that. And as you said, we've talked ad nauseum about whether we've hit a bottom, and nobody's going to know until we're further away. But Stephen Cohen today, the hedge fund manager, talking about how in a note that after an earthquake, there are still tremors. And so it seems like we might have gotten out of the earthquake. Or Mohamed Al-Arian from Allianz talking about sort of the time to sell everything, that's gone. So we feel we've moved beyond that. We just don't know where we're going yet, is the sense that I'm getting from talking to people and reading.
Well, yeah, and I think to that point as well, maybe we had that panic phase in the market, and that might well be over. And I think that would be welcome that it's over. But when you look at kind of what we're going to be facing in the months ahead, we're in recession, and we're going to be in a recession. So, we're going to get a first quarter GDP print in about 4 weeks that's likely to show GDP declined. Goldman Sachs thinks it's going to be around 9%. So that could be potentially up to a double-digit annualized drop. Then we are sure we're going to see a double-digit decline in growth in the second quarter. The unemployment rate might rise to 15%. It could be higher. Jim Bullard is out there saying it's going to be 30%. So I think that we have a long way to go in terms of bad economic and market news, not to mention bad news with respect to how many people are getting sick and how many people are dying from coronavirus. So I think there's a lot of that ahead of us. Maybe that was the panic phase, what we saw in March. I think it's probably unlikely that you'd see similar waves of forced selling, similar waves of days we came on here and we knew it was everyone calling up saying, get me out of everything right now, no matter what. that's probably over. But to Steve Cohen's point, I mean, there is a very, very long way to go here to just kind of have this sorted out. The V-shape idea, not that it was ever the most logical thing, I guess you could say. It certainly was like it was a great stylized version of this. That seems to be gone. And so whatever the other side of the panic phase looks like, I think is going to be probably a bigger challenge than it seemed a couple months ago, not a couple weeks ago. Not that that means the market has to react similarly as negatively, but certainly there's going to be some challenging times ahead.
Yep, and we're seeing that, as you noted, in the Goldman note, which we covered when the numbers looked bad last week when they had their note out, but they were looking, down with a two handle of 24%. Now we're talking 34%. So big adjustments there as well. Let's bring in Jared Blickery to give us some context on this month end and this quarter end. So as Miles was noting, there has been a lot of talk about this rebalancing and pensions at the end. And there's kind of been two camps out there. Some people saying, oh, this maybe happened yesterday. Other people saying it's not going to be as big of an impact this time. What are you seeing, and what should we be looking for in this last hour?
I think we've seen most of the rebalancing, at least the bulk of it so far. Several $100 billion seems like. There's still some on the table, maybe 100, maybe 200 billion. We don't know who's going to be doing when. They could even do it in the next week. So it's kind of off my radar right now. It's still worth talking about because it's still the end of the quarter in the last few minutes. But I think people are going to be focusing on other things tomorrow. And I think your guys' commentary is spot on in terms of what we should expect here. We've probably seen the panic lows. I don't think we're going to see the VIX return into 80. The Fed's in the market blowing up its balance sheet by about 400 to 500 billion a week here. That's just going to add liquidity and suck volatility out of the market. That's kind of the way QE works. And they're providing dollars, which were much needed around the world. There's kind of a scramble for them today because it's quarter end. I think that's going to abate somewhat. But let's take a look at the quarter that was almost in the Wi-Fi Interactive. Got a minute here. So here's the Dow. It's down 191 today. By the way, this is going to be the lowest range day in about 5 weeks here. And yesterday was the lowest in about a month. So here we see the Dow's down 22.4%. We got the S&P 500 down a little bit less, 19.5. NASDAQ down the least because it's rebounded more too. And it was also coming from a higher place just before the panic set in. That's 13.8%. And then the Russell 2000 really underperforming, down over 31%. And we'll go through the transports too because they're down 29%. And let's check out the heat map because we can calculate this year to date as well. So here's today, here's year to date. You can see only Microsoft in the green here. And let's do sort by performance. And we can see Boeing in the lower right down 53%, Dow Inc. 46, and then Chevron and Exxon just a disaster too. And then we compare that with what's happened over the last 6 days since we had this rally bottom. And it's kind of the exact opposite. You look in the upper left, there's Boeing. It was the worst in the quarter. Now it's the best over the last 6 days. And then you see Chevron up there too, up 32.6%. And then in the lower right, you have Walmart and Walgreens just barely participating, but that's kind of what you expect out of the staples. So all in all, I think there's a little bit too much focus on is the bottom in right now. I think we got to get through this one or a few days at a time. We could head higher from here. We could head lower. Right now, the trajectory is up, and there's a lot of positive momentum, not only in terms of price, even though we're not seeing that much today, but also liquidity. Today felt like almost a normal trading day as opposed to the chaos that we've seen a few weeks ago.
Jared, I would agree with you. Almost normal indeed. Amazing that this is the lowest range day that we've seen in 5 weeks. We'll see if we can keep it in here for the next 50 minutes or so of trading. As Jared noted, the Fed has been quite involved, doling out all different types of medicine for this market. Let's bring in Brian Chung, who's been covering this for us. And Brian, the Fed opening up its 7th liquidity facility, supplying U.S. dollars abroad. You've also had the chance to talk with San Francisco Fed President Mary Daly today. What are the headlines?
Yeah, well, I mean, you guys were just talking about the paradigm shift in the narrative around whether or not the V-shaped recovery was going to be possible or whether or not we're really bracing for a recession and how large. And Mary Daly, again, the head of the San Francisco Fed, one of the 12 policymakers that rotate in along with the board of governors based out of Washington, D.C., had the chance to chat with her by phone at 1 p.m. today. And she was telling me that she does think we're already in a recession, but says the Federal Reserve still has a number of tools to fire back. Here's what she had to say.
These are unprecedented times, and they call for unprecedented action. We've already taken unprecedented action. And I wouldn't want to say we would never do something or we'll definitely do something, because we're dependent on the evolution of a virus, which we don't control other than to listen to our public health officials. So the main thing I want to convey to your listeners is the Federal Reserve is prepared to do whatever it takes within our powers to ensure that we're part of the solution.
It's from that conversation. She said you can't have millions of people that are losing their jobs and thousands of workers being furloughed without the economy tipping into a downturn. She said she expects economic conditions to get worse before they get better, and really emphasize that it's really fiscal policymakers and the health response that's going to tell us how we're going to get out of this recovery. And we need to understand that the Federal Reserve has really been framing a lot of its actions as trying to provide those liquidity backstops to make sure markets function properly. But that the other things that it's doing with quantitative easing and with zero-bound interest rates is really not to guide necessarily the economy right now. It's to set the economy up for a solid rebound so that you can get loans cheap and then re-spur economic activity as we get out of there. One important thing that she noted was that the Federal Reserve, she said, would keep interest rates accommodative until we achieve our dual mandate goals. Again, as a reminder, it's maximum employment and stable prices. But Mary Daly, the San Francisco Fed head, basically saying what other Federal Reserve presidents have said in the past, which is that the Fed still has tools left in its toolbox, but it wants others to step up to the plate as well.
It's amazing that not that long ago we were talking about the Fed being out of ammo, and that they continue to be able to deliver with unprecedented measures, and that they think that the toolbox is still, you know, maybe not full, but they still have devices in there to take out. Do you think that I mean, when you say whatever it takes, I mean, have they not even possibly thought of all the measures they might get to at this point? Is the playbook evolving for them as well?
Yeah, absolutely. And we have to remember that a lot of the liquidity facility tools some of them are old, some of them are new, some of them are old with new tricks. So one example is the money market liquidity facility, that they had something very similar in 2008, but this time around, they've expanded it to include muni debt, for example, as we've seen pressures in local municipality funding. But the Federal Reserve has really gotten quite creative. I think that's the word that we've been using on this show to describe the Fed's actions. And it has the authority under the Federal Reserve Act, Section 13.3, to create direct lending facilities to many types of market players. And to the degree that they've been using that authority to address corporate debt markets, for example, it's in a way that we have not seen before. Again, the playbook for the Federal Reserve is quite open. And I think all the concern that the Federal Reserve wouldn't have all of those tools was dispelled by the fact that it seems like every day now they're announcing something new, but also more importantly, the speed at which they're doing it. We have to keep in mind that this is unprecedented from the perspective that we've never seen our economy accelerate this fast into a recession. So the Federal Reserve has really initiated these tools, not only in a way that is unprecedented by the nature of the tools themselves, but at the speed by which they're launching them as well. And that's what Mary Daly was really saying, was that these are unprecedented tools, but I want to assure the American people, she said, that we actually know how to use them and that people should feel comfortable with how we're using our monetary policy, despite the fact that some people might say, I've never seen this before.
Another great interview from Brian Chung with Mary Daly. Thank you so much for the update. So, of course, we've been talking about the economic and the business disruptions due to the pandemic, as those have continued to mount around the world. But there, of course, is also the human impact. And let's check in with Anjali Khemlani right now for the very latest on the data surrounding COVID-19. Anjali.
Thanks, Jen. Yeah, today we saw a pretty stark increase in the numbers, with more than 820,000 cases globally, more than 40,000 deaths now worldwide, with Italy at 12,000. The U.S., meanwhile, does continue to lead with the number of cases, 174,000 globally. We know that 75,000 of those, so nearly a third, come from New York. And that is the place where everyone has a lot of focus right now, whether you're talking about supply supplies, metal equipment, as well as just generally the response, how the federal response is affecting at the local level. And we've heard stories from hospitals now, not just focusing on where the equipment will come from and how to keep themselves safe, but also determining who gets to use the equipment. So it's very real and really hitting the city right now. Stories that we heard from Italy and from China have now made their way onto our shores. Meanwhile, we know that New York City is preparing with the multiples of beds for a surge in the next couple of weeks. 2,500 at the Javits Center and 1,000 on that naval ship Comfort. Meanwhile, over in New Jersey, there are also concerns of a growing number of not just cases, but also deaths, more than 18,000 there in that state. And this is just the story that we're preparing to see, across the country in waves, essentially. Governor Cuomo earlier saying that that is what is likely to happen when New York surpasses its surge. It's going to pop up somewhere else, and the country needs to be prepared for that as well. We also know that a lot of companies are taking steps to mitigate what's going on. So Walmart just announced, right, that they're going to be taking the temperature of their workers in all stores, as well as some distribution centers. And this, of course, comes after we heard, from Amazon employees sharing their concerns yesterday, and that walkout that was staged. One of the other things that I've also been keeping my eye on is one of the testing in the testing sphere, which we know is the reason why we have these huge numbers. QIAGEN has come out with a new test, and that is going to help elevate the type of testing that we now have available. This test allows for not just doing sort of a yes or no, does someone have this virus, but also tells us what else they might have and what types of issues they have, what types of viruses they might have. So let's say someone has the flu plus the virus, they could be able to tell that now. So this is really elevating the ability and the capacity that we have in the market. But it's also important to remember that this doesn't mean that it's going to be available across the country. It's just wherever these instruments are. So this is just another addition to the market right now, Jen.
Anjali Kamlani with the very latest on the healthcare side of the story. Want to bring in Dan Roberts right now. So Dan, Anjali was just talking about some of the measures that Walmart is taking with the temperature checks there. And of course, we know Walmart is also hiring as they're seeing a lot of demand come in here. But on the retail side, we've also had a lot of furloughs. And now we're also seeing sports media companies getting hit as well with furloughs. What are the details there that you're seeing?
Yeah, and it makes sense, Jen, because there are no sports happening right now. And that is affecting not just the leagues and the teams, but merchandise companies that sell gear. I mean, everyone with any connection to sports, and media, of course, being hit as well, because there aren't new sports to write about. So how much content can you really have other than updates about the leagues being delayed due to coronavirus? Now, yesterday, in terms of retail, we saw that Macy's is furloughing nearly all of its 125,000 employees since all their stores are closed. And of course, that includes Bloomingdale's. That is a huge number there, and that is unfortunate. In the sports world, a number of companies are now beginning to do furloughs. So New Era, which is the Caps company, and that is based in Buffalo, New York, they are furloughing about 70% of their workers. And that, to me, suggests that, initially there have been some optimism that even though sports aren't happening, maybe sports fans will continue to order and buy merchandise online. And that does not appear to be the case. You kind of need sports going on for people to be buying sports gear. We had the chairman of Fanatics on yesterday, of course, Michael Rubin, and he said the same, that they're now seeing a huge drop in sales in e-commerce. So that suggests people are not buying sports gear right now. Now, in terms of media, yesterday, Maven, which is the parent company of Sports Illustrated and also of The Street, that finance site, that company, Maven, laid off 9% of its workers, which ended up being about 35 people. And a number of those people were editorial staff at Sports Illustrated. So that is unfortunate. And then the latest today is DAZN, which is an interesting company we've covered a lot, DAZN. That is the European streaming company that has tried to be the Netflix of sports and is paid up for a number of live sports rights. So DAZN streams UFC and boxing here in the US, and then outside the US has rights to stream MLB and even NFL. That company made news twice today. First of all, likely about to furlough a number of its workers, which the CEO disclosed in a letter to employees. So that is about to happen. But also, according to Sports Business Journal, DAZN is the first media property broadcaster to notify the sports leagues that it does not plan to pay for the rights to games that aren't going to happen. And that is really interesting because in theory, that seems fair. because DAZN has paid up for rights and these games aren't going to get played. But that is just not how these contracts usually work. That's not how these deals are structured. You kind of agree to pay, and it's not about whether games happen or get canceled. So it's an interesting gambit, and you have to wonder whether certain broadcasters will follow suit. DAZN telling leagues, well, sorry that coronavirus happened, but we don't want to be liable for payment for these games if the games aren't going to happen.
Right. It'll be interesting to see if this is the tip of the iceberg in the rights area. Dan Roberts, I'm sure you'll be all over that story for us. Coming up next, we've got much more. It's our call of the day. We're going to be talking about why Wells Fargo thinks that Dollar General is a COVID-19 play here, why you might want to own it. We're back in 2 minutes. Some people are nervous to say it, that we're in a recession. Miles Udland is not. He said earlier, we're in it. Miles, other people say probably, maybe, but no, not this time. It definitely seems to be happening. And Wells Fargo is out with a note upgrading Dollar General to overweight on numerous tailwinds, chief among them that if you're going to be in a sustained recession, they say, Dollar General is the place to be. And this all plays into actually the stimulus and where the stimulus dollars are going, right?
Yeah, I mean, the sustained recession is actually like a bonus tailwind. Wells Fargo seems to be, fired up enough on this stock to upgrade it just based on how much of a benefit the likely Dollar General shopper is going to see from the checks that are supposed to be sent out by the end of April. So they compare kind of what the stimulus measures are going to be for a typical household compared to what we saw during, the payroll tax cut, 2011, emergency spending bills back in 2008 and 2009. This is basically double the magnitude in terms of households getting direct benefits, direct savings, in this case, a direct infusion of cash relative to anything else we've seen over the last 15 years. And I think that, the fact that this isn't just, framed as a payroll tax cut or some benefit that shows up over time. Remember back in 2014, 15, there was supposed to be this huge consumer benefit because everyone was saving at the pump. I mean, I am aware that these checks, and I believe these checks are not enough. I mean, this is not going to be enough to hold people over. But it is going to be actual cash that shows up or an actual check that shows up at the door. And, low marginal or high marginal propensity to consume consumers, folks who make less money, this is a higher percentage of their overall income base. And for a store that is a hard discount, not a hard discounter, but a discount store like Dollar General, Wells and I imagine other analysts on the street are going to see this as a huge benefit for these companies that are trying to deliver the most value to the most people.
And while they do like a number of the companies in the space, I thought one of the things that was interesting about why they like Dollar General is actually the mix at DG. 80% of the mix there is consumables. And if you're going to be going out, you're buying not luxury items at the store, you're buying the consumable ones. Dollar Tree is about a 60%, Walmart's about 50%. So they really think that the mix leads to them having a very strong position here. Coming up next, we've got Starry CEO on how startups and also the internet are weathering the coronavirus outbreak and the work from home phenomenon that we are all experiencing. We'll be right back. With tens of millions of workers working from home these days, we've seen a big shift in what's happening with the internet in this country, the times, the demand that's being placed on it. I want to bring in right now Starry's CEO, Chet Kanodia. And Starry is a next generation internet service provider. You provide the connectivity wirelessly through antennas. You have expertise in this area though overall, and I kind of want to start with the big question, which is, so far we really haven't seen that much disruption, no major outages. Do you think we've just been lucky? Are you worried that we're going to have difficulty with the internet, or are you confident that we have this under control?
I think for now it appears that we have it all under control, but the trend is on higher and higher consumption. And in particular as people work from home, your consumption on the uplink goes much, much higher than you're normally used to. So networks that are built for symmetry or can control up and down speeds themselves or capacity are in really good position to be able to serve customers better than traditional coax networks, cable networks, which are biased downstream versus upstream. So we think as the trend continues, as we've seen our traffic triple during the daytime on uplink, mainly because people are video chats or using collaboration tools like Slack and things like that, where really the bandwidth consumption goes up pretty dramatically. But having said that, I think still we're nowhere close to, even on coax networks, I think we've got a lot of headroom to be able to continue to drive utilization. I think the bigger challenge is as you have network outages, fiber cuts, other
What's up, Ryan?
events, how do you deploy a workforce fast enough in difficult circumstances? I think
Hey,
that's
bro,
where
take
you're
a
going to
look
have
at
some of the bigger
Beijing stocks. What's
challenges
the
for
acronym
organizations,
for it? I'll look at
in
it.
particular
Look it up.
wireline networks, whose maintenance is way more dramatic than a typical wireless network needs to be.
And then, Chet, I think a big conversation right now, or a conversation that was being had before coronavirus, is 5G and the deployment of a new kind of network. And I guess as you see the landscape right now, it seems like every business is just scrambling to stay alive rather than worry about the next gen projects. When you look at 5G and the future network setups that everyone was so hot on late 2019, does this kind of scudder some of those plans?
I think kind of the opposite, because what we've proven, and we're probably we're kind of the only early stage company in this sector, although, for a startup, we have 700 people, so it's a little awkward to call it a startup still. But what we've proven is that we've gone in 18 months from 0 to about 2 million homes passing coverage wise. And this year we will hit about 8.5, 9 million homes coverage. So I think the promise of 5G and providing redundancy for these wireline networks is
Ryan, what's the acronym for
so
it?
I suspect, yes, clearly these are extraordinary times, but as the focus shifts towards building resiliency in society and capabilities like work from home, telemedicine, whatever that happens to be, I think a huge emphasis is going to come towards how do we build that resiliency without having to spend, hundreds of billions of dollars, which is what it's going to take to do with fiber, versus doing it with, billions of dollars, which is what wireless technologies represent.
Hey, Chet, speaking of resiliency, I know you are a tenured sort of veteran serial entrepreneur. Prior to launching Starry, you were at Aereo and Navic Networks. When you think about the startup ecosystem right now, how do you anticipate that the winners and losers will be made, especially as you think about the funding pipeline here?
Great question. I don't think anybody knows how this is going to shake out because I think it's going to come down to, I think, companies that are consumer companies that have robust product demand, they're going to do differently than you have SaaS companies or companies that don't have, people are going to shut down for 6, 8 weeks, 10, 12, 6 months in terms of purchase cycles. And we, ironic as it is, or perhaps not, we had our biggest quarter ever in terms of sales and deployment. So from our perspective, we look at this and saying this is driving the point of what we are trying to do home. But early stage companies are very sensitive to cash on hand. They're very sensitive to next round of financing. And it's going to come down to, and I think that's a concern we have too, what's the status of capital markets as things begin to ease up? Will capital be available? We think, for companies like ours, they should be, just because the product market fit and demand is there. But ultimately, it's going to be a function of whether the capital markets are willing to invest in early stage companies. Having said that, I think, look, it's people are going to look at good companies and they're going to invest in good companies. Who knows where valuations will be? That may change. In particular, more speculative things where, co-working or other things like that, where people are banking on societal shifts to happen, may not go their way. But in certain other cases where it's staple, and in our case, it's a utility, I think, it's just getting proven out that broadband is right up there with electricity and running water for people to function. And I think that, and if this trend continues, which I think it will, where companies will realize that a good portion of the workforce can be equally effective working from home, might have a ripple effect on real estate, might have a ripple effect on lots of different things that we're looking at.
Certainly an essential utility for all of us working at home. So we could talk with you today. Chet Kanogia is the CEO of Starry. Thank you so much. We're going to keep talking about what's happening with the internet and the surging traffic. President Trump holding a call with internet service providers and phone providers today. We're going to get some details from Dan Howley on the other side of this break.
I just got some Boeing stocks. That's why I closed out my other screen, just so I could enter into the trade. Entry price, they got me at 150.31. See what happens here. Might wait for. I'm already in profit, which is a good thing. Let's see what happens. I want to get a good entry in this.
Netflix in Europe, YouTube internationally, they're slowing down bit rates. So basically reducing the quality of video streams to consumers to try to free up some of the internet.
I just got a decent entry in Boeing.
Is just a big pipe that data goes
I'm gonna
through.
hold on to
So
this for a
the more
little bit.
people trying to
See what
pull from that,
happens.
the less there is for everybody to get. So when they're slowing down that bit rate, they're trying to open up more pipe for more people to stay online. So we're seeing additionally from services like Microsoft's Xbox, for instance, when game developers offer downloads for players, they're saying, look, do this at off-peak hours for a set amount of time for a set of days, so that people don't pull down more data than they might otherwise use. We're seeing that from other services like Valve. They're doing that with their Steam platform. So overall, it looks like we do have the headroom going on right now, but there's some reporting saying that
I think I got.
some places
I was
are
thinking
seeing a
about.
slowdown. I personally have Forex. I have a 500 megabit a second.
I was thinking about
Connection, so it's just
I don't know what I was gonna do here.
Really need, but I
No,
wanted it, so I got it.
but
I haven't seen any issues.
I think this
my
start.
side.
I might
I'm
hold
still
this
getting
for
the
a
same,
bit.
speeds that I would normally get. But
I
some
might
users
hold
are
this because
complaining that they are running into issues.
I did read something earlier before I.
And what kind of role has the government had in this? I know President
This
Trump's holding a
and
call with internet service providers. They've also offered up some more spectrum, I guess, for different cell carriers. So I guess the level of involvement that we're seeing from the government, is that them realizing that this is a
I gotta
utility,
find
as our
it.
last
It's
guest
somewhere
said, that
in
we all
here.
need, or that we are in an area
There it
where
is.
we need to be
American
careful
Airlines expect to
not to
receive
push this too
12
hard.
billion from the 2
Well,
trillion.
using the word utility
Pass
might
along. The
send
government
some
expects
of
to
the
receive.
carriers into a flutter, just because
These funds are
if they start
being
calling it that, then
distributed.
it's going to have a lot more regulation behind it. But I think for something like what the government's doing right now, they've kind of said, look, people are going to be working at home. You can shut them off. So there are some companies that are saying, okay, 60-day grace period. If you go past your bill, we won't shut you down. Some companies like Cox and Comcast are offering lower tiers, faster speeds. So if you're an entry-level user on one of the more affordable plans, you'll start to get 25 megabits per second in speed, or in some cases 50 megabits per second. And that should allow you to do video chatting to stay online with your work. So I think that's something that the government was pushing, and other carriers are following suit. AT&T, T-Mobile, Verizon's making similar moves, our parent company, as well as Comcast, Cox, Charter, and the whole like. So I think they're going to probably come out of this meeting with some kind of report saying, look, this is how much we're seeing effects on our impact on our networks. But I think that overall in the U.S., since we had such a buildup for 5G and 4G, and we've seen a lot of fiber optic cables laid, we're not going to run into as many issues as Europe might have.
All right, Dan Howley, checking out the internet first, making sure it all still works, and it seems to be okay. Thanks so much. It's tough enough if you're just a regular legacy company trying to do business in this new environment. But what if you are a startup and in Silicon Valley, in venture capital? Melody Hom has been digging into this story because it certainly presents a lot of different challenges out there for entrepreneurs. I was talking to somebody who just went through a round of funding and is actually pretty happy because they think they've got the capital now and other people are out in the funding market and aren't going to be able to compete. So it seems like there are some winners and losers here in Silicon Valley.
Hey Ryan, are you still there? Which Beijing stock are you referring to?
Right, Jen?
I
That doesn't mean that
I
something
never
will
knew
last
much
them more
about the
than
Beijing
6
stocks.
months,
I don't know what you're talking
especially if
about.
perhaps they had anticipated, okay, I can go off of this for a couple years and perhaps plan for an IPO. I think the future exit strategy and trajectory certainly looking more murkier now. I've spoken with several VCs as well as entrepreneurs, so people on both sides of the table. And from the VC perspective, it's fascinating to hear that this is actually a huge investment opportunity for them, especially for sophisticated LPs, because they can actually present less than favorable term sheets to a lot of these entrepreneurs. And some might call this vulture investing, which we have heard a lot, over the last 20 years, post-dot-com bubble. We've seen more and more of these kinds of opportunities pop up, although over the last couple of years, because there were so many top-tier premium VCs vying for hot startups, honestly, entrepreneurs had the right hand, right? They had the upper hand to really negotiate these deals. That sort of pyramid has inverted, according to a lot of my conversations. But I do have to say, this pandemic was a good cover for many startups that had unhealthy balance sheets going into this. And VCs within the biotech and digital heavy space with those kinds of portfolios are really capitalizing on the opportunity to inform and advise their portfolio companies to pivot. Take, for example, Everlywell, which is offering those at-home diagnostic kits. We had the CEO on last week, and they previously were just doing tests for diabetes, STIs, and now we're seeing they're completely going 180, and most of their resources are now dedicated to the coronavirus. So companies that have the flexibility to make those sorts of slight shifts in their business model, they will be the ultimate winners in this case. I have to share a comment that a VC told me yesterday. He said, now we won't see every company getting funded. Investors are willing to not re-up, even if it seems like a decent opportunity, and they will frankly let them die. Insiders aren't going to support them to get new capital because they can't even meet new investors in person, even if they wanted to. It's a really tricky period if you're a company with less than 12 months of runway and you're not a significant outperformer in this current period of time. It's very likely that by 2021, we will see most of these companies in that middle space die. And even to the Starry CEO's point earlier, I think it's really astute to say the likes of WeWork, which we had already been critical of over this period of time. I think there will be new questions posited saying, hey, are these sorts of behaviors that we had shown prior to the pandemic, will we revert back to that? I think the answer can be no in a lot of those situations. And a lot of those quote unquote utilities and nice to haves will unfortunately be the first things to go when entrepreneurs are thinking about how to build out their business.
Right, the behavioral change that we're all witnessing and being a part of can affect a lot of business plans pretty hard. Melody Hom with the story out of California. Coming up, we've got much more. Just watching the markets right now. We're off the low. Mark Lehman, he's the president. He's going to tell us what are the best sectors to own once the worst of coronavirus is behind us.
What's up? Tim Sykes, millionaire mentor and trader here in this beautiful Bali villa. I'm from a small town in Connecticut. I started with a few $1,000s, but I've made millions of dollars trading stocks all over the world. I actually detail it in my best-selling book here, An American Hedge Fund, which you can buy on Amazon for $20, or you can click the link below and get it free. And in this book, I talk about my big gains, my big losses, everything. Specifically, chapter 6, I show you how I made $100,000 in one day by focusing on the best stocks, not the stuff that you hear about on CNBC or Bloomberg or in the Wall Street Journal. And I want to teach you because, you know, the stock market and finance and even just trying to get rich can be a very complicated process. And even though I've made millions of dollars while trading and traveling everywhere, and I'm very grateful for it all, it can be done quicker. It can be done with less heartache, with less stress, with less big losses. And I hope that this book can help you. I want to give it to you for free so that you have no excuse. Click the link below, enjoy, and get here too.
Welcome back to Yahoo Finance Live. I'm Jen Rogers, checking out the markets right now. The Dow's off 1.5%, on track for its worst first quarter ever. I want to bring in JMP Securities President Mark Lehman right now to talk a little bit about what we're seeing in the markets, but kind of get ahead of what's happening today. And I know we don't know the timeline for what's going to happen with COVID-19. We don't know how long this is going to last. But on the other side of that, as you're looking for opportunity, what are the sectors that you think are the best plays to be contemplating putting money to work in?
Yeah, once this hysteria, as well as the fear that this is not going to end, passes, and it will pass, I think investors are going to, pay most attention to the healthcare and tech sectors, kind of the growthiest parts of our economy as we start to come out of this. I think you're going to see, as I've been saying to friends and colleagues, innovation hasn't stopped because COVID hit the shores of the United States. And I think we're seeing lots of things happening on the healthcare side, of which I think will benefit from on the COVID side, as well as other disease indications, obviously. And on the tech side, we're learning that even with these unbelievable, unprecedented times, most of us, if we're in a high-tech, capable part of the economy, we're working, albeit with a little bit of a difference in how we're working, but we're still working. And that tells you a lot about what our economy and what drives the economy. Unfortunately, for some of the consumer focus and some of the entertainment and some of the other things that are doing much worse, that's probably slower to come back. And I'd be focused on the tech and healthcare.
Mark, do you think that the market is going to be way ahead of the real economy in the sense that investors, I mean, it kind of almost feels like investors now are growing comfortable with the situation on the ground. But I think for most Americans out there, reality is only starting to set in that this is going to be 1, 2, maybe 3 months of essentially an economic freeze, which for a lot of folks means they're not going to be working or having income.
Listen, the market always anticipates. The market started to correct about 5 weeks ago in anticipation when the numbers, frankly, were not bad 5 weeks ago. And obviously, whether it's New York or some of the other clusters that we're starting to see, numbers will accelerate. And we're getting some better track on when we think those disease peak numbers are going to come out of different geographies. I think the market will anticipate when things will come out on the other side. And I'm not predicting anytime soon that we're going to see droves of people going back to work. The question to ask, I think, investors and people who want to see when we're going to get back to normal, which is when will most people feel comfortable being in a room of 10 people, 100 people, 1,000 people, or 10,000 people? So we're talking about a workspace for 10, a restaurant for 100, an airport for 1,000, and maybe a concert or a sporting event for 10,000. To me, those are relevant questions that should be asked. And then we ask, what is the run rate for the subsequent 12 months of the S&P, and put a multiple on that. and put a market multiple on that and see what you feel comfortable with. My guess is we've already tested the lows. The government's going to throw everything they can at this to make sure that spigot stays on. And again, the highs are something we don't even want to contemplate. I like the VIX going down here. It tells me that even if the market's down abruptly, like it is a little bit at the close of this quarter today, the VIX index is stabilized a little bit, albeit at a record high level. That makes me feel positive that we're getting closer to where investors are feeling more comfortable that the past is the worst of the market. And then going forward, we're going to have this quiet grind higher. And I think that's what we're going to see.
Hey, Mark, usually when we get to talk to you, we talk about IPOs. You're out there in San Francisco, a big tech center. When do you think we're going to be seeing some IPOs come out?
I think you'll see some on the healthcare side sooner rather than later, because those dollars that are put into the healthcare world are really for some innovation in the oncology world or other disease areas that, frankly, the COVID outbreak is not as important as long as they can enroll their patients. We were prepared at JMP to have about a dozen of our tech deals in our backlog, which is a big backlog for our firm. Last year, we were on companies that are benefiting like Peloton and Zoom, but this year we're ready to have about a dozen IPOs. I wouldn't expect any activity there to the fall. I would think, and many people said, you better get your IPO done before the election because there won't be any. I don't think that is true. I think you're going to see some Labor Day on. There's some great companies that are going to go public. The other question we have, of course, is we kept hearing about this direct listing. Boy, I haven't heard that in a long time, and I don't expect that anytime soon.
JMP Securities President Mark Lehman, great to get a chance to talk with you. Thanks so much. We're coming up with the closing bell here, just a few minutes away. Again, this is the end of the month, end of the quarter, and we will be cracking all the numbers here to tell you what it ends up with. But it looks like it's going to be the worst quarter for the first quarter for the Dow in its history. We're back in 2 minutes.
All right, I just bought some Disney stocks and Boeing stocks. I don't have any Carnival stocks. I did, but I don't have it anymore. If I can catch this Carnival at $11 again, I might hop into it.
Welcome back to Yahoo Finance Live. I'm Jennifer Rogers, and we have just about 5 minutes left in this session. NASDAQ here off less than 1%. It's the best performer of major indices. The Russell is off almost 2%, and we've been talking about the VIX a lot. The fear index, remember, was up above 80. Well, we're now bringing that down below 55, looking at the VIX right there. You can see down at 53.50 right now. That is a welcome sign to many people. Sector-wise, this has kind of been a choppy day. For a lot of the day, we actually had a number of sectors in the green. The main one that's going to be able to hold on to it, looks like through the close, is XLE. That is energy. But beware, you don't want to look at that on a quarterly basis because that's a really ugly chart. Of course, energy and oil, look at that. I mean, a 51% have really been some of the washout names that we have seen here this quarter. We are going to go. We got the bell on the other side of this break with energy, the only sector holding on to a green
I just
arrow.
I got a buy limit for
XLC
$10.95
well. We'll
for
be
this
back right
Carnival
after
Cruise
this.
Line stock. If it hits it, then I'm gonna go to 10. I'm gonna get a couple shares of Carnival Cruise Line. Let's see what happens. All right, everybody. I'm take a break from the stream now. Probably play some video games now to enjoy the rest of my day. I might stream some video games. I don't know yet. We'll see. I hope you guys enjoyed the stream, though. If so, please give this video a thumbs up. If you got some questions, drop it down in the comments. I'll try my best to answer the best I can. Or you can always join my stream when I stream this possibly tomorrow, and I can answer some of your questions. Other than that, hope you guys enjoy the stream and have a wonderful day, rest of the day. Stock market closes at 4 o'clock. So that's why I hopped in a couple of trades before it closes, because sometimes the price drops. So I hopped in a couple of them. But as far as Forex market open 24/7, it doesn't close until Friday. So I'll still be doing some trading with the Forex market. But see you guys later. Peace.